meeting of the year. Steve Sedgwick joining us live now from London with a preview on what to expect. Morning, Steve.
Good morning, Dan. Can I start off by saying how much I enjoyed that last interview of yours? I thought it was absolutely stimulating telly. Fantastic interview with the gentleman from the Middle East. Right, let me move on. Bank of England is expected to cut rates as well. It's going to be 25 basis points, we believe, as well. Maybe the most dovish member of the MPC. There's 9 of them will go for a 50 basis points. We expect Catherine Mann might be the standout, voting for no change, but it's going to be like an 8-1 vote, 7-2 kind of vote. That's what everyone expects. But it's what about the projections going forward? Because growth estimates could be downgraded, unemployment estimates could be ticked up a little bit, and inflation estimates. Is inflation set to pick up again in the UK and remain sticky? And as such, what does that mean for the path of future interest rates? As I say, the market thoroughly believes it knows what's going to happen today. 25 basis points of cut, a quarter percentage point cut. But thereafter, are we going to have 2 more this year, or are we going to have 3 more this year? Because it is going to be fascinating and maybe even a little bit political when I speak to Andrew Bailey, because the fact is the government had its budget in October, and since then there have been real concerns about the strategy of the government for growth. And the fact is those downgraded growth estimates may be a bit of a blow to Rachel Reeves, and is it going to force her for more dramatic action in the UK economy? Plus the fact, of course, they're keeping an eye on what you got on the screen there, the gilt yields. Look at the 30-year gilt yield. It did get up to 5.38 at its peak this year as well, and that is the highest level since a financial crisis that some of our viewers were around for in 2008 as well. So pressure on the gilt market. The pound has been under a little bit of pressure, but although that's in common what we've seen elsewhere as the dollar has gone up this year as well. But what about those external factors? How's he going to deal with the concern about bond markets on a global basis and the tumult, the volatility created by Donald Trump? There is a lot to speak to Andrew Bailey about. I shall be speaking to the aforementioned Andrew Bailey, and I'll do that and bring that to our viewers at 4 p.m. GMT as well. So a couple of hours ahead in terms of the Middle East time as well there. But Andrew Bailey at 1600 GMT, and I'll be asking him all those questions, hopefully. Daniel, back to you.
Steve, really appreciate it. Thanks so much for your nice words, and looking forward to that interview as well. Okay, let's get more analysis on this and bring in Carsten Brzeski. He's the global head of macro at ING. Carsten, Steve was just talking about these UK tax hikes potentially choking UK growth. The BOE has no other option than to cut rates here, right?
No, indeed. I think the 25 basis point is a done deal for today. Well, when I look at UK PMIs, you also see a slowing down of economic activity in the UK. So we expect the Bank of England to continue cutting rates in the course of this year by an additional 3 rate cuts over the spring and summer.
So that's May, August and November, right? What is that based on? And how much of the tax hikes actually have to do with that forward expectation on rates?
Well, I think this is mainly based on the fact that the UK economy will not really gain momentum. Instead, it will also be dragged down by what's going on in Europe, also what's going on with trade tensions coming out of the US. So we see a bit of a central bank divergence on with the Fed hardly cutting any more this year, while in Europe, Bank of England, ECB will continue to cut aggressively to support growth.
Talk to me a little bit more about the ECB here, and is a March cut locked in, or is there a chance that the board actually holds back here, waiting to assess the overall impact of these potential Trump tariffs and trade measures?
It's locked in all honesty. And why is that? Because the ECB is still slightly too optimistic when it comes to growth. And with March, we will get another round of staff projections by the ECB. They will show another downward revision of the ECB's own growth forecast. And this will be enough to really cut rates by 25 basis points in March. Then we are at a deposit rate of 250, which I would say is probably the upper bound of the range for any neutral interest rate. And then if growth continues to disappoint, if inflation starts to come down, there's room for more rate cuts by the ECB to bring rates at least down to 2% by the summer.
I've also spoken with other analysts over the last few weeks who say the ECB is potentially sleepwalking into a stagflation scenario. What's your view?
Well, correct. It's a minor stagflationary scenario, but with everything going on, so we are stuck in this stagnation in Europe. If we assume that we're going to get tariffs from the U.S. on the European Union in April, somewhere in the second quarter. So this will also then lower growth, will add to inflationary pressure if the EU starts with some retaliation measures. So indeed, there will be slightly higher inflation coming from a trade war, lower growth, and this is stagflationary. Not a big deal, and in the end, I think the ECB will always opt to support growth. Why is that? Because they are forced in this situation with so much political instability and uncertainty in Europe. It is, again, the ECB which will have to do the heavy lifting.
Indeed. So we're looking out to see whether or not rising inflation expectations derail some of the ECB's forward planning here. But Carsten, what is the bank's current thinking on where Trump might actually target these tariffs in Europe?
Yeah, I think, well, for us, not for the ECB, I think the ECB is very silent on that one. For us, we expect Trump to actually go all in across the board, so not going for specific sectors, but start really with a 10%, 20% tariff threat on the European Union. Then the European Union might want to answer. I don't think that the European Union will answer with across-the-board tariffs, but will try to then target certain sectors like they did 8 years ago. Back then it was Jack Daniels, Harley Davidson. But in my view, I think this Trump administration will be less transactional than Europe thinks. So Europe is clearly in a weaker negotiation position here.
And does Europe have the policy wherewithal and the policy leverage to be able to push back in the same way that China has, for example, on the United States? How would you characterize Europe's overall negotiation position right now?
Well, it's a split one. When it purely comes to trade and also imposing tariffs on the U.S., this is the responsibility of the European Commission. I think there Europe is relatively well prepared. When it comes to any deal making, for example, promising the United States to purchase more of this and that, LNG, military equipment, then it's not the European Commission, but then it's up to the individual member states. And here we never stand in unity. So, and I think also instead of focusing just on what's coming out of the Oval Office, Europe should actually do its own homework and start strengthening the domestic economy. And we all know what to do here. This is investing more in the domestic European economy. This is implementing reforms. And I think Europe would be much better advised to do its own homework, to strengthen its own economy, rather than just waiting for anything coming out of DC and reacting to that.
Carsten, just before I let you go, what's one thing we need to watch, particularly across risk assets, for example, as we see this BOE decision coming through, and of course, as we get more clarity on what these tariffs are going to look like for Europe?
Well, it's clear, the risky part is, will we get the tariffs on Europe? That is something we need to really watch carefully, what is coming out of the White House. And the other thing is really how are central banks in Europe, BOE, ECB, also assessing the situation. When is the moment coming that they start to come out with a clear view of what tariffs would mean for the UK or the European economy?
Indeed. All right, Carsten, we'll leave it there. Really appreciate your analysis as always. Enjoy your day ahead, sir. That is Carsten Brzeski there of ING. Let's get you a quick look at how Europe is set to open the trading day as well. Speaking of the BOE, as we track into that really critical decision today, we are looking at markets trending higher, called up by 56 points for the FTSE 100, the Paris CAC Xetra DAX and Spanish IBEX also expected to open stronger. You can see the DAX up by around 65. Thanks so much for your company today. I'm Dan Murphy here in Abu Dhabi. Stay with us right here on CNBC. We have more news, more analysis coming your way with Squawk Europe up next. Enjoy your trading day ahead.
started investing a little money for my dad, and I got bitten by the bug. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
If you have 1,200 people dancing and you're capturing the heat from those people dancing, you can heat about 70 houses. So it's quite significant.
This venue in Glasgow uses the same techniques as geothermal energy, a low-carbon technology capitalizing on the Earth's energy stored underground.
The body heat system is a heating and cooling system that captures heat from a venue here, SWG3, cools down the space, keeps everyone the right temperature by taking that body heat out through some heat pumps in a plant room and then into an array of boreholes, charging up those boreholes as a big thermal battery in the ground. And then during the week, during the day, when the venue needs heating, we pull the heat back out through the heat pumps and back into the venue.
It's like, come here and dance, do what you do every Friday, Saturday night, and you're playing your part.
Sponsored by...
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC.
Oh, what busy days. Look, Cameron's having a quick slurp of tea before we get going. Good morning. This is Squawk Box. I'm Steve Sedgwick with the tea-fueled Karen Show. And these are your headlines. Qualcomm and ARM both posted quarterly beats after the bell, but the stock slide as AI capex concerns dominate. Nissan reportedly suspending merger talks with Honda as shareholder scrutiny looks to scupper the $58 billion deal.
I'm just going to go with it now. SocGen's fourth quarter profits double amid a rebound in its retail banking unit, with full-year revenue topping targets and the lender pledging payouts at the top end of expectations. The French government survives 2 no-confidence votes, paving the way for Prime Minister François Bayrou to pass the country's long overdue budget.
And it's rate day at the Bank of England, widely expected pretty much to deliver a quarter-point rate cut, the third of the cycle, with markets also eyeing a potential downgrade to growth forecasts. Please join us later on for my interview with the Governor, Andrew Bailey, 1600 GMT. Well, we've got CEOs waiting in the wings, but you've got to own your cup of tea in the morning,
Exactly.
haven't you?
I can't believe you cheated and went for a proper tea. We do this thing together every morning.
Oh, I know,
we have
I
a
know,
green
I know,
tea.
I know.
We have a
We're
little
such
yogurt.
boring creatures of habit. The viewers don't really want to know this. They want to know about ARM, but I'll tell them very briefly. I normally have 3 cups of normal tea, then I go to a revolting green tea, which you make me have every day as my
And
work
I
wife.
have 3 cups of green tea.
But I'm actually going for another cup of, dare I say it, PG Tips or another bog standard tea. Shares in ARM and Qualcomm.
Yes, so let's talk about some of the fire in the markets around AI. Now, shares in ARM and Qualcomm both fell in extended trade, with the chip stocks underwhelming investors with disappointing guidance and prompting concerns of a slowdown in AI spending. Qualcomm beat on the top and bottom line in its first quarter, but issued weaker than expected estimates for its key patent licensing business and chip design. Topped third quarter expectations, but warned it will not meet the higher end of its full-year forecast. Qualcomm CEO Cristiano Amon told CNBC the recent developments at DeepSeek provide a tailwind.
Within days of the DeepSeek announcement, people were showing it running on Snapdragon phones, showing on Snapdragon PCs. As a matter of fact, Microsoft announced that DeepSeek R1 is running on Copilot Plus PC, starting with Snapdragon.
And we'll have more from the chip sector later today when our US colleagues speak to ARM CEO Rene Haas. That is the first on CNBC interview coming up at 1500 GMT. So to me, what we're seeing in the after hours, is it a story where the investors simply don't care about smartphones? I mean, what you saw in the numbers was that both companies did well in the latest quarter thanks to their smartphone exposure. But we know the market has now shifted towards data centers and cloud. I mean, that is pretty much the end game, all about AI infrastructure at this stage. And I wonder whether it's the positioning in these areas that is holding both of these companies back now. In terms of what you're seeing from Qualcomm, it has been very dominant in that mobile market, but also having to diversify to autos, to PCs. And as we talk about the diversification, it is part of this symbolic shift that you're seeing in AI, where existing moats that used to be there for a lot of businesses are coming down. Other big players that used to be in their lane are now stretching into other business models. So, for instance, Qualcomm supplied for many years to Apple certain chips. Apple, after a certain period of time down the track, will go its own way producing those chips. So, again, you're seeing this change in business models, and these companies are having to adapt. So I think that's what you're seeing, some uncertainty in the earnings. But the reality is there's one big feature here that the market could be missing, and that is the edge. We've been talking about the edge for years at big tech events. It sounds a little bit boring, but basically it means that AI is on your device. It's not in the cloud somewhere, or that big infrastructure that Microsoft, Amazon, and NVIDIA are building out. This is on your device. So it means you're not handing information over to a cloud to process. So these are two companies at the forefront of AI on device.
Okay, well, let's park that for now, and we'll move on to ING as well, because I've got numbers hitting the wires from ING. The net profit, 1.15 billion euros in the fourth quarter. One might argue that is a tad below the company compiled consensus, which was 1.22 billion. There's the performance of the share. The one-year performance is very, very solid. If you're looking at the valuation, it's not at the bottom of the European roster, but it's towards the top. 0.9 price to book, trades on 8 times forward as well. Cash divvy proposed of 0.71 euros per share. Total income in 2025, it's expected to be roughly at the same level as 2024. Total expenses up to 12.5 to 12.7 billion euros. And Karen, you and I have beautifully crossed swords in a very noble and gentle way regarding capital spend of European banks and where they are focusing as well. And I think we've had a couple of fascinating conversations about HSBC, who are redirecting capital and M&A away from Europe and into Asia, for instance. And then we had a terrific conversation yesterday with one of the most powerful people in global banking, and that's Anna Botín. And she was talking about the M&A situation, the growth situation, the not necessarily needing to sell anything in order to get involved in the M&A activity. And I thought that was a fascinating answer to your question.
Yeah, I mean, we spoke to the CEO of ING when we were in Davos, and the comments from here was that we need more harmonization in Europe around regulation. So I think for some of these big banks that are looking to be more active on the M&A front, the change in the landscape around regulation still matters. CMU, banking union, I mean, we've spoken about it a lot. Until that green light is delivered for the banking sector, I think it's going to hold some of these banks back. They're going to be a bit more cautious. But after what Andrea Orcel has done in the banking system, I think most are now being spurred on to think about plans, to think about potential prey and trying to ensure they have the capital provision so they can unleash some of that firepower if need be.
Just to finish the roster of banks we're talking about, Societe Generale, full year net income surged 69%. Isn't that extraordinary? 69%. Yeah, talk about SocGen, net income. Let's move on SocGen rather than Siemens. SocGen full year net income surged 69% to 4.2 billion euros, whilst annual revenue growth exceeded the bank's target at 6.7%. The French lender said it will target revenue growth of more than 3% this year and cut costs by more than 1%. Right, let's get to Siemens Healthineers. There's been a minor technical snafu in the background, but I'm delighted to say we have the CEO waiting in the wings.
I might just get to some numbers
Bernd
first.
Montag, who is the CEO, yes.
Yeah, let me just do some numbers first up so we can just set the scene for this. First quarter revenue of 5.48 billion versus consensus of 5.37 billion. So a beat on the revenue line. The adjusted basic EPS of 0.51 versus consensus of 0.47. So also a beat on that line. On the comparable revenue growth of 5.7%, consensus was 3.6. So we do have a beat on these numbers, and the company also backing its 2025 view. On that note, let's get to Bernd Montag, who is the CEO of Siemens Healthineers. Bernd, thank you so much for joining us. Just digging into that revenue picture a little bit further, US revenue increased 16%, whereas China declined 6%, and this is blamed on continued delays in customer orders. Just explain the two markets to us, how they're faring.
So we are very happy with the momentum in the United States. We see a lot of interest in our product, in our innovation pipeline, and especially also in us as a long-term partner for the big institutions. While in China, as expected when we went into our fiscal year, we still see a little bit of muted demand here because of the uncertainty of customers around the nationwide anti-corruption campaign.
But let me ask you about the China market in particular, because a ton of geopolitics, trade tariffs and sentiment getting in the way now as we talk about a Trump presidency. You've been working on a research and development facility in China, a very big facility. Talk to us about how you're thinking about the Chinese market and whether anything's changed now with the Trump presidency and how you navigate some of those headwinds.
We have in China a very local operation. Yeah, we have about 8,000 Healthineers in the country, 1,000 of them in R&D, and a lot of the demand of what in China is fulfilled by the local operations. Yeah, so it is more and more becoming a from China to China a game, of course, benefiting from our global strength and our global innovation power. So typically there's almost no goods flowing anymore between China and the United States in our supply chain.
Bernd, very good to see you today, or hear you at least. The reforms in Germany are very interesting under the Health Minister Karl Lauterbach. But how much do we need more financing going into such systems such as the hospital system, the hospital network in Germany and elsewhere in Europe in order to get it up to where it needs to be?
Well, first of all, we are very happy with our business in Europe, which is especially after COVID and after also from a long-term point of view, the euro crisis at a much, much higher level. But certainly in Europe, as in many other geographies, it is very, very important to have a functioning healthcare system, which is up to the demand for the non-communicable diseases. There's more cancer, there's more cardiovascular disease. So I believe the reforms make sense, because it's very much about specialization, about creating scale in the system. And I'm sure that healthcare remains a priority of European governments.
And will a change of government in Germany, in your view, Bernd, add a further catalyst to that reform?
I mean, for me, the point in Germany and Europe is more about a climate which is reigniting economic growth. For us, I mean, Germany is, of course, an important market on the one hand, but on the other hand, being a German company, still only about 6% or so of our revenue line is is achieved in Germany. Yeah? So the German market is important, but it's not the exact growth number is not mission critical for our business. Yeah? But I believe that there is hope that with the new election, with the new government, any new government in place, that there is more decisiveness in making the country ready for the future. And this means, on the one hand, reigniting the economy, but also further do reforms in the healthcare sector.
But can I ask you about how you see the opportunity in the UK? Because I know the Chancellor was at your magnet technology plant in Oxford recently. Do you see this Oxford-Cambridge growth corridor moving the needle on earnings for your company down the track?
See, I mean, we are very, very happy with what we are doing in Oxford. I mean, we have announced a big expansion of our factory and innovation center for superconducting magnets. This is where Oxford is the place for us to innovate for the world in that part of magnetic resonance. And the other aspect in the UK is, and I believe, also here making the NHS even more future ready, with using innovation, using AI, using modern technology to overcome the barriers in access to care to the British population is certainly an opportunity for the country, but also for us.
Bernd, thank you so much for joining us today. Bert Montag with us, the CEO of Siemens Healthineers.
Right, coming up on this show, earnings season continuing apace here on CNBC. We're going to hear in a couple of minutes' time from the CEO of Volvo Cars as the company reports its fourth quarter numbers. That's after this break. Plus, the French government survives 2 no-confidence votes in a day as it clears the path to adopt the 2025 budget. More later this hour. And don't miss our interview with the CEO of Carlsberg coming up at 7 GMT.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
My ambition is to get the story and to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
The ultimate pre-market morning news show, Squawk Box, CNBC.
The Nissan CEO has reportedly met with his Honda counterpart to end their merger talks. That's according to multiple reports. The two car makers announced an intention to merge in December, but according to the Financial Times, talks soured over Honda potentially making its rival a fully owned subsidiary. Bloomberg reported today that Nissan could be seeking a new partner to secure its future.
Very quick look at the Volvo car figures. Maintains guidance on outgrowing the market between 2023 and 2026 on a CAGR basis. That's a compound annual growth rate for those of you who love an acronym. But expects market to remain weak in 2025 due to a multitude of competitive and geopolitical challenges. Jim Rowan is the CEO of Volvo Cars, and we always learn something speaking to him. Jim, thank you very much indeed for finding the time to speak to us today. Do you want to just run us through the competitive and geopolitical challenges?
Yeah, maybe I'll start with 2024 because we just unpacked that year. So we were pretty happy that we grew the business by 8%. We achieved our highest ever revenue at 400 billion SEK, and we achieved our highest ever profit at 27 billion SEK. And of course, we were driving, much more EVs. EVs came in at 23%, which was up from 20% the previous year. All of that together, I think is a reasonable performance given the amount of turbulence that we saw even in 24. In 25, I think we're going to see that turbulence increase. And the way I frame it up is I think we're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technology. So we can modulate, if you will, our models into each of those markets. And then we're going to see this big shift to technology beyond electrification. So that software, silicon, connectivity and data, that's going to become a lot more profound in the products 25 and beyond. So that's how I see 2025 shaping up. It's going to be a tough year for the industry, but I think we're reasonably well positioned.
Jim, do you want to just go to the elephant in the room, which is trade wars, concerns about bringing in parts and vehicles from Mexico and from Canada as well? Just tell us how you're positioned stateside.
Yeah, so 24, we saw that play out for really in the first phase, which was the increase of tariffs for EV cars coming from China into the European Union. So that went from roughly 10% to 30%. So we've had to absorb that, and we're actually relocating production from China into our Belgian facility to help navigate through that. The next wave, if you will, looks like that's going to be focused in on the US. We've already saw some movements in terms of Canada and Mexico. And also last year we saw batteries increase from 7.5% to 25% when you import them to the USA if they're originating from outside the USA from a country without a free trade agreement. So we're going to see more of that. We need to wait to see how it plays out, of course, but we're preparing ourselves to see whether we need to start looking at production, relocation or even supplier relocation to different parts of the world. So it's going to be turbulent. As I say, that's going to be part of the challenge for 25.
Jim, let me tackle pricing with you because you've made some comments this morning about increased discounting. I know in the Chinese market that Tesla has had to launch its biggest discounted package for mid-range EVs so far this year. But what are you seeing more broadly? Is it China discounts we're talking about here, discounts in Western markets? What are you expecting this year on EVs?
Yeah, it really bifurcates because if you look at China, the discount is focused mainly on the entry, the mass market EVs. That's where you see most of the discount. We don't really play in that sector. We sell mainly mild hybrids and plug-in electric hybrids in China, and we play in the premium side. So we don't get anywhere near as affected as some of our competitors do within the China market. That said, I think we'll start to see maybe in 2025 some additional discounts that may start to encroach on the premium market as well. As some of the Western brands lose market share in China, then of course they're going to retrench into their domestic markets and the other global markets and try and pick up market share there in order to keep the revenue streams at the same level. So I think it starts into the hyper competitiveness and the price indiscipline, let's call it, starts in China, but I do think that will permeate through Europe and into North America as well through 2025.
Jim,
but again, premium will be less affected than mass.
Jim, that's extraordinary because we know this is an industry already under pressure and battling the margin story. So if we're seeing greater discounting in Europe and the United States in the quarters ahead, what sort of discounting are we talking about and what impact do you think it's going to have on margins, in particular even for your company?
Well, that's where you need to look at the strength of the brand and the loyalty of the customers. So we have a very strong brand. We have very loyal customers. People buy Volvos because they care about our brand attributes of safety first and foremost, sustainability. We use human-centric technology as opposed to technology for technology's sake. And we have wonderful, I think, very unique Scandinavian design. Unless you have something which is differentiated in the market and you have a loyal customer base, I think that becomes much more difficult. I also think it becomes much more difficult if you're in the mass market versus the premium market. And so, at Volvo Cars, I think we're reasonably well positioned. We have mild hybrid technology, we have plug-in hybrid technology, we have EVs. We also operate in the 30, 40, 60, 90 size SUVs, wagons, and we have a very differentiated brand position. So, nevertheless, it will be turbulent across the industry, but hopefully we're a little bit more protected than many of our peers.
Jim, I just want to revisit those early comments around tariffs and what you're dealing with here. Clearly a lot to navigate, but I do wonder whether your ties to China and the ownership by the Chinese is becoming a problem. We've got tariffs, but you've also got negative sentiment around national security and Chinese technology. If there is an avenue for the Chinese to seize certain technology, particularly when it comes to cars, is the Chinese ownership a problem now as we talk about a Trump presidency?
Well, we've saw ICTS, which is the new legislation, which has been muted, and that's still to play out. So we'll see that'll start to be fully unpacked what ICTS means, which is the in the USA, I think, is what you refer to in terms of that security concern. So we'll get a good look at that probably sometime around the middle of March, and then we'll be able to figure out exactly what we need to do in order to be ICTS compliant. At this point in time, we still need to wait for the full legislation to unfold.
Jim, the balance between hydrocarbon and electric vehicles and hybrid is something that you're having to play with all the time. You inherited a position where you had a path and it's had to be rowed back a little bit as well. How difficult is it to negotiate the transition when policymakers are so volatile in the support they're giving to the electric industry?
Yeah, well, it doesn't help. It adds to that turbulence that we spoke about earlier. And I think it's, if governments are going to make policy, that's fine. That's obviously for them to do. But then to stick with that policy for a period of time, because in industry, especially in the auto industry, when you're making large-scale investments of billions of dollars, you're doing that well into the future. To set up a new car factory, for example, in a specific geography, is a 2-3 year project. And if the policy is changed, halfway through that, then it becomes troublesome, obviously, to try and navigate those positions. Again, we're lucky we have manufacturing facilities in Asia and Europe and also in North America, and that's allowed us, in the recent instance when we've relocated some of our products from China to a Belgian facility, we could do that because we had spare capacity there. So, but yes, indeed, it is what I would like to see in terms of the policymakers. If you look at Europe, I think Europe has fallen behind in terms of its productivity. It's certainly fallen behind the US and China. And I think within Europe, we need to understand how we can build that new technology for the future in Europe, if you like, for Europe. And we have great learning institutes across Europe. It would be good to see governments lean in and develop the programs for next generational skills that we need for that young talent to come into industry.
Absolutely. I know you've got to go in literally 1 minute's time, but do you want to talk to me about the U-turn on estate cars in Britain? I'm just asking for a friend, Jim.
You sorry, say that again, please?
The U-turn on estate cars. I know a lot of people out there who like their Volvo estates and don't want a four-wheel drive.
Yeah, I can only talk about our cycle plan roadmap, let's call it that. I can only talk about that when we're ready to release those new models to the market, I'm afraid.
Okay, but you did do a U-turn on V6s and V90s, the sales in the UK, though, didn't you?
Well, I don't know that it was a U-turn. I mean, I think we had signalled, our roadmap going forward. But we continually look at the market and what the market wants and what the market needs, and then we modulate that with our cycle plan accordingly. So, and sales in the UK are fantastic. I mean, it was one of the top performing markets for us last year. In fact, I think it was probably the top performing market in terms of market share. So there's certainly enough in the UK that people like in our product portfolio.
Yeah, absolutely. Jim, I've got to let you go. Thanks very much. As I say, just asking for a friend who may or may not like your Volvo estates. Thanks, Jim. Jim Rowan, CEO of Volvo Cars. Other states are available. Ford shares hit the brakes in extended trade after January sales dipped on weak demand for internal combustion vehicles. And the car maker forecasts lower profit for the year. It sees up to $5.5 billion in losses on its EV and software operations this year, broadly in line with 2024. For the quarter, in the fourth quarter, revenue beat expectations, coming in at more than $48 billion. There you go. Mr. Farley, CEO Jim Farley, told CNBC that President Trump's tariffs could spell trouble for U.S. automakers.
If this persists, this tariff persisted with Mexico and Canada, it would mean billions of losses for the domestic car industry, huge impact for jobs in the U.S. And the administration knows that, as well as congressional leaders. They know that Ford is the most American car company, we produce the most, and they have committed to us to strengthen our industry and not weaken it.
Coming up on this show, Amazon prepares to post fourth quarter results with its key cloud unit in focus. We'll have more next.
Incredible that after so many years, people get accustomed to war and they start losing the power of feeling compassion even.
We need to be able to address the root causes that lead to the fact that to be populist is so simple in today's world.
It is a responsibility of the international community to act as one.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined.
This industry is going through its renaissance.
How big a game changer is this?
Let's go.
Scott Wapner from the NYSE. Closing Bell, CNBC.
A very warm welcome to Squawk Box. I'm Steve Sedgwick with Karen Cho, and these are your headlines. Qualcomm and ARM both posting quarterly beats after the bell, but the stocks slide as AI capex concerns once again dominate. Societe Generale fourth quarter profits doubling amid a rebound in its retail banking unit, whilst full-year revenue tops targets and the lender pledges payouts at the top end of expectations. The French government survives 2 no-confidence votes, paving the way for the Prime Minister, François Bayrou, to pass the country's long-overdue budget. Plus, Volvo Cars reports a downward shift in quarterly operating profit and muted retail sales growth, flagging 2025 will be a tough year.
We're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technologies.
Our US markets facing another positive session yesterday as we saw green moving back onto the boards across the trading session. Positive day for the Dow, up 0.7% in particular. If you look at sectors, real estate on the move, up about 1.6%, but really underlying the hood, a lot of movement in technology names. We were setting the same scene earlier yesterday that Amazon stock, Alphabet, big ones to report this week. Alphabet in the after hours was on the move to the downside. And in session, it was one of the undercurrents for the Nasdaq, just still weighing on the fortunes of that tech-heavy index, and perhaps you would have had a better performance bar Alphabet. Also for the S&P 500, the worst performer for those two major boards. But that said, Nvidia was to the upside for both of them, so providing some good fortune for both the S&P and the Nasdaq. So again, in terms of moving pieces, tech names, and for the Dow, you could say the same thing. Amazon was one of the stocks that was the underperformer for the Dow. And don't forget, we're waiting it out for Amazon numbers later on today. So again, technology having a fairly large role in the market action that you're seeing. To the Asian markets and what we're witnessing across the board, the play as these markets settle back into action after being closed for a while for the Chinese markets. It's a day in the green. So yesterday, a little bit soggy as they priced in tariffs, the negative from tariffs, some positives from DeepSeek, some negatives from the data points. You can see today it's in the green, up 1%, and the other major markets also getting some positive action today. To U.S. futures, what's in store later on today? This is how we're setting up for the trade. We are chasing a positive start. Signals look stronger this morning, Steve.
Super duper. Right, let's talk Mickey Mouse and the rest. Disney topped first quarter profit estimates, but revealed it began to lose subscribers to its Disney Plus streaming service. That is fascinating. The entertainment giant posted a 23% rise in net income, whilst revenue increased 4.8%, but Disney Plus subscriptions eased in the quarter, with the company warning that it expected another modest decline in coming months. Now, the CFO, Hugh Johnson, told this channel he was satisfied with the overall numbers despite challenges on multiple fronts.
Feel great about the quarter, well in excess of expectations, and most importantly, broad-based growth. The entertainment business came in very strongly on the back of Moana 2 as well as Mufasa. And the experiences business performed very well, in excess of where we expected, despite the fact that we were dealing with hurricanes and the startup cost on a ship.
Good, bad and ugly. The ugly was theme parks. Obviously hurricanes hit and concerned about that. The good was the cinematic releases. Deadpool versus Wolverine. Haven't seen that one yet because last time I looked, Wolverine had died in the movie. But anyway, that was one. Moana 2, which I did see, hated it. Nowhere near as good as the first one. Inside Out 2, haven't seen it, really want to see it.
I think it was all about Moana.
Sorry, I better just mention the bad as well, which was the streaming, which is under pressure.
Yeah, you mentioned Mickey Mouse at the start. I think that's so old-fashioned. It was about Moana this time. It was a huge hit for the company, so that did help. I haven't seen it, but I am dying to see it, even though you said you didn't like it. I'm a big Moana fan, so I'm really looking forward to it. I was a bit busy with some of the other hits that we had, including Wicked. That was in our portfolio, so I did see that one. But when it comes to Disney, I think you've had disruptions to the parks business because of those hurricanes, Helene and Milton. That had an impact. There was also a charge incurred from, which is a new venture, the theme parks on the high seas. This is the new ship that they've launched. So basically you have all those experiences you would go to a theme park for, yet you have them on a monster-sized ship. So that set sail at the back end of last year and was one of the costs at this point on the business, but seen as a potential growth area. So there was that feature. But back to the TV part, I thought that was fascinating. Linear is still falling, down 11%. And Disney has known that it's had a problem with linear for some time. It's been looking to move the pieces around. But and Disney Plus, to see that was slowing in the international component, I think that is somewhat disappointing for those hoping to see that this company could still be competitive as you've got more and more subscribers coming into the mix, and we've been talking about that for years. At what point do people start dropping subscriptions? I wonder whether this is that crucial moment.
And we didn't talk a lot about Spotify last week, but they had some great figures as well. I agree with you. I mean, look, I'll hold my hand up. I've said it before on the channel. We have everything. We have the Sky subscription, Peacock, which are the house ones, but plus we have all the others as well. And sometimes I look at it, I don't watch a vast amount of telly, but the family doesn't want to give up any of them.
Yeah, we've had a discussion. Would you mind if we got rid of this subscription? Would that upset you? And of course there were a couple of tiers.
Yeah,
really
I know, but that's enough
away.
about your husband. What about your daughter?
But at some point we will take away one or two of the subscriptions, and I think there are customers in different positions economically as we have high interest rates, inflation. So they are looking at ways to cut those fixed costs, and I think subscriptions might just be one area it's happening.
Final trite comment from me. I've just seen these boats and how big they are.
They're massive, aren't they?
They're really big. 4,000 people in a Disney boat.
Disney Treasure Cruise.
I'm going to ask an
it
open
all,
question to our audience. Get off the treadmill a second, you lot. Would you like to be, some of you would you like to be on a boat, a Disney boat with 3,999 other passengers? I'm going to leave that one hanging. And no nuance. Would Arjun, would you want to be on that boat?
I'd be interested to see.
You're not even on set yet,
to see what it's like. Sounds.
Yeah, you'd love to. You and your lovely wife would love that.
We love a theme park, just generally. We love a theme park
Would you like
generally.
to be on a boat?
Well, I don't typically, but this kind of sounds interesting. If you haven't had a chance to go to Disney and you get all the themed events there, the themed drinks, the themed playgrounds, the themed restaurants, the themed entertainment.
You know I've got to go to Disney this summer.
Yeah.
My daughter's performing.
Okay, well, Arjun and I'll be on the ship instead, having a cocktail or two. Let's push on. Amazon is set to post fourth quarter results later today with attention on how its key cloud business, AWS, performs. The unit has delivered consistent growth in recent quarters, with analysts looking for a 19% growth rate later today. Arjun, there have been a string of earnings from the industry suggesting that cloud is not growing as fast as some would hope given the big AI investments. How's AWS going to report in that climate?
Well, the analyst forecast at the moment are for very, very strong growth. They're looking at around 19.4%. If hit, would be the fastest growth rate at AWS for around 2 years. So they're looking for a re-acceleration of growth driven by all of that AI investment. But this here is where the danger lies as well. We've seen that this earnings season. Expectation is high. There's questions over the capex as well, which is also going to be in focus. Amazon already committed last year to spending $75 billion. So we'll see how much they've actually spent when these earnings report come out. And they've said also in the past that they're going to spend more this year. So again, has that changed given what's happened with DeepSeek? Is the capex outlook different? And so these are all the questions I think are going to be swirling around. Expectations high, given that capex. So there's a big, I think, area here that Amazon could just miss and disappoint.
I feel like they're not going to change the number yet. I feel like the DeepSeek news came out too quickly for them to recalibrate. And the line we've heard from CEO, CFO from the industry is that DeepSeek is just going to drive further adoption of AI, which makes our investments make more sense. I mean, that's the line we've heard pretty much the entire earnings season so far.
The entire tech industry is saying if DeepSeek is proven more efficient models, if this technology becomes cheaper, then it becomes more widespread and therefore you will need more compute power. And that's the sort of rationale at the moment from the entire tech industry. I think, look, from the point of view of Amazon, from Microsoft, and also from Google, they're seeing it at this point as still very much an arms race in terms of being able to build out this infrastructure. They don't see the full capacity, the full capabilities yet of some of this AI being hit. And so they feel they need to invest a little bit more and more and more and more. It'll be interesting to see whether we get some views on into 2026, actually, whether that capex then starts to come off the boil a bit, because they say, well, we've made these big investments, we've bought a lot of the chips, we've put our orders in for NVIDIA's Blackwell, and we've built our data centers, maybe we can just sort of take the foot off the pedal a little bit.
We haven't mentioned the word advertising yet, and this has been an area where Amazon has been reaching into to bolster its revenue at the expense of some of its rivals. And I know people in our household will search on Amazon for products rather than, say, a traditional search engine. So how is Amazon going to be looking on this front?
Again, this is an area which has seen extremely strong growth. Again, projections for strong growth again in the December quarter. Amazon has carved out, as you mentioned, quite a unique position where people will just go straight to Amazon as soon as shopping comes into their mind. And so it is a big repository of products there which people are going to search to. It's a very different proposition to, say, Google and shopping as well, because it offers all of those products with prices there ready to buy. And so that's been a very strong part of Amazon's business.
I've got 2 points I want to make. One, I'll ask you a quick question. De minimis. People talking about Shein and Temu potentially having to pay border taxes, customs duty on small items as well. This can only benefit Amazon if they have to increase their costs versus what Amazon already has in terms of its internal warehousing in the US.
Yep, and Shein and Temu have been very competitive against Amazon. Amazon have built out a massive logistics network. Sometimes you drive down the highways here in the UK and you see huge, massive warehouses. And it's the reason you can do same-day delivery with Amazon.
Yeah. Okay, let me move on then. So that was the school of thought. Let's play our game. How many analysts like No, don't cheat, guys. I cheated. I've looked. So there are 72 analysts out there covering Amazon. So everyone's covering Amazon as well.
How many buyers?
How many sellers? Strong sellers. How many strong sellers?
I'm going to say 0.
I'm going to say 2.
0. How many sellers?
Oh, strong sellers, sorry.
Yeah, that's strong. How many sellers?
1.
None.
None.
Oh, sorry. How many?
I'm going to go none.
How many holders?
No,
Karen goes first. How many holders?
1.
4. 4 brave analysts out there have got it as a whole. So no sellers, no strong sellers, 4 holders. And I'll finish off the rest of them. There are 49 buyers and 19 strong buyers. You get a really good rounded view of Amazon on the market, don't you? It trades at 38 times forward, and not one of you out there think it's overpriced. You may be right. I'm just saying for a friend.
Our listening skills and execution were just brilliant in that.
I thought we did rather well. Carlsberg numbers. Oh, we're moving on. Oh, yeah, the 5-year chart. I was just going to show you that anyway. They've tripled in value since 2022. There you go. Since its lows. Okay, thank you very much indeed. Last film you saw?
Oh, I've watched a movie in ages.
Oh, okay, that's rubbish. Adam's already in trouble. I'm already in trouble because he's already rolled on to the next thing. Carlsberg numbers. I heard the biggest sigh from a director ever just then. He was like, oh. Carlsberg numbers are due to cross the wires in a matter of minutes, with the company guiding for full-year organic growth in operating profit before special items of between 4 and 6%. It comes with the drinks industry in sharp focus as Trump's tariffs loom. Our Danish correspondent joins us from Copenhagen, on the back of her success with Novo Nordisk yesterday. She has transitioned to Carlsberg. Sylvia.
To some extent, there's a bit of a theme from weight loss drugs to new trends in drink makers. But let me step back and understand what's happening here today for Carlsberg. When you think about the last time they actually communicated numbers to the markets, they had already warned about a challenging market environment. So going into today's results, we want to know whether there's been any change here, whether they've seen any sort of improvement. And what is the outlook? Can they actually deliver a stronger performance in 2025? Let me show you the chart of their share price move over the past 12 months. Shares have been under pressure. They're down almost 20% over this period. So let's see whether the numbers today could actually propel a little bit more of momentum for the stock. Now, when it comes to these new trends for drink makers, I'm talking about non-alcoholic drinks, for instance. And yesterday, actually, the company launched a new no-alcohol Somersby. Sorry, I apologize for that. They launched that yesterday, and one of the questions here is where they're going to scale this going forward. What other markets are they going to put this product at? But overall, though, there's this trend to invest in this kind of product as we are seeing consumers becoming a little bit more conscious about their alcohol intake. On top of that, when we also heard from the company in the third quarter, they had already warned that France, China, and UK had seen lower performances. So these are 3 key markets here. What is the performance in Western Europe and in China? Also, when you take a step back, also important to understand whether there's any sort of ramifications from the trade conflicts for this company too. Worth keeping in mind that Carlsberg does not actually sell in the United States. But of course, as we see trade barriers being imposed, perhaps there's second round effects for this company as well. Of course, we'll have the chance to speak to the CEO, understand how he's thinking about the outlook for the company, whether there's any ramifications for them from these trade conflicts, and we'll bring you that interview later this morning.
Yes, Jakob Orup-Andersen coming our way later on. Thank you very much for that, Sylvia. Ahead on the show, French Prime Minister François Bayrou survives 2 votes of no confidence. But what does it mean for the country's budget? We'll have the latest after the break.
CNBC. Live ambitiously.
We empower those who act. Those who see the correlation between predictability and probability. Those who manage risk by anticipating each movement. Flawless execution. Timing and accuracy. Identify the goal. Match power with precision. Reach new heights CME Group, where risk meets opportunity.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Live from the New York Stock Exchange, Halftime Report, CNBC.
A CNBC original exploring equality.
My quote since the beginning was, don't change yourself, change the game.
If you want to be more innovative, more creative, come up with alternative ideas to solving problems, you've got to be more diverse.
And LGBTQ rights and our acceptance are on the line all over the world.
We have something to bring to the table for the solution that we can find together in this fragmented world. And music is always at the center of it.
Real lives, real stories, only on CNBC.
Let's take a bit of a look at the macro as private companies added 183,000 jobs in January, according to ADP, topping expectations. That figure was largely driven by service providers. It comes after December's print showed growth of 176,000 jobs. ADP's jobs print comes ahead of Friday's key non-farm payrolls report, with forecasts pointing to jobs growth of 169,000 jobs. Speaking to CNBC, ADP chief economist Neela Richardson forecast a robust number in Friday's data.
The January report for ADP and the numbers that you'll see Friday from the government have been re-benchmarked with a QCW number that it pulls the numbers together for January. And so what I think you'll see from both ADP and on the Friday report is strength ending the second half of 2024 that carried over into the first month of 2025.
Numbers are still showing us some strength. If we're talking about a number that's closer to 200,000 here that is being created of a month, and at this point 183,000 jobs, but pay also going up. So that step up in pay while you've still got growth in the market suggests a strong backdrop here. I think you've still got distortions, the fact that it's services, not jobs, where you're seeing that creation. What happens now as we talk about the deportation of migrants? Because the services industry has been one area where those migrants have been fulfilling some of those jobs. Do we still see a bit more heat then coming in the services side, or have you got the demand change where consumers are seeing the catch-up of inflation, they start to slow down on some of their spending patterns as it take heat off the services side? So I think there are a few anomalies coming up here.
Let me just focus purely on the job side of things as well. And we've had two pieces of data out of the four we're going to get this week. We've still got initial claims and, of course, as Karen mentioned, payroll still to come as well. Two pieces of very closely watched data. ADP knocked the ball out of the park in terms of hopes for job creation as well. The revisions upward for December were as magnificent as the January figure itself. But a day earlier, we had the JOLTS labour turnover survey, which showed the availability of jobs very, very aggressively down-paired, albeit still at high historical levels. You'll remember we talked about that yesterday, at 1.1 jobs available for every person looking for work. So you've had two conflicting pieces of data. One saying there's less jobs available, two saying that actually the jobs market is really strong in the private sector. That, for me, is unambiguously saying that those people who are talking about a cataclysmic decline in the US economic performance and US jobs market, they are woefully wrong at the moment.
Well, I think we've had this impact too of a lot of migrants coming across the border, so the supply into the market was quite extraordinary. But now if we talk about a drain in supply, that has some sort of bearing on the labour market as well. And I think, what are we looking at? Are we looking at US growth, or are we looking at smaller US growth? And the tariff situation, even central bankers are trying to work out whether this is a positive or a negative, depending on how countries react.
You know, there are viewers out there in the US who don't like two people with British and Australian accents talking about America. Well, tough, get over it. But one thing I always admire about America is its versatility. Europe sets a policy, takes us years to change it as well. If the US needs more jobs, they will turn on the tap. If they need more H-1B visas stamped more quickly, that will happen quite quickly. If there are shortages in certain parts of the US supply chain, whether it be high-paid jobs at the top, H-1B visa, or at the lower end as well, you know full well America will adapt very quickly. They are so much quicker at adapting than we are in Europe.
It's the sweep of a pen, isn't it? That's the big difference that the president holds.
For all those people who think that Donald Trump is dogmatic about these issues, he's not. He's incredibly transactional. And if America needs more workers, you can bet your bottom dollar the administration will get them in. Meanwhile, investors are watching the Bank of England today as it reveals its policy rate decision, with markets pricing in a 25 basis point cut, the central bank's third since the pandemic. I'll just tell you very quickly, we're expecting at least 3 this year, might even be 4 as well, according to what the market is thinking as well. But concerns about that long end of the gilt yield and, of course, about what other policies may mean for the pound and indeed gilt yield volatility, because as you will recall, earlier this year, 30-year yields hit their highest level since... yeah, pretty much this century. Extraordinary figures. Right, to get up to speed ahead of the Bank of England's rate decision, Jenny Reid's done a great piece on .com. Head to that aforementioned article. Juliana and I will bring you that decision from 11:55 GMT. And don't miss my interview with the Governor, Andrew Bailey, at 4 p.m. London time.
Big news out of France. The French government survived 2 no-confidence votes Wednesday, clearing the way for a contentious state budget to finally be adopted. Charlotte, that is big news that a government has survived a no-confidence vote.
Yes, white smoke finally in France, a budget being adopted, the biggest part of the budget being adopted. So Bayrou has managed to do what Barnier failed to do. He has survived his vote of no confidence on the budget, actually survived 2 of them. Yesterday, of course, that's because he used the infamous 49.3, so pushing through the budget without a vote, which therefore opened the door to these votes of no confidence that now failed. So everybody seems to be unhappy about this budget. You know, they had to make a lot of concessions to the centre-right, to the centre-left, but there is certainly a sigh of relief. And the Prime Minister, François Bayrou, yesterday said, look, we have an imperfect budget. It's an emergency step because our country cannot function without one. So again, a sigh of relief that this has been adopted. It was adopted, of course, because first the far right didn't support the vote of no confidence, and also the socialists. That's the group where Bayrou turned to make most concessions to try to keep them on board, and that seemed to be working. So now this budget will aim to cut the deficit to 5.4% of GDP from 6.1 in 2024. So that's 50 billion euros in spending cuts and tax increases. So remember, under Barnier, they were targeting 60 billion, and that's why maybe they tried to go too far, too fast, and that was quite difficult to keep people on board with that. So that is the target at the moment. So here again, some of the concessions they make to the socialists, they limited the cuts on healthcare and education in particular. They limited the tax increases to keep the centre-right on board as well, but there will be this one-off increase, one-off on the largest companies that make more than 1 billion euros in revenue, and also on the richest individuals. They're meant to be temporary. We'll have to wait and see whether that is the case. But certainly, what now? There are more votes of no confidence coming next week, very much expected to survive them. But in terms of policies going forward, it looks like this will be, they will all agree to disagree. There's still a very fragmented parliament. Not much can be done going forward. So maybe a wait and see until potentially a new parliamentary election in the summer when President Macron can trigger one. But certainly a big step now. There is a budget. And so we've avoided the crisis.
I want to tackle risk with you, and you set it out nicely about what comes next and summer being the next stop. But if you look at the yield, it has come back a little bit, the spread over German bonds, but it's still close to some elevated levels. So even though there's been a bit of reprieve, it suggests the market is remaining a bit cautious. If we now have a deficit that is not as ambitious, where does that leave France? Because there seemed to be a ton of pressure for France to get its finances in order.
So they have kept the target to bring it back to 3% of GDP in 29, and so it has been approved by the Commission. There are some moments of caution as well, because this projection, this budget depends on the growth on GDP and on tax revenue, and we know that it's been one of the big issues where we see this deficit ballooning, that the tax revenue wasn't as big as I expected under Bruno Le Maire. So a question mark on that. And on the growth as well, remember Q4 was 0.1% in terms of growth. It was a negative GDP in Q4 of 24. At the moment for 25, the projection is to see a growth of 0.9% of GDP. A lot of economists say that's actually quite optimistic. It could be closer to 0.7%. So all these elements come into play on whether this budget can actually deliver what it says it will deliver. And maybe to a certain extent, the bigger stakes will come for the next budget, because they managed to do these baby steps, avoid the crisis, but a lot of the hard work could be coming for the next budget.
Charlotte, thank you very much indeed for that. We look forward to the next crisis out of France. Or maybe that's it for a while. Maybe we can have a bit of relief. Let's take a look at Carlsberg shares. Year to date, they're up 6.3%, but actually it's been a really tough ride. Quite frankly, they're trading dramatically lower than the 1,103 Danish kroner they were trading at just 2 years ago. So the one-year performance down 16%, but they have started putting numbers across the wires. Let me go through one of these. 2025 outlook, organic operating profit growth seen at 1 to 5%. Wow. Is it just me, or is that a really big range, 1 to 5%? We assume a translation impact of around 150 million Danish kroner for 2025 as well. A lot of numbers here as well. So let me go through some of those. Divvy proposal, 27 Danish kroner per share. They have released net sales in the second half. Yeah, that's in line with expectations. 36.2 billion Danish kroner versus 36.2 Danish kroner, give or take the decimals as well. Full year revenue, 75 billion Danish kroner. Yeah, that was actually slightly better than a year ago, which was 73.5. Expecting a relatively stable consumer environment, relatively stable. Uncertainty related to consumer sentiment in both Asia and Europe remains.
I was just looking at some comments in the last 24 hours from one of the other big drinks makers saying that you could see consumers get involved with tariffs, that there could be some sort of backlash about what they're willing to buy. So interesting consumer market.
And do not miss Sylvia's interview, exclusive interview with the CEO of Carlsberg, Jacob Arup Andersen, coming up next.
$1,500 movies? I don't want this flight to end.
Watch the markets open, brought to you by Emirates.
Inside the world's most cutting-edge technologies.
We're seeing a real opportunity for those with brilliant ideas to accelerate towards change.
Discover the secrets and turn innovative ideas into profitable ventures.
Our vision is a world where human prosperity and economic growth are planet positive.
Embrace digital disruption.
I mean, this is life-changing technology.
CNBC Tech, The Edge, only on CNBC.
Squawk on the Street, CNBC.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money. Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Invest with an advantage with CNBC Pro.
CNBC Pro is for investors who know about the news and the trends, but then want to take it to that next level. Exclusive access to market experts to help you identify opportunities in any market.
Unrivaled access, essential tools.
That's CNBC Pro. Everything you need, all in one place from a source you trust.
Go pro with a flash sale offer for a limited time at cnbc.com/claim offer. Terms and restrictions.
Welcome to the second hour of Squawk Box. I'm Karen Cho with Steve Sedgwick, and these are your headlines. Qualcomm and ARM both post quarterly beats after the bell, but the stocks slide as AI capex concerns dominate. Volvo Cars reports a downward shift in quarterly operating profit and muted retail sales growth, flagging 2025 will be a tough year.
We're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technologies.
The French government survives 2 no-confidence votes, paving the way for the Prime Minister François Bayrou to pass the country's long overdue budget. And the Bank of England is widely expected to deliver a quarter-point rate cut, the third of the cycle, with markets also eyeing a potential downgrade to growth forecasts. Join us for my interview with the Governor, Andrew Bailey, at 1600 GMT.
Shares in ARM and Qualcomm fell in extended trade, with the chip stocks underwhelming investors with disappointing guidance and prompting concerns of a slowdown in AI spending. Qualcomm beat on the top and bottom line in its first quarter, but issued weaker than expected estimates for its key patent licensing business. And chip designer ARM topped on third quarter expectations, but warned it will not meet the higher end of its full-year forecast. I think this is the issue as we talk about the bar being set high, not just for the quarter, but for coming quarters. The Qualcomm CEO Cristiano Amon told CNBC the recent developments at DeepSeek provide a tailwind.
Within days of the DeepSeek announcement, people were showing it running on Snapdragon phones, showing on Snapdragon PCs. As a matter of fact, Microsoft announced that DeepSeek R1 is running on Copilot Plus PC, starting with Snapdragon.
We'll have more from the chip sector later today when our US colleagues speak to ARM CEO Rene Haas. That is a first on CNBC interview coming up at 1500 GMT.
Right, so a lot of news out of Carlsberg, whose CEO we spoke to in Davos about some broader picture issues. Now we can drill into the full year numbers. Net sales in the second half were in line with expectations at 36.2 billion Danish kroner. Second half EBIT before special items, 5.1 billion Swedish krona. And Sylvia, they're expecting a relatively stable consumer environment, although uncertainty related to consumer sentiment in both Asia and Europe remains. Sylvia.
That's right. So let me address some of that with our next guest. I'm pleased to say that we have the CEO of Carlsberg joining us today, Jacob Jarup Andersen. Good morning, and thanks for having us over in such a beautiful location, actually.
Good morning. I'm glad you enjoyed.
First and foremost, I just would like to understand why the guidance for 2025 shows essentially lower growth from what you've achieved in 2024.
Yeah, so when you look at the guidance for 25, it's early days. We're standing here in early February. A lot of uncertainty out there in terms of the global consumer, some geopolitics, etc. And therefore, we think it's a robust guidance of 1 to 5% operating profit growth, as well as it's incorporating the loss of the San Miguel brand, which also takes off 2 to 3 percentage points of growth. So we think it's a solid guidance here at the beginning of the year.
When you think about all of the uncertainties that you're facing at the moment, which one would you highlight as being the biggest point of pressure for your business this year?
When I look at the business, for me, the big streams that we need to get right is all the internal stuff. We have a big integration of Britvic, which we just acquired. We have a lot of executions on our key brands, but if I look externally at external pressures, for us, it's more about the global consumer. So where's the global consumer headed? Yes, we're all getting a lot of noise right now around geopolitics, potential trade wars, etc. In the end, how does that translate into the global consumer? And I just have to say, as a company operating globally in 150 countries, we're used to volatility. We're used to this type of noise around geopolitics, etc. So for me, it comes down to how does the consumer react.
So let's talk about that consumer, because one of your rivals, Diageo, earlier this week had actually very strong comments on how they could be impacted by tariffs coming from the United States. Of course, Carlsberg does not sell into the U.S., but are any sort of ramifications from these trade conflicts on your business?
So when you look at it, as you say, we sell very little product into the U.S., so we don't get that direct impact as others will do. On the other hand, we're not relaxed about it because it can have secondary impacts on many markets, and there can be also unforeseen impacts that we haven't thought of at this stage. But when I look at it globally across our portfolio for 2025, it is not the biggest concern that we face. It is more around how does global consumers react to now 2 to 3 years of higher inflation than ordinary. And we will see how the broader picture around tariffs, global tariffs and trade wars play out. I have to say, we are used to facing this type of volatility, and as a company not directly exposed to the US, I think we take a balanced perspective on it.
Let's talk about some of your markets in detail. Thinking about Asia, you're highlighting in the numbers today that this is another point of concern really going forward. Explain to us a little bit more on why and whether do you think that perhaps stimulus measures from the Chinese government could actually help you in that regard?
Yeah, so when you look at China, which is a very big market for us, it's around 20% of our business. 24 was a weak year for the beer market. We continued to grow share, so we've been taking share for the last 8 years in a row in China. So very pleased with that, but no doubt that the market was tough. Looking into to the overall FMCG, so consumer goods space, it was tough for everyone. So the consumer was holding back. Looking into 25, we don't at this stage see a step change in consumer behavior. We're not going to call that. It is, as you also point to, it is going to be quite decisive to see whether there will be any macroeconomic stimulus. Will the Chinese government try to impact internal domestic consumption? But for now, we're operating with plans where we will have to do the hard yards ourselves and continue to drive market share in China. We see great prospects in terms of the continued consumption story in China and our continued market share growth.
Let's talk about Europe as well. I mean, even in the previous earnings, you had already highlighted how France, UK were a little bit weak. What I would like to understand here is obviously there's a lot of pressure on Western European economies too. There's growing concerns that we might see recessions actually this year. So how are you protecting the business for that eventuality?
So when you look at it, no doubt that a number of Western European economies are going through a tough patch at the moment. And with the geopolitical uncertainty, let's see how that develops in the next 12 to 18 months. From our perspective, the key to us is to continue to drive our key growth vectors. So we continue to drive within our priority segments of premium beer, alcohol-free beer, and what we call beyond beer, so the ciders of the world, the hard lemonades, the ready-to-drink cocktails, etc. All of this is growing faster than the market. And if you look at our numbers today, which just came out, you will also see that those categories are growing significantly faster than mainstream beer. That is the way we create moats around our business. That is to ensure that we have a diversified portfolio where we can cater to the consumer no matter what their preference is.
Before we go into those different categories, I'd just like to understand how much more margin growth do you expect for Western Europe?
So I would be giving you a new guidance that I haven't given anyone else, but there's no doubt that we think that we can continue to increase our margins in Western Europe over the coming years. We've been through a bit of a trough with the rising commodity prices and the cost of goods sold going up, and we made it very clear that part of the accelerate sales strategy is that we want to rebuild our gross margins. And when you look at where our gross margins have deteriorated, it's especially in Western Europe. So we are looking at margin enhancement in the coming years in Western Europe, but I'm not going to give you a number.
I had to try. When I think about the different categories, obviously the numbers for non-alcoholic beer showing a sustainable growth here. I just would like to understand, is this the part of the portfolio where you plan on investing further, and what else do you want to deliver on that front? Because it seems that consumers already have a lot of choice at this stage.
Yeah, so when you look at alcohol-free, that's actually our fastest growing category. When you look at the accounts today, it's the fastest growing category, and we see that as a sustainable structural trend. We think there's much more to gain in alcohol-free as it's moving from being a pure replacement of a beer drinking occasion to becoming a category in itself. So really a beverage in itself that doesn't just replace alcohol. And the innovation is high. We've launched more than 60 different alcohol-free brands over the last 3 years, and we keep on innovating. We've just launched in the cider category a 000, so zero alcohol and also 0 calories, and we're super excited about how that will go. So the innovation will continue in this, and we've only just begun.
When you think about also your exiting from Russia, I just would like to understand whether there's any sort of benefits now that you've closed that part of the business, any sort of strategic play going forward now that you're completely out of Russia.
Yeah, so we had a very complex exit out of Russia, as you know, also having to undergo external management from Russian authorities, etc. Very, very pleased with the exit in December, which basically puts an end to all of the legal disputes and all of the uncertainty that was around the Russian business. So that chapter is closed and we can move on. The biggest benefit for us is not at a very high level strategic. It's more, it removes a lot of uncertainty, a lot of legal uncertainties. It removes uncertainties also around the businesses outside of Russia. And it means that we can put full throttle and full investments behind some of those key markets. I'm glad that's behind us. It has been it's been a complex part of our history, having to deal with that exit and what ended up becoming a tough period for the company. Glad that it's behind us and now it's focusing on the future.
And thinking about the future, before I let you go, I just would like to understand perhaps a little bit more color for the UK market. Now that you've completed the Britvic acquisition, what is the plan there? What do you want to do? What do you want to achieve in the UK?
We're super excited about what we're building in the UK. We're building an amazing, I would call it a beverage powerhouse in the UK for the next many decades. We're bringing together two great businesses. We have been blown away by the new colleagues coming on board from Britvic. It's an amazing company with great capabilities, great people, great brands, and putting those two companies together and creating a powerhouse, especially also around our shared ownership together with Pepsi around the Pepsi portfolio. I think we can do something truly unique. What we have seen in other countries where we run soft drinks and beer together is that we create tremendous synergies for our customers and our consumers, and that is what we're going to do in the UK as well.
Jacob, great to have the chance to speak with you. Thank you for your time today.
Thank you.
On that note, guys, I'll hand it back to you in the studio after we spoke with the CEO of Carlsberg. Let's see how the markets will react to the numbers, but at least when you think about the beat, we did get a beat in terms of their top-line business for the full year. Let's see how investors will digest these numbers.
Very nice. Thank you very much indeed, Silva Mara, our Danish correspondent. AstraZeneca numbers, the outlook for 2025. Total revenue expected to increase by a high single-digit percentage. Outlook for 2025 core EPS expected to increase by a low double-digit percentage. Now, both of those are at CER. We love an acronym at the moment, don't we? That's constant exchange rate. Second interim divvy announced for $2.10 per share, making the total annual divvy declared an increase 7%, up to $3.10, by the way. What else can I tell you? I can tell you the revenues beat expectations at $14.9 billion versus 14.2. Dividend to be further increased in full year 2025. What else can I tell you that I'm trying to disseminate a lot of information here. They expect to increase capital expenditure by 50% in full year 2025. So increasing capex, increasing the divvy. Very interesting that is the case as well. They will continue to fully cooperate with Chinese authorities, noticing concerns about illegal drug importation allegations. They got notice of transfer to prosecutor and appraisal opinion from Shenzhen City Customs Office. So we'll keep an eye on that China story, but safe to say the numbers look pretty solid. I'll just tell you what the shares have done. They're up 6.3% so far year to date, which puts them at 15 times, which is a mild premium to the broader sector. In the meantime, US markets, Karen.
Let's push on as Big Pharma a feature yesterday for Europe and maybe again today. US markets were still looking at the impact of earnings, trade tariffs. It's still being discussed what the impact could be on earnings. But when it comes to the tech numbers, that was what we were digesting after our same time yesterday on Alphabet, and we saw a reaction. It was right towards the bottom of the S&P 500 and the NASDAQ, so that impacted the fortunes of those companies. In fact, communication services, the underperforming sector yesterday stateside. It's Amazon today as we wait down for earnings later on today after the bell. So again, these big stocks, the Mag 7, the big tech momentum names, investors just a bit cautious around whether we're genuinely seeing enough revenue growth thanks to what is enormous AI spend at this stage. So those markets you can see, it was the Dow that was high, up 0.7%, leading the charge. Amgen, the top moving stock there. But these tech numbers just crimping some of the action stateside. To the Asian markets, we do have some of that green spinning across the region today. The Tokyo market up 0.6, stronger for Hong Kong and China. Don't forget China returned to the trade yesterday, and we're seeing just that reaction from DeepSeek and the individual economic news that had crossed while it had been shut. So just settling into a pattern where it is stronger, 1.3 up. To European futures, and the early picture today as we also get set up for green stateside is that we will see another bounce here, 0.8 up on the FTSE 100. That looks to be one of the stronger markets. The DAX in the mix, more than 0.5% to the green. Steve.
Coming up on the show, Maersk beats on the top and bottom line in the fourth quarter. We're going to have more with the CEO. Absolutely pivotal company in global trade. We'll speak to Vincent Clerc coming up next.
judiciously.
Welcome to Reinvented with Accenture. Today I'm here with Margherita Della Valle, CEO of Vodafone. You were employee 25 in Vodafone Italy. Today you're the CEO of Vodafone. What is your strategy and vision for the future?
We are changing our culture to really focus on our customers. We need to acknowledge that change is hard, but if people understand it's for the right reason, then you get the power of the organization with you.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
A CNBC original exploring equality.
My quote since the beginning was, don't change yourself, change the game.
If you want to be more innovative, more creative, come up with alternative ideas to solving problems, you've got to be more diverse.
And LGBTQ rights and our acceptance are on the line all over the world.
We have something to bring to the table for the solution that we can find together in this fragmented world, and music is always at the center of it.
Real lives, real stories, only on CNBC.
Live from the New York Stock Exchange, Halftime Report, CNBC.
You don't do what Taylor Swift does without understanding how to build a business. It's not just about these songs that you hear on the radio.
Just at the peak of all their powers right now.
That's a Taylor Swift effect.
The Swift Effect, this February on CNBC.
To the latest around the tit-for-tat trade war that we're witnessing between the United States and China. After the measures drawn up by the Americans, China did hit back with drawing up a blacklist of companies. And don't forget, it was PVH, one of the companies on the list, on the blacklist for the Chinese. This is the owner of Calvin Klein and Tommy Hilfiger. Also Illumina, which is a biotech company. And effectively the China Commerce Ministry is saying today on adding these two companies to the unreliable entity list, China will take corresponding measures against entities that China is willing to work with relevant countries to jointly respond to challenges of unilateralism, and that China won't proactively provoke trade disputes, willing to resolve issues through guidance and consultation. The ministry is saying on those US tariffs, China will definitely take necessary measures against unilateral bullying measures and resolutely defend itself. So this is what's just crossing now, and again just clearly spelling that it's been picking off certain companies and targets as a result of what Trump has announced, this blanket tariff against some Chinese goods.
And a lot of big businesses have to just carry on business regardless of what's going on in Trans-Pacific rivalries. Muller-Maersk is one, or Maersk I should say, reported fourth quarter profits above expectations, expects earnings this year to trail last year's level, and it's understatement of the year. This is amid considerable macroeconomic uncertainties. I'm not going to give you any more numbers. I'm just going to get straight to the CEO because, as I say, they posted a bottom and top line beat. EBITDA heading $3 billion, revenue of 14.6. I'm sorry, the read's incomplete there as well. Let's get to Vincent Clerc, who is the CEO of Maersk. Vincent, thank you very much indeed for joining us. Why don't you talk us through the numbers first of all?
Yeah, I think, thank you. We delivered a really, really strong quarter here. We saw growth across all three of our segments. We saw also a pretty strong price environment on the back of that growth and some shortages of capacity around. So global trade continuing to be strong allowed us to deliver a very strong quarter and what is actually the third best year in the history of the company. So at a time of very high macroeconomic uncertainties, we were able to be sufficiently agile to really take care of our customers, keep the very tight control over our cost and our productivity, and grow the top lines. And all of this equates into results that we're quite satisfied with, and an outlook for the year where these uncertainties will continue in 2025, and certainly we will see some normalization on the price side, but where we still expect the economy to chug along at quite some strength with a 4% growth expected in the market and in the traded volumes.
Vincent, we had a brief chat during the break, and how you deal with so many short-term uncertainties that they're not just short-term, that's the problem. When you've got administrations and potential trade wars and the EU watching that could become medium to longer-term issues, just give our viewers a bit of a snapshot on how on earth you deal with this news flow in terms of your medium-term planning.
I think what is core for us is really to look at, more than the news feed, what is really happening on the ground. There's been talk about deglobalization for a couple of years, and actually what we have seen on the ground is a continued strength in traded volumes across the whole supply chain, is a continued increase in volumes coming out of China. So if you actually stay focused on what is happening on the ground and what is important to your customers, if you work on the agility that you need to have to react to trends or sudden shifts that might occur, such as what we saw in the Red Sea last year, then you are actually able to see not only problems, but a lot of the silver lining also that there is in the current situations and the opportunities that there is to do a great job for customers and also to deliver good results.
And yet, Vincent, global trade flows could really be affected by this as well. We see protectionist barriers potentially going up, industrial policies being talked about a lot more, reshoring being talked a lot more as well. Do you see a structural shift going on rather than just political noise?
Not yet. Not yet. Actually, trade volumes continue to increase. Asia continues to be the factory of the world, and the share that China has in traded volumes continue to creep up slowly. So while there is a lot of talk about this, it is actually very complicated to do. The global supply chain, as that the world relies on today, took about 20 plus years to get built, is very integrated, it's very long, has very multiple tiers of different suppliers contributing to the finished products that you and I go buy in our local department store. And for that to change, it does take some time. So while we're seeing some movements towards more nearshoring in Turkey, in Morocco, or in Mexico, near some of the consumer markets, the overall trend is still of a very resilient global supply chain that copes with this political pressure more than it really structurally changed so far.
Vincent, let me ask you about the small packages that have been a big part of the e-commerce landscape for the last number of years, the Temu and Shein type of packages that were exempt from tariffs and taxes going into the US market. What sort of a change does that mean for your business? Is it impacting air freight forwarding, on costs, on volume? What do you see?
Yes, there is no doubt that a lot of the pressure that we have seen in the air freight market, especially out of China so far, has been caused by the impressive growth that we have seen out of these border crossing e-commerce giants. And this change in the tariff is something that had been talked about and was expected for a while. It will have significant impact going forward on air freight markets. It will also probably see some of the demand shift outside of China to Southeast Asia and so on to feed into the traditional consumer markets of Europe and the United States. And we have also seen already during last year those e-commerce giants move forward with some location of their inventory in the US and in Europe so that they can serve more locally and not everything out of China. So they knew this was coming. Now it is here, and it will accelerate the diversification of their sourcing and change the way that they serve their customers. But I do think that just the rapid growth that we have seen in that sector demonstrates the agility that these companies have and the resilience that their business model has with a lot of their consumers. And for us as a logistics provider, it will be important and for across the space that we are able to continue to support our customers to these new challenges.
I'm fascinated by what you said there, and some of the comments I've heard recently about short-term measures by companies to get around trade tariffs. I think Diageo was quoted in recent days about managing its inventory. Could there be a short-term distortion where companies are moving quickly, trying to get ahead of tariffs, moving product into the US market? Is that going to create some sort of a boost for shipping of some sort in the short term?
It's possible, but for that to happen, you need a bit of clarity on what is going to happen. And so far, what has been surrounding this whole tariff discussion has been a lot of lack of clarity and very short-term measures that get turned on and turned off and changed. So in order for companies to react and manage their inventory accordingly, I think they would need to see where are the tariffs going to be applied, how they're going to be applied, and from when, so that they can actually take some measures. Today, what we're looking at from an inventory perspective is inventory both in Europe and in the US are fairly at a normal average level compared to the level of consumption that we see in those markets. And therefore, it's hard to see that this fear around tariff and this uncertainty has materialized in distortions, as you're mentioning.
But I'm curious about how the Red Sea is playing out for you, because there were some comments that you made today about the situation resulting in elevated operational costs. Trump is promising to be much more active now in the Middle East, creating some sort of Riviera of the Middle East. What impact is that having in terms of the stability you see in the landscape in the Red Sea, and what that could mean for the operational costs from here?
Yeah, I think that for us, this has been a key feature of 2024 and a key disruption that we had to respond to. It is very unclear today what the recent development with respect to the peace process in the Middle East are going to mean from a trading route perspective. Today, it is very clear to us that there is not a permanent solution. There is not even the contours of a permanent solution that we're working towards, and therefore the prerequisite for us to resume traffic through the Red Sea are not yet met. We cannot get safe passage for our ships, and we cannot have assurance that that safe passage will continue for a long time. So this is something that we're continuing to watch closely as it unfolds, but so far I think it's still too early to call whether it's going to be at some point during this year or if it's going to go into next year. But for sure, it is not in the very near future for us.
Vincent, talking of the Middle East, last time I spoke to you in person was actually in the Middle East as well. We were in Dubai, we were at the COP conference as well. Does anybody still talk about the transition in your industry, on how important is that, because you want more efficient fleets to be operating more efficiently with more efficient fuels? How big an issue is that still for you?
Well, it is still an issue. I think the emissions that the global supply chain and global trade has accounts for 11% of the planet's emission. And for us to deal with that problem remains one of the key strategic imperatives that we have. There may be years where this has more resonance and is more part of the political dialogue, and years where it is less. But it is such a long and complex process that for us as actors in the field, we need to continue to move towards a solution, because we can't change our mind very fast on those things. So we have made some commitments on that. We continue to have those. Obviously, having to sail the long routes around Africa is not helping us meet these targets, but it is something where the transition to green fuel has started across the field and will need to continue to gain momentum in the years to come.
Vincent, terrific conversation. We very much enjoyed speaking with you today, and we learned so much. Thank you so much for joining us. Vincent Clerc with us, the CEO of Maersk. A quick look at what we're seeing on futures as we count you down to the trading session. Futures this morning on the back of green stateside, also chasing some upside. You can see it on the FTSE 100 and on the DAX, seen up about 0.7%. Stay with us. We'll get you warmed up for the trading session.
Elevate your portfolio with JP Morgan's Equity Premium Income ETFs. Now with more flavors, global equities, US equities, and technology stocks. Discover now. Search JP Morgan Income ETFs.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
Good money.
Everything seemed legit until it wasn't.
Good times.
the lavish lifestyle, the houses that they're used to.
is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC. Before they talk to Wall Street, they talk to John Ford and Morgan Brad. Closing bell overtime.
When I did my master's, I was having a concentration in the area of artificial intelligence.
So you're secretly a tech geek?
I wouldn't call myself a geek, but I certainly am very interested in technology.
On the next Managing Asia, an exclusive interview with Singapore Airlines Goh Chun Pong.
I think the most stressful time really during the pandemic was the initial period when we're trying to raise funds.
Looking back, would you have done anything differently?
More of my interview on the next Managing Asia.
Welcome to Squawk Box. If you are just joining us, I'm Karen Cho with Steve Sedgwick, and these are your headlines. Shipping giant Maersk reports a solid beat in the fourth quarter, but flags 2025 earnings will suffer amid macro and trade uncertainties.
If you work on the agility that you need to have to react to trends or sudden shifts that might occur, such as what we saw in the Red Sea last year, then you are actually able to see not only problems, but a lot of the silver lining also.
Danish brewer Carlsberg reports organic operating profit growth at the top end of its guidance, with volumes driven by premium and alcohol-free drinks. The CEO Jacob Orup Andersen discusses the impact of geopolitics.
We're all getting a lot of noise right now around geopolitics, potential trade wars, etc. In the end, how does that translate into the global consumer? And I just have to say, as a company operating globally in 150 countries, we're used to volatility, we're used to this type of noise around geopolitics.
Volvo Cars reports a downward shift in quarterly operating profit and muted retail sales growth, flagging 2025 will be a tough year.
We're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technologies.
And AstraZeneca tops on fourth quarter revenue estimates and issues better than expected 2025 sales guidance, driven by strong demand for its cancer drugs. Let's get up to speed with the Asian markets because we are seeing bounces across the region today. Investors have many themes to digest. We're still seeing the DeepSeek wash up for a lot of the technology plays and, of course, trade tariffs. The Chinese again commenting this morning on its retaliatory tariffs against American companies, from PVH to a biotech company. Well, we've got Japanese stocks 0.6 higher, Hong Kong, China, all tracking in the green, more than 1% in firmer territory. The Kospi trades up 1.1%. So all round, a positive session playing out. European futures also getting a bit of a tailwind from those American markets overnight that were positive. You can see we're chasing some upside, 0.75% on the FTSE 100. So the UK market perched strongly. The DAX also seen up 0.6%, Steve.
Private companies added 183,000 jobs in January, according to ADP. That topped expectations. It was the upward revisions for December as well that were extraordinary. And the figure was largely driven by service providers. It comes after December's print showed growth of 176,000 jobs. Now, this print comes ahead of the non-farm payroll report tomorrow and initial jobless claims today. On the former, forecasts are pointing to jobs growth of 169,000 roles. And I just want to put this in context. We had the weakish JOLTS figure on Tuesday, strong, unambiguously ADP. Every bit of data is slightly contradictory, but still points to a relatively strong market. Anyway, speaking to CNBC, the ADP chief economist, Neela Richardson, forecast a robust number in Friday's data.
The January report for ADP and the numbers that you'll see Friday from the government have been re-benchmarked with a QCW number that it pulls the numbers together for January. And so what I think you'll see from both ADP and on the Friday report is strength ending the second half of 2024 that carried over into the first month of 2025.
And joining us now is Catherine Doyle, investment specialist at Newton Investment Management. Catherine, we've got so many moving pieces at the moment. We just spoke to a series of CEOs that are trying to navigate trade tariffs and what that means for their business. Some are suggesting there's going to be supply chain rerouting, that there's going to be a feature, slower growth, slower volumes in some areas. What are you hearing about the impact and how CEOs are going to navigate this?
Well, I mean, it's certainly going to be challenging. I think there's very limited visibility at this point, and it's clear that the tariffs are, the sort of discussion around tariffs are being used very much as a kind of bargaining chip. So it's hard to plan in that scenario. And I think, ironically, I mean, we know that the administration wants, a weaker dollar. They want lower energy prices and obviously to boost growth. And it does seem that in the near term, tariffs won't have that effect. So you can but conclude that they are being used for bargaining. But it's tough for CEOs, of course.
To that point around tariffs being used for bargaining, there was a view that if other nations simply just rolled over and accepted changes, then this would be great news for America, that it would see US growth and that would be stronger. But at this point, we're seeing very strong position taken. I mean, even the Chinese today picking out targets where they can to send the Americans a message, blacklisting certain companies.
Yes.
We know that technology too has been trapped up, big digital services revenue at stake, and the Europeans looking at some sort of similar idea where they can use various different laws to target technology. If that is the case, what bargaining chips does Trump actually have here?
Well, that's a very good point. I think perhaps he needs to consider carefully, what's kind of coming back in terms of, response to these tariffs. He obviously is flexing his muscles and sort of showing sort of strong cards. But if you look at markets, for example, US exceptionalism is probably peaking at this point. And in fact, you could see some other parts of the market, like Europe, playing catch up. So, yeah, things may not pan out quite as expected, and you're already seeing that. I mean, we've obviously had the news about Europe, the potential for tariffs there. There's already sort of manoeuvring from the officials there. So, yeah, things may not be as predictable perhaps as expected.
And yet, and by the way, lovely to see you this morning, and yet I hear what you're saying about US exceptionalism, and I know for a fact, obviously we've all looked at the fact that Europe is trading at record discounts in terms of if we look at the equity valuations compared with the US. But I see nothing at the moment that says Europe has found the ability to know what the medicine is and take the medicine. And I see very little from US earnings season and from US GDP and from even data like the ADP overnight that says that US exceptionalism is about to end. So I hear what you're saying. Mm-hmm. I would love this continent to get itself into gear. I'll put that more politely than I was thinking in my head. Get itself into gear, but I don't see it happening yet. I see the aspiration, I don't see the action.
Yeah, certainly I think Europe recognises that from a regulatory perspective, there is a certain inbuilt rigidity and sort of structural rigidity that places it perhaps at a disadvantage. And I think it is beginning to address that. These things take time, of course.
Especially because it's Europe.
Yes.
Okay, so we're agreed. Europe spotted the medicine.
Yeah.
It's thinking about taking it maybe potentially at some stage in the future. What about European equities? You say you see opportunities in European equities. I would presume it's European equities that aren't just tied to that European story, they are tied to the global story.
Of course, yes. Yeah. I mean, many of these companies are market leaders, they're completely global. I won't name stocks, no, but that we have in our portfolio some market leading names in sectors like healthcare, for example, some industrials that are really
a cracked windshield can cover
very well positioned to benefit from higher growth in certain parts of the economy. So, it's almost, I think it's for some time now been almost irrelevant where a company is quoted. It's all about how it's managed. Yeah. And the market position.
When the John Elkins of this world or the Agnellis of this world spot an opportunity in Philips on a global basis, maybe that's somewhere, that kind of area, Catherine, without you naming stocks, is what you would look at. You just going to Japan as well. I noticed your point about Japanese bonds and Japanese banks as well. Very, very interesting. Positive yield curve, just finally picking up, maybe, anticipating growth and rates to come. Just give us a bit of a view on Japan.
Yeah, I mean, we think that it's been certainly on the area that we're interested in is the banks, and some of these are trading below book value. So we've been,
welcome to Europe.
Yeah. Well,
so why is that exceptional then? Why, if the Japanese are trading below book value, is that exceptional when the European example is you can buy a very, very cheap price to book European stock and it get cheaper?
Yeah, well, I think you have to look at specific stories. I mean, in Europe, you can still find turnaround stories, restructuring stories, and those are very interesting. So, we would try and source some of those.
Interesting.
Gold, do you want to just give us a quick word on that? Because it's been a fascinating one. We've been covering it too. Market distortions with trade tariffs, a lot of hoarding in New York. Why do you think gold has further room from here?
Well, I mean, we've already seen it move on the tariff uncertainty. It's a long-term secular story, actually. You've got central banks diversifying their reserves out of other currencies into gold. I think, particularly some of the emerging market central banks were quite spooked by Russia having its currency reserves sort of frozen. And you've also got, I think, a certain disenchantment perhaps with fiat currencies and, the desire to be in an asset that's kind of outside the traditional financial system.
And Bitcoin's not cutting it?
Well, Bitcoin is a completely different animal, really. I mean, of course it has an attraction as, again, being a sort of non-traditional asset, but it's much more of a kind of risk-on type asset. We often look at it as a sort of sentiment gauge, actually, to see how the animal spirits are faring. But gold...
It's your new VIX, Steve. You've been looking to replace the VIX for a while. There you go. It's the Bitcoin index.
There's lots of things in this world. Do you know knowledge is about knowing what you don't know?
Yes.
And I know zip about Bitcoin, and I'm very happy in that place.
It's also very difficult to value.
Not if you've got it. If you've got it, it's easy. It's worth a quarter of a billion or a quarter of a million. If you've got it, it's going up, apparently. Yes. They're all very strong advocates of it, aren't they? Man who owns Bitcoin says it's going up. Catherine Doyle, thank you so much indeed for joining us. Investment specialist at Newton Investment Management. Investors watching the Bank of England today as it reveals its policy rate decision, with markets pricing in a 25 basis point cut, the central bank's third since the pandemic. To get up to speed ahead of the BOE's decision, Jenny Reed's done a great article on CNBC.com. Juliana and I will be giving you that decision time from 11:55 GMT. And also do not miss my interview with the governor, Andrew Bailey. What, you mean I'm working a triple shift? Yes, it's true. All those days off in lieu. I'm joking. Andrew Bailey interview, 4 p.m. London time.
Look at your productivity, single-handedly wrestling in the numbers.
Single-handedly, absolutely.
Well, the French government survived 2 no-confidence votes Wednesday, clearing the way for a contentious state budget to finally be adopted. Well, Charlotte is here with more. Charlotte, I just can't get past the fact that no confidence vote was cleared. I mean, we keep talking about them being a major issue for prime ministers and governments.
Yes, you remember 4 prime ministers just last year, but it looks like François Bayrou may survive for a bit longer. Actually, he passed a hurdle that his predecessor, Michel Barnier, didn't succeed, of course, pushing through this first element of the budget. So actually survived 2 votes of no confidence yesterday, meaning the bulk of the budget is now approved. And because he pushed through this with this 49.3 mechanism, allowing these votes of no confidence. Now, a sigh of relief. Everybody seems to be unhappy with this budget. There were a lot of concessions, left, right and centre, but certainly a sigh of relief that there is a budget. And François Bayrou, speaking yesterday, said we have an imperfect budget. It's an emergency step because our country cannot function without one. Of course, remember the multiple downgrades that were put on the French economy, the moves on the French bonds. Certainly this at least puts a little bit of respite there. So this budget targets to cut the deficit to 5.4% of GDP from above 6% for 2024. So it's 50 billion euros in spending cuts and tax increases. Michel Barnier was targeting something closer to 60 billion. So smaller steps there, but they kept the target of bringing the deficit down to 3% by 2029. So again, these votes of no confidence didn't succeed because the socialists didn't support it. And that was the work of François Bayrou and the economy minister over the past few months to try to keep the socialists on board. So they made some concessions. They made limited cuts to healthcare and education to keep them on board. They limited the tax increases to keep the centre right on board as well. So a lot of concessions on all sides. So now we have to wait and see what happens next, because after this, of course, the Parliament remains just as fragmented. So you expect that there will be very little legislation going forward after this kind of agreement on the budget. And looks like everybody will agree to disagree until a potential next parliamentary election in the summer, the first date when President Macron can potentially trigger one. So we have to wait and see. The devil will be the details for that budget. Of course, it relies on the projection of a GDP growth of 0.9%. A lot of economists see that actually it could be lower, closer to 0.7%. This will impact things, and particularly tax revenue, which we know there's been a downfall of tax revenues, quite heavy ones, for a couple of years under the previous economy minister Bruno Le Maire. So they have to watch whether the tax income will still be what they expect there. So all this, a lot of uncertainty is still there, but certainly short term, a bit of relief. There are some ongoing negotiations around a potential adjustment around the pension reform. We know this is a Pandora box in French politics, but that was one of the conditions to keep the socialists on board. So all this still at play, but it looks like at least for a few weeks, we might have a bit of respite there on the French political front.
Charlotte, thank you very much for that. Coming up on the show, Amazon prepares to post fourth quarter results with its key cloud unit in focus. We'll have more next.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
If you're watching CNBC, it's because you want to get an edge, you want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I'm thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
This is what the house looks like when I bought it.
Next on Unlocked, an abandoned old house gets a total transformation, unlocking life at sea, sun-drenched days, turquoise water, and some really tough challenges.
Way more work than living in a house.
And a bit further north, primary school teacher from Texas found happiness and a home in the world's greenest city.
Hi, welcome to our Copenhagen apartment.
Catch it all on Unlocked.
Frank Holland, Worldwide Exchange, CNBC.
Disney topped first quarter profit estimates, but revealed it began to lose subscribers to its Disney Plus streaming service. That is interesting. The entertainment giant posted a 23% rise in net income, whilst revenue increased 4.8%. But Disney Plus subscriptions eased in the quarter, with the company warning that it expected another modest decline in the coming months. The CFO, Hugh Johnston, told CNBC he was satisfied with the overall numbers despite challenges on multiple fronts.
Feel great about the quarter, well in excess of expectations, and most importantly, broad-based growth. The entertainment business came in very strongly on the back of Moana 2 as well as Mufasa, and the experiences business performed very well in excess of where we expected, despite the fact that we were dealing with hurricanes and the startup cost on a ship
Amazon is set to post fourth quarter results later today with attention on its key cloud business AWS and how that performs. The unit has delivered consistent growth in recent quarters, with analysts looking for a 19% growth rate later today. Arjun has more. Arjun, there are two big themes on markets right now. DeepSeek, what that means for AI spending, and trade tariffs. Feels like Amazon is right in the middle of both.
Yeah, certainly in the tech market, there's so many jitters because of the AI story around DeepSeek, but also the market's a little shaken, I think, by AMD, by Alphabet, by Microsoft, by these results we have so far. So coming into this, a lot of pressure on Amazon to really deliver and to deliver above what are at the moment very lofty targets. When you look at what the market wants from cloud, they want to see the fastest growth rate in nearly 2 years. And so when you're coming in with that, Amazon not only needs to beat, but it needs to beat by a long way to calm down some of those market fears. CapEx is going to be in focus as well. Amazon already pledged $75 billion in CapEx last year. It's also said it's probably going to go higher this year as well. Is the market going to accept that commentary from Amazon if it does come out? So these are all the questions swirling. Of course, on the tariff side, when we think about the e-commerce business as well, there are a lot of sellers selling product that is imported from other places in the world, particularly China, on Amazon as well. How much of an impact does that have for the marketplace side of the business? But one of the things Amazon has done successfully is localize a lot of that product, warehouses around the markets that it operates in, so that it can fulfill those next day or even same day deliveries as well. And that's one of the advantages it has at the moment versus some of these new competitors like Shein and Temu and AliExpress as well, who are on that localization journey, but certainly nowhere near on the level Amazon is.
And brokers love it. It could be about the outlook statements. We saw other stocks that brokers love too, from Qualcomm overnight to others, and that was something where we saw some impact in after hours if the forecast was light.
Yeah, it was a very strange earnings report, I thought, from Qualcomm and ARM, because they were very strong. But I think it was what we had seen prior with AMD and with Microsoft and Google as well, around sort of some of those fears in the market and those lofty expectations. I think that's what came through with ARM and Qualcomm. They were very strong results. They were slightly light in some areas, but ordinarily they probably wouldn't have had that kind of reaction.
Yeah, big feature for the market today. Arjun, thank you. And let's push on from one tariff story to another, because Pernod Ricard has cut its sales outlook for 2025 after a disappointing first half performance weighed down by weaker growth in the US and China. Charlotte's here with more. Charlotte, we know that these drinks companies are now trying to work out where and how they send product and whether that product ends up with some sort of trade tariff.
Yeah, and that follows the similar warnings that we had from Diageo earlier this week. They mentioned H1 organic sales here at Pernod Ricard down 4%, and of course they mentioned the continuing weakness in China. The sales were down 25%, so a sharp decline in Martell, so that's the cognac in particular. And also looking forward, they said they see early sign of a very soft Chinese New Year with significant decline in gifting. So they say this will lead to a deeper decline than expected for the full year. And of course, they mentioned the anti-dumping measures that started early December that was expected to heavily impact the second half. And looking at the biggest market, the US, they say things are improving a little bit, but still negative, down 7%. And of course, here again, they mentioned the uncertainty around potential tariffs coming into play if and when the Trump administration decides to put tariffs on the EU. Europe also down 2%. The bright light was India, where their sales were up 6%. Now, in terms of operating margin, it has improved up 65 basis points to 32.1%, but they say on a reported basis it was negative because of forex headwinds. Now, due to all that, they downgraded their outlook. Now they expect low single-digit decline in organic net sales for the full year. They expected a growth previously, and also they mentioned their longer-term outlook has also been downgraded of organic net sales growth between 3 and 6%, from between 4 and 7% previously. They say they're defending the margin, but certainly things still looking difficult, and the uncertainty around tariffs adding to the headache. And in its shares that have been down already 33% over the past 12 months.
Charlotte, the biggest news in luxury this morning is arguably around Gucci, and I don't know whether this is significant or not. You and I both wearing a signature colour of what the creative director of Gucci had launched, really, and that creative director is now gone. So the news flow this morning that Sabato De Sarno has been removed from the business and no longer the creative director over at the flagship designer.
Yeah, it's really the musical chairs of creative directors that continue between all the fashion houses. After the lull that we see in luxury, they try to revamp things and bring back consumers, bringing maybe some new styles and new flavor. And here with Gucci, it is a shock announcement because his first collection was presented only in September 2023. And normally that means some of the collection products actually hit the stores only much later. So many of the maisons allow a creative director to kind of spread their wings to see if there is an impact. So the fact that he's ousted so quick, the results for the full year for Kering haven't been released just yet. Of course, Gucci met the bulk of their profit. So this could be a sign, that things are still not looking very good. We haven't seen an uptick just yet in demand for Gucci
this
products.
This is something you and I are discussing. Quite luxury in some of these players equals boring. I mean, they had an era where there was the Gucci effect and the clothing was fashion meets luxury. Now all we're seeing is a ton of monograms that is very described as quite luxury. I think the consumer is bored. The consumer is over it. And at a higher price tag, without the Chinese buying and other key markets like Russia also a little bit quieter on their spending, it just means that you're not getting the same volumes at a higher price point.
And so maybe too much of a change in style, the flamboyant style that we had under Alessandro Michele, the previous creative director that was hugely successful. Maybe the shift was too drastic all of a sudden with, as you're saying, a price tag that has increased quite dramatically. So doing a change of style and a change of price altogether so quick maybe has put the consumers off for a bit longer.
Oh, well, we're going to be watching Kering stock, and I've got to say it's underperformed LVMH over the past year, down down 37% roughly versus 12% off LVMH over the past year. So you can see the discount that stock has been trading on versus the bellwether in the space. Let's take a look at what we've got on futures as we get set up for trade. A couple of big stocks to chase, of course, for the market open. A lot of earnings as well, so that will have some sort of impact. We were talking to Maersk this morning. We're talking to Carlsberg. AstraZeneca's been out with numbers, so it's been busy this morning. And so far, we're chasing a little bit of upside, particularly on the FTSE, actually. So we'll bring you the numbers next.
CNBC. Live ambitiously.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
In addition to hedge funds and registered advisors, Interactive Brokers also serves individual investors. We give you all the tools and technology we built for our institutional clients for free. Let Interactive Brokers assist you with your market goals. The best informed investors choose Interactive Brokers.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create, it's so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart, okay?
Squawk Box, weekdays.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. cnbc.com/technology.
Welcome to Squawk Box. It's 8 a.m. here in London, 9 a.m. CET, and stock markets across Europe are opening up for trade. So far, the signals are positive for the start here. We are chasing some upside, particularly on the UK stock market and on Germany. This on the back of green from the United States markets. And as we digest a lot of big earnings news from corporates, some of the so-called granolas here in Europe that investors have been keen on chasing. But at this point this morning, it's Maersk, it's AstraZeneca out with numbers, and Carlsberg. So the reaction this morning on the broader market is positive. We've quickly scooped up, as you can see, just over 0.4%, Steve.
Yeah, unbelievably fascinating the times we live in. But the volatility at every level, whether it be geopolitics, whether it be the economics, whether it be at the corporate level within the company numbers we're seeing, it's a sight to behold. Let's go through those three factors. Of course, geopolitics, dare I say it, Trump's style of doing business, whether you like it or not, whether you think it's good for America and the world or not, that's irrelevant. His style of doing business is without doubt adding volatility to global economic projections and global trade relationships. And then you look at the economic data level as well, which is less clear about the volatility. But let me give you a great example. In the last 48 hours, we've had key jobs data on JOLTS, which is the labour turnover survey in the States, and we've had key jobs data from the ADP, which is the private sector study. One, the former, JOLTS, said, whoa, hang on a second, this labour market's getting a little bit tighter. There's less jobs available at any stage than we've seen in the last couple of years. So you think, oh, okay, maybe the market's not so good. And then you see the ADP data, and it knocks the ball out of the park. And the revisions knock the ball out of the park. Very strong private sector growth, which means we've got initial job lists today, we've got payroll figures tomorrow. So on every one of these pieces of data, you're seeing conflicting data. So you've got the geopolitics, which is volatile, you've got the economic data, which is volatile, and even at the corporate earnings front as well, there's so much in there to like and dislike in so many of the numbers. Case in point, Disney, for instance. Disney, fantastic numbers on the back of Moana 2 and Deadpool versus Wolverine, and I think it was Mufasa was the other movie as well. And yet you look at their streaming numbers, the big growth of Disney Plus TV, and it was really underwhelming. No growth in Disney Plus subscriptions as well. So you see what I'm saying? There's a lot of mixed data within every piece, which is making it more difficult for you to make these decisions. In the meantime, basic resources up 1.9%. Wow. Financial services, 0.8% higher. Healthcare and media also pretty positive. Let's have a look at the sectors which are declining. What have we got in negative territory? Only autos today. And we did have Volvo numbers, and Volvo's Jim Rowan was speaking to Karen and myself earlier on. And a very obviously cautious view of 2025 on both the profitability front and indeed on the total volumes front as well. Elsewhere, pretty flat on household goods, real estate and utilities. I'll show you one or two bourses before Karen picks up the baton. And the FTSE 100, obviously on the back of that basic resources story, we are so heavy on basic resources, 0.7% higher. Solid gains over on the Xetra DAX, more tempered gains on the CAC 40 and the FTSE MIB. Let's have a look at four more bourses for you, including Lisbon, the Netherlands, Switzerland and Madrid as well. And again, it is a solid bunch of incliners, although unspectacular, across the board. Karen.
A lot of earnings reaction and the top movers this morning. Actually, Carlsberg, when it opened up, was right towards the top of the stock strip 600, just slipping off that list. But you've still got Maersk in reaction to numbers, and that is a solid response, 6.5% pop. Siemens Healthineers, we spoke to the company this morning as well. It's also picking up some steam, more than 5.5% to the upside. And Ørsted, you can see, are bouncing 6.6%. To some of the losers, real underperformers this morning. And again, our numbers, ING down 3.5%. Vestas at the other end down 3%. And you could see Kering was just on that list but slipping off as we see the market digest the news about the creative director over at Gucci being removed. You can see the stock there down 2.8%. I want to take you to Carlsberg and what has been a positive reaction this morning. It has posted annual organic operating profit at the top end of its guidance range. That came in 5% or 6% higher on the year, while volumes missed analyst expectations. Just hard to see what that number was. Let's get out to Sylvia for more. Sylvia.
Very good morning, guys. Indeed, thus far, it seems investors are reacting quite positively to the latest numbers from Carlsberg, and indeed, they're providing a little bit of a momentum for the stock, which up until today's market open was down almost 20% over the past 12 months. So looking at these figures, we saw Carlsberg beating on top bottom lines for their full year numbers, and indeed, they actually met their guidance for 2024 with an organic operating profit growth up 6%, so at the top end of their range. However, though, there are question marks here about 2025. Their new guidance for this year is actually lower from what they delivered in 2024. So they expect a softer consumer really in 2025. They are actually highlighting that in Asia, and particularly in China, but also in Western Europe, there are pressures on the consumer. When you think as well about some of the other positives from this statement today, the CEO was telling me earlier that they're very much focused on their growth categories, so premium beer, non-alcoholic beer, and what they also call beyond beer. So all of these three categories are where the company is focused on. They believe there's a strong potential in this part of the market. Also, though, he mentioned the fact that they are expecting to increase margins in Europe. This is important because in countries such as the UK or France, there has been pressures on the business. However, the CEO is confident they can actually reverse that trend. All in all, though, we also need to think about the geopolitical scene here. We heard from Diageo earlier this week being very vocal about how Trump tariffs could impact their business. But Carlsberg, however, didn't really sell into the United States, so they do not have a direct impact here from that change in policy stateside. However, the CEO told me earlier today that they are not relaxed about trade conflicts.
We're all getting a lot of noise right now around geopolitics, potential trade wars, etc. In the end, how does that translate into the global consumer? And I just have to say, as a company operating globally in 150 countries, we're used to volatility. We're used to this type of noise around geopolitics, etc. So for me, it comes down to how does the consumer react?
So let's talk about that consumer, because one of your rivals, Diageo, earlier this week had actually very strong comments on how they could be impacted by tariffs coming from the United States. Of course, Carlsberg does not sell into the U.S., but are any sort of ramifications from these trade conflicts on your business?
So when you look at it, as you say, we sell very little product into the U.S., so we don't get that direct impact as others will do. On the other hand, we're not relaxed about it because it can have secondary impacts on many markets, and there can be also unforeseen impacts that we haven't thought of at this stage. But when I look at it globally across our portfolio for 2025, it is not the biggest concern that we face. It is more around how does global consumers react to now 2 to 3 years of higher inflation than ordinary. And we will see how the broader picture around tariffs, global tariffs and trade wars play out. I have to say we are used to facing this type of volatility, and as a company not directly exposed to the US, I think we take a balanced perspective on it.
So investors this morning also perhaps looking at the fact that Carlsberg has completely exited from Russia. They've done that now successfully, so they can close that chapter. On top of that, they also concluded a deal with Britvic in the UK, so they can actually now work on the synergies there and deliver on the UK market too. So let's see how the shares will continue to move throughout the rest of the day. But indeed, this early reaction does suggest that investors are quite happy with the message from Carlsberg this morning.
Sylvia, thank you very much for bringing us the latest there as we chase market reaction. And speaking of stocks on the move, take a look at the shipping giant Maersk. We've seen some movement in the stock price on the open. It posted a beat on the top and bottom line in the fourth quarter. EBITDA, this number hit $3.6 billion on revenue of $14.6 billion. Let's take a look at the stock. This is the German listing. Don't forget we were showing you its core listing on the market open. We asked the CEO whether the company is seeing a structural shift within global trade rather than just political noise.
Trade volumes continue to increase. Asia continues to be the factory of the world, and the share that China has in traded volumes continue to creep up slowly. So So while there is a lot of talk about this, it is actually very complicated to do. The global supply chain, as that the world relies on today, took about 20 plus years to get built, is very integrated, it's very long, has very multiple tiers of different suppliers contributing to the finished products that you and I go buy in our local department store. And for that to change, it does take some time. So while we're seeing some movements towards more nearshoring in Turkey, in Morocco, or in Mexico, near some of the consumer markets, the overall trend is still of a very resilient global supply chain that copes with this political pressure more than it really structurally changed so far.
Gucci has ended its collaboration with designer Sabato De Sarno just over 2 years after he was appointed creative director. It is the latest in a flurry of departures from top fashion houses and comes amid weak sales in China. Kering, the parent company of Gucci, is due to report results on Tuesday, and I think this is sending a signal to the market. As a result, the stock down heavily towards the bottom of the stock strip 600. Pernod Ricard cut its sales outlook for 2025 after a disappointing first half performance. This weighed down by weaker growth in the US and China. Well, Charlotte is here for more. Charlotte, this stock, though, on the move up, and it has been a steady decline, though, in recent years. Last 2 years has been going in one direction.
Yes, a lot of the buy news probably already priced in the stock down more than 30% over the past 12 months. But these warnings, there are some concerns on weaker consumer demand. They say organic sales down 4%. So they see some improvement coming into Q2, but they say things are still being very weak in China, where there the sales were down 25% in the first half. They mention a sharp decline in Martell Cognac in particular, and they also talk about early sign of a very soft Chinese New Year with significant decline in gifting. This will lead to a deeper decline than expected for the full year. Now, they mention also the anti-dumping measures that started in early December on Cognac. You remember, as a retaliation from EU tariffs on Chinese EV, and they said that will impact heavily also the second half of the year for them. Looking at the biggest market, the US, we see an improvement, but sales were still down 7% in the first half. They mentioned the uncertainty around potential tariffs that could come into play, maybe from the Trump administration on the EU, so that brings a level of uncertainty there. Europe down 2%. The bright spot was India, where the sales were up 6%. So they say operating margin 32.1%. That's 65 basis points higher there, but on organic basis, but on a broader basis, it was negative due to some forex headwind that they see improving actually in the second half. So all this led Pernod Ricard to downgrade their outlook for the year. Now they see they've said they will continue to defend their margin, but they see now a single-digit decline in organic net sales for the full year of 25, where they expected some growth previously, and they also downgraded their medium-term outlook for 27 and 29, with organic net sales growth on average up 3 to 6% from 4 to 7% previously. So here again, they see things difficult, weaker consumer demand, and the potential threat of tariffs being a double whammy for them. But we see the stock in the green this morning, up 2.8% on the CAC 40.
Charlotte, thank you very much for bringing us the detail. Let's get to AstraZeneca, also on the earnings beat today. Its fourth quarter revenue and earnings estimates were above some of the expectations. Now, with the pharma giant's full-year sales outlook also coming in ahead of expectations, the company also said it expects to increase capex by about 50% this year. The stock bouncing at 3.25%. Zeman Healthineers, we also saw as a top mover at the start of the session. It is holding on to well over 6% at this hour. The company beat on revenue expectations in the first quarter and confirmed its full-year outlook. The German health tech company posted comparable revenue growth of nearly 6%, with US revenues increasing 16%. And one of the big interviews we had today was also with Volvo Cars, and this is the stock reaction. Slight improvement, but 0.2 in the green. It reported a slide in fourth quarter operating profit of 3.9 billion Swedish crowns against 5.4 billion a year ago. The car maker warned it expects a challenging year ahead, flagging it will be hard to reach the same volumes and profitability in 2025, and said it will target internal cost actions to improve efficiency. Of course, that is the listing in Germany. We spoke to the CEO, Jim Rowan, and told CNBC he's satisfied with the overall performance despite the challenging environment, but flagged more uncertainty ahead.
In 25, I think we're going to see that turbulence increase. And the way I frame it up is I think we're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technology, so we can modulate, if you will, our models into each of those markets. And then we're going to see this big shift to technology beyond electrification. So that software, silicon, connectivity and data, that's going to become a lot more profound in the products 25 and beyond.
SocGen's full-year net income surged 69% to 4.2 billion euros, while annual revenue growth exceeded the bank's target at 6.7%. We're seeing a fairly decent reaction today. That stock got close to 7%. The French lender said it will target revenue growth of more than 3% this year and cut costs by more than 1%. Some of the banks this season really surprising investors. It was Santander yesterday where we saw a decent reaction. This is very strong too from SocGen. Let's see what ING is doing just to round it up for you. The stock is actually going the opposite direction, down close to 4%. It has missed profit expectations in the fourth quarter, posting net income of 1.15 billion euros against expectations of 1.29 billion. It came as the Dutch bank booked much higher loan loss provisions of nearly 300 million euros.
Rightio, coming up on the show, the Bank of England is lining up its third rate cut since the pandemic, but that decision may not be the main event. We'll have more next.
Standard Chartered Global Private Bank, where your life's work lives.
For me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there is something at stake and asking them fair but tough questions in which their answers are important. I could not imagine covering anything else.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
Before they talk to Wall Street, they talk to John Ford and Morgan Brandt. Closing bell overtime.
Investors are watching the Bank of England today as it reveals its policy rate decisions, with markets pricing in a 25 basis point cut, which is the central bank's third potentially since the pandemic. Hugh Gimber joins us, global market strategist at JP Morgan Asset Management. Hugh, well, I'm going to spend the rest of my day within the bowels of the Bank of England. Now, I actually really enjoy doing it as well. I get a chance a couple of hours to go through the NPR as well. What do you think I'm going to learn from the monetary policy report? The actual decision, I think we all know it's going to be 25 basis points cut, or we'd be very surprised if it's not. But in the NPR, the report that we're all going to be pouring through, what's the most important thing I can learn?
So there's one word for that report to look out for, which is gradual. They've been talking about this gradual path of rate cuts, which they've previously defined as a quarterly pace. Now, this is getting harder, I think, for the Bank of England. I agree that they are highly likely to cut rates today, but when you look at the macro backdrop, you have consumer inflation expectations picking up, you have businesses telling you that they plan to raise prices off the back of the budget, you have inflation set to re-accelerate in the second half of this year. So to me, if the bank's sitting down and just looking at the macro today, not thinking about the fact that they're basically boxed in by the market fully pricing a cut, it could be a very different discussion. So what I'm looking to learn is not so much about today, but rather how committed are they to this quarterly pace thereafter. I think there are some risks with cutting too quickly.
Yeah, it's great. Someone will give me £1,000 if I find the word stagflation in there as well, because I don't think they're going to want to talk about stagflation. I certainly might mention it later on. But your gradualism, or gradual, equals, as far as I can see, this phrase maximum optionality as well. They're going to give themselves as much wiggle room as possible. The problem is, I do believe that other word I mentioned, stagflation, it's not here and now, but it's looking more and more likely, i.e. prices looking firm, but underlying activity coming off quite aggressively.
So I'm not convinced of that definition of wiggle room. I think actually if you want to leave yourself wiggle room, you don't cut today. You simply say, we're looking at the data. I mean, of course they're going to, right? The market's fully priced it. But if they're going to see inflation re-accelerating in the second half of this year, and if their mandate is all about inflation, it's not a dual mandate, they're not trying to target the labour market, they are trying to control inflation expectations. And inflation expectations are clearly moving higher. So if you want wiggle room here, you say, actually, we're holding back.
Equals fly in the ointment. You're just trying to chuck it in there, aren't you?
No, I'm sorry, but you look at the macro backdrop, I do not see businesses responding to weaker growth with weaker prices. And so all of the calls this year for a Bank of England that needs to get much more aggressive are effectively saying as growth comes down, which I think it will, inflation is going to follow. And that for me is not what we're seeing in the PMI surveys. It's not what we're seeing in the consumer data. So if this was a bank looking to maximize wiggle room later in the year, there would be no harm today, other than what the market's already priced, in saying, you know, we've done a couple of rate cuts so far, and we know that if growth slows and it does bring inflation down later in the year, then we can move. Think about the other way around. If they let inflation expectations de-anchor, the pain that they would then have to inflict would be that much greater. So it would be an extremely unpopular move not to cut rates today, but it might actually be the softer approach.
That's the great point about prices not coming down the pass-through that businesses, corporates still think they have in the UK. What's behind this? Is it still a demand story, or is it actually supply chain issues in the backdrop?
So the labour market, I think, is the key story here. Look at labour participation in the UK relative to the US or the Eurozone. We've had nowhere near the same recovery in the participation rate that's happened elsewhere. Think about the US. You know, wage growth has come down from 7% to 4% as a result of a big boost to labour supply, primarily coming from foreign-born workers. In the UK, the labour market tightness is that much greater, and therefore businesses are saying, in response to the budget, the cost of employment is going up. They're therefore going to probably lay off more people this year. The unemployment rate is set to rise. But at the same time, they're saying, well, we're going to have to pass on these higher costs to consumers to maintain our margins. So I think it all really comes back to the tightness of the labour market, which is where the bank, in my view, will need to see much clearer evidence of weakness in the second half of this year to justify that continued pace of quarterly cuts.
Help us out with the members over the MPC. How many hawks are out there? Yeah. Who's going to split from the rest in the pack today?
I'm spending my whole last 48 hours looking at this.
I'm sorry, I should have just directed the question.
No.
Dying to say something on this.
No, but it's only Catherine Mann who's going to hold out, isn't it?
I would assume so. Yeah. I think she does dissent.
She'll probably go for a hike. She's in the Hugh Gimber school of inflation.
At the other end of the spectrum, you've got Dingra, right? It's possible that she might vote for a 50 basis point cut today. And then really, I think you're looking at the broad core of the committee. So could it be actually more of a 6-3 vote, leaning a bit more hawkish? I'm not expecting that. I think it's 8-1. But this is where the devil's in the detail, right?
So Green, Pill, Mann hold, the rest of them go for a cut?
I think it's possible.
Dingra 50 basis points, just to chuck it in there?
I mean, look, this all comes back to how do you balance weaker growth data against stronger inflation? And that's effectively what we're seeing in the UK much more clearly. But it's true everywhere at the moment. It's true with tariffs. How do you gauge this difference?
I was going to ask you about that. So we haven't really gauged the tariff impact because the UK is slightly different on services.
Yeah.
But could there be something forthcoming from Trump? Where would it be? And how would any response be from the government, let alone the central bank here?
So I completely agree with you. The UK is less exposed to tariff risk. It has roughly half the manufacturing contribution to GDP that you have, say, in the Eurozone. So far, discussions between the UK and the US seem to be a little more friendly than the US and the Eurozone as well. However, if we're facing a backdrop of global goods price inflation in the second half of the year, Again, not a given, but it's a potential thing for the Bank of England to consider. I come back to this wiggle room point. Look at the Fed at the moment. They're simply saying, we cannot say for sure whether this is a bigger hit to growth or it's going to put more upward pressure on inflation, and therefore we're on hold. And we're on hold for the foreseeable future because we want to see much clearer evidence in the data to determine whether this is more of a growth shock or an inflation shock. The bank is also unsure.
Can I ask you about the British banks? Because we've had a context where there's been a fairly decent net interest margin for some of these players. But now as we talk about cutting and the profile of growth, I mean, that's not a strong growth profile we're talking about in the UK. It's actually talking about a lot of pressure on consumers. So where is the loan growth in that context? Where's the deposit growth? You know, a lot of moving pieces. Do the banks look as good as they did 12 months ago?
So growth, I agree, is weak. The consumer I still see in good shape, right? Part of the problem that growth is slow is because consumers are still sat on very large pots of savings, and we're seeing actually household deposit growth re-accelerating over the past 6 months or so. So the challenge for the consumer is more of a confidence issue. It's not a balance sheet problem, and therefore I don't see the weakness in consumption data feeding through into too many challenges for the banks. It's simply that people have put away a lot of savings during the pandemic. It's true in the UK and the Eurozone as well. And now with still weak consumer confidence, we're not seeing that flow back into the economy in the same way that we have in the US.
It seems a no-brainer given everything you've said about the bond differentials and why you like the Eurozone bonds over UK gilts as well. I mean, you pretty much laid out the case as well. But is there anything more nuanced within the Eurozone bond market that you particularly like?
So a couple of points there. I think where we're talking about this uncertainty between the growth shock and the inflation shock, in Europe, that for me is much clearer, which is that tariffs being raised would be a far bigger hit to growth than they would be for inflation. And therefore, we see the ECB really on autopilot down to 2%, with much bigger asymmetry to the downside if you get that trade escalation. So that leaves Germany. I think the periphery works here as well. Places like Italy, Spain, economies in decent shape with a little bit of extra income on offer, and with the ECB working much more in your favour.
Hugh, why don't I just sneak one more in? Why hasn't the FTSE 250 priced in all of the concerns that we've all been very clear in watching since the October budget last year? You still have a preference for the big caps rather than 250. Surely the 250 is priced in the negativity already.
So a couple of points. I mean, first of all, the FTSE 250 is much more international than people accept. So still 50% of revenues overseas. It's often talked about as this highly consumer sensitive market. The preference when it comes to the large caps, in my view, is much more about sector composition. It's the banks, it's the energy companies, and you think about the diversification that that gives you at a global level when many investors are long the US, long tech, long growth. That for me is the bigger case of the FTSE in terms of that composition.
Got to leave it there. Lovely to see you, Hugh. Thank you very much indeed for that as well. Hugh Gimber, Global Market Strategist at JP Morgan Asset Management. And as we mentioned, Juliana and I, there's lots of Annas in there, we'll bring you that decision from 11:55 GMT. And don't miss my interview with the Governor, Andrew Bailey. We'll do that at 4 p.m. Coming up on the show.
Plenty ahead still. Our next guest says that resolving the growth dilemma is the urgent task of our age. We'll speak to author and economist Daniel Susskind. That is coming up next.
CNBC. Live ambitiously.
Sponsored by Sponsored by
We speak to the world's most influential people.
I love what I do and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
RFK Jr. has a good shot to be our health secretary and that's pretty much the only shot he has.
Jimmy has Bill Gates with
I could jump it. I could jump it.
plus Lauren Graham
Thank you.
and Japanese breakfast this weekend.
Live from the New York Stock Exchange, Halftime Report, CNBC.
Busy day here on Squawbox. These are your headlines. Maersk shares float, very good, float to the top of the Stock 600 after the shipping giant reports a solid fourth quarter beat. The CEO, Vincent Clerc, is upbeat despite macro and trade uncertainties.
If you work on the agility that you need to have to react to trends or sudden shifts that might occur, such as what we saw in the Red Sea last year, then you are actually able to see not only problems but a lot of the silver lining also.
Societe Generale fourth quarter profits double amid a rebound in its retail banking unit, whilst full-year revenue tops targets and the lender pledges payouts at the top end of expectations. Danish brewer Carlsberg reports profit growth at the top end of guidance, with volumes driven by premium and alcohol-free drinks. The CEO, Jakob Orup Andersen, discusses the impact of trade tensions.
We're all getting a lot of noise right now around geopolitics, potential trade wars, etc. In the end, how does that translate into the global consumer? And I just have to say, as a company operating globally in 150 countries, we're used to volatility. We're used to this type of noise around geopolitics.
And Volvo Cars reports a downward shift in quarterly operating profit and muted retail sales growth, flagging 2025 will be a tough year.
We're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technologies.
European stock markets have been trading for half an hour so far, and some of those promised gains on futures this morning as we were counting down to the open, translating very quickly on the market open today. The FTSE 100 up more than 0.8% and up more than 0.6 on the DAX out of Germany. So it is certainly a decent old start this morning as we digest earnings. Still the wash up from tariffs. And of course, as we count down to Bank of England rate decision today, what we've got at the chip level, we are trading up by just over 0.5% on the stock Ship 600. The sectors in play, it's resources, real cyclical trade this morning. Banking stocks up more than 1%. SocGen, the latest to report numbers, ING too. Healthcare, we're up 0.9. We're talking to Siemens Healthineers this morning. And don't forget the other big reporters today. Some of them were yesterday from Novo Nordisk to GSK, but we've got AstraZeneca today. So it's been a pretty busy window for the last couple of days on earnings out of the sector. Financial services trade higher. To some of the sector losers where we're seeing, even on upbeat day, stocks underperform. And it's in autos. We had that warning this morning from Volvo Cars that some of the discounting in the Chinese market will step up to the premium segment there, where it's been mostly mass market, and some of that could spill across to the European and US markets thanks to the pressure around transition. So real estate, another area that's somewhat soggy this morning, and utilities. Steve.
Brilliant. Sorry, I was just talking to our next guest about growth, and my goodness me, what a conversation we've got for you. Private companies added 183,000 jobs in January, according to ADP, topping expectations. Now, that figure was driven largely by service providers, comes after December's print showed upwardly revised growth of 176,000 jobs. ADP's jobs print comes ahead of Friday's key non-farm payroll report, with forecasts pointing to jobs growth of 169,000 roles. Speaking to CNBC, ADP chief economist Neela Richardson forecast a robust number in Friday's data.
The January report for ADP and the numbers that you'll see Friday from the government have been re-benchmarked with a QCW number that it pulls the numbers together for January. And so what I think you'll see from both ADP and on the Friday report is strength ending the second half of 2024 that carried over into the first month of 2025.
Well, our next guest joins us to discuss his critical theory on growth and dilemmas that come with it in today's age. After publishing his book, Growth, A Reckoning, last year, Daniel Susskind joins us, economist and author of Growth, A Reckoning. Daniel, this is beyond fascinating, and I understand that what we were talking about off camera was the fact that Mr. Obama put it on his reading list, and ergo you had a big blip in sales.
That's right, yes, at the end of last year, yeah.
Right, give us the basic premise of the book.
There are very few things that politicians agree upon today, but one of them is that we desperately need more economic growth. In the UK, for instance, public services backlogged and broken, worklessness rising, average real wages haven't really risen for the last 16 years, their worst stretch since the Napoleonic War. But if only the problem were as simple as that, because growth is not only associated with almost all the great triumphs and achievements of our societies, but it's also associated with many of the greatest challenges that we face as well. Typically it's associated with climate change, the idea that we're growing towards an ecological catastrophe. But the argument of the book is that actually it's also associated with many other challenges as well. Yeah. Growing inequality, the destruction of local places and communities, encouraging us to chase after technologies like AI that have disruptive effects on work and politics. Yes. It's not clear we can control. And so we face this dilemma, this feeling of being pulled in two opposite directions at the same time.
I mentioned to you off camera that I have spoken to two of the people who are concerned about the growth model, and that is David Attenborough. I've seen it, I think it was at COP21 in Paris, and Greta Thunberg I've seen at the World Economic Forum and had a very long conversation with her as well. Why are they wrong about the dangers of the growth model, or are they right?
Yeah. I mean, so what they get right is that we cannot continue as we have in the past. But what I think they get wrong is the idea that the way of resolving this challenge is to press pause on growth, or even to actively go into reverse to try and shrink our economies. I mean, I argue in the book, I think this would be, if we were to do that, it would be one of the greatest acts of self-harm that humankind could inflict upon itself. It would be a complete tragedy. And so the book is all about, well, how do we...
Human harm, but planetary gain, or not?
Well, I mean, the argument of the book is that you don't have to choose, that what we ought to be doing is not saying more or less growth, but how do we get a different type of growth? Yes. How do we change the type of growth that we pursue? How can we be sort of ambitious and bold? And again, not just with respect to the damage that growth does to the climate, but also how do we get the growth that doesn't lead to widening inequalities in society, that doesn't destroy particular places and local communities and industries which are important sources of meaning and purpose.
So Daniel, on that note, is President Trump embracing that kind of strategy? I mean, it's very different to the Biden administration. Yeah. He's taking control of the reins and he's promising to bring back industry to home, using technology to do so, and putting in key appointees that are looking at the portfolio in a very different way. And of course, Robert F. Kennedy is one example, even in the health space. What sort of pollutants are we putting out into the environment? Very different approach. Is this an element of what you're talking about, a completely different end of the spectrum?
Yeah, no, it very much is. The sense that there is a tension between pursuing a particular type of growth and a particular sort of growth through globalization, and then wanting to protect particular industries and particular places, not only because work's an important source of income, but also meaning and purpose and direction and structure and community. And one of the arguments of the book is that's a sort of a tension between growth and something else that we might care about that we've perhaps ignored for too long.
You mentioned AI, but AI is unstoppable. We're seeing it in terms of the huge amount of money that Silicon Valley is throwing at the technology. We're seeing it at the minimal amounts that the Chinese are throwing at the technology by coming up with creative solutions. How do we use the technology to achieve the strategy that you're talking about with degrowth? Is it possible to use the technology in a positive way?
I think so. And this is, I'm very interested in the impact of AI on work and society. I think it's important to recognize that technologies like AI can have often have two very different effects. So there's an issue about what AI does to the availability of work in society, and that's something I've been interested in for some time, the availability of good work. But then there's also the impact of these technologies on politics, on democracy, and there's sort of two different. But if you take the the impact of technology on work, it's true that there are lots of ways in which these technologies might substitute for people, that might replace them at the work that they do. And those are the sorts of examples that we often hear about. Diagnostic systems that can outperform doctors, systems that can craft a tighter legal argument than a great advocate. But it's also the case that these technologies can complement human workers, that they can in some cases make people better, more productive at the work that they do. And you might say, well, if that's the case, what we ought to be doing is trying to encourage people to develop and adopt technologies that complement workers, that help them, rather than substitute for them. And so, practical example, every single year since 1981 in the US tax system, the effective tax rate on hiring a human worker has been higher than using a machine. In other words, at the margin, there's a strong incentive to develop technologies that replace workers rather than help them. And so you might say, if you're a policymaker or a politician, well, perhaps that's the sort of thing we ought to be thinking about when we think about the design of our tax system.
Toyota was alluding to the high cost and the lack of personnel the other day, actually, and why it lent towards robotics and robotics rather than automation. But in terms of where the profits go, and I think this is fascinating, this is one of the Davos conversations we're having, that there was a promise that with the combination of all of these technologies, that very low-skilled economies could actually improve their lot thanks to AI. Now as we progress, some of those nations are just not sure. They're worried that the technology is coming through from other nations, and therefore it's another version of the profits leaving their nation, almost like the resources being taken out of the ground and then put onto a ship and sent elsewhere. Almost the same. You build AI and you rely on this technology, but those profits then depart the country as well. So how do we avoid that?
That's right. And I was at Davos this year, and I was, those conversations were very interesting. I mean, I think part of the issue is it sort of depends upon what standpoint you take. If you take the standpoint of workers, then I think the impact of technology is quite challenging, quite threatening, and we face really difficult questions as policymakers about how we provide people with the skills and capabilities to do the new work that has to be done. But if you take the point of view of consumers, of users of these technologies, then I think the story is far more exciting, particularly in the parts of the world that we're talking about. If you look around the world, there really is a sense that our traditional educational institutions, legal institutions, financial institutions, they're creaking. Not enough people have access to a good healthcare system, a good education system. They don't know what their legal entitlements are. They don't know how to manage their financial affairs. And I think the promise of a lot of these technologies, particularly in less developed parts of the world, is an opportunity to provide far more access to the sorts of expertise that in the past might have been only available to a very privileged and lucky few people in more prosperous parts of the world. You can think of a medical system developed at Stanford recently can diagnose whether a freckle is cancerous as accurately as leading dermatologists. There's now the promise for anybody with a smartphone anywhere in the world, if they have access to that system, to have access to the kind of expertise that in the past would have been an expensive consultation on Harley Street. So there's a sort of, there's an issue I think about whose shoes are you in? Are you thinking about workers or are you thinking about users? And the opportunities and threats are quite different.
Daniel, I mean this is a compliment, but your work seems to complement that of Yuval Noah Harari as well. We're kind of looking at where we've come from, how we've used technology, how we've used industrial and agrarian revolutions, how the politicians and business leaders have used it, and whether it has benefited the broader populace as well, or actually been to our detriment as well. Which brings me to the question which I'm sure you were asked, or sure you tried to answer in Davos as well as elsewhere is, and I'm sure it's in the book as well, is, well, who's listening? Because the modus operandi is pretty enfranchising for those billionaires who want to get richer. But for the rest of us, I fear that we are missing out potentially. And that's why people like Trump are elected as well. Who's listening to your thoughts about the model going forward?
Well, one of the big arguments of the book is exactly what you're describing, that many of these tensions, trade-offs between growth and other things that we might care about, the environment, the level of inequality in society, the availability of good work in local industries and flourishing local place and communities, those trade-offs have been neglected for too long. They've been handled by economists. It might sound like I'm shooting myself in the foot, but economists and technocrats and bureaucrats, and the argument of the book is that we have to try and push more of these conversations about what we value as a society down to politics.
You know, I can see certain political elements, certainly stateside, and certainly amongst our viewers, who are going to say, that sounds like a form of communism to me. I know it isn't. You know it isn't. But how do you get a debate about equality to where it needs to be?
Well, so one of the arguments of the book is that at the moment we don't have the sort of political institutions to really support that kind of debate and discussion. And I take courage from the rise of what are known as sort of mini publics, things like citizens' assemblies, citizens' juries, citizens' panels, where people come together to debate very difficult issues around the world time and again. Whether it's euthanasia in France, abortion in Ireland, nuclear policy in Korea. These are really, difficult, meaty, not technical questions, but moral questions about what we care about as a society. And the place for them is not government, it's not treasuries, it's not statistical offices, it's politics.
Fascinating.
Can I ask very quickly about Europe and where it stands in this context? Because I think Europe thinks that it's got a very strong moral compass and it's doing the right thing when it comes to climate change and a lot of these issues. But then there's this absolute dismay and frustration about the growth rates and paying for some of these services. What does Europe need to do now?
Yeah. I think one of the really striking stories since the great financial crisis is this divergence in the sort of, exactly as you're describing, the sort of the fate of Europe and the UK as well, and the fate of the US. Sort of just very different productivity tracks, very different growth tracks. And when you look for why that is, it seems to me the most compelling answer and the simplest answer is the US technology sector. The US has had this technology sector that has carried their economy, and that just hasn't existed in Europe and the UK. And so for me, in thinking about how we generate growth in Britain, in Europe, we need to be thinking far less about doing big, impressive things in the material world, building more houses, building faster trains, building wider roads. And instead, we ought to be asking, how do we generate more ideas? How do we innovate? How do we become a more creative, technologically capable society? That, for me, is where the future of growth lies.
Fascinating. Daniel, I think we both very much enjoyed the conversation. We tried to let it breathe. I think it's just absolutely fascinating. Daniel Siskin with us, the economist and author of Growth, A Reckoning. We are going to take a quick break. ARM and Qualcomm on the radar, both disappointing investors with their guidance. More after the break.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Can't miss reporting that impacts your money now. Be here when the opening bell rings. Squawk on the street. CNBC.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
Disney topped first quarter profit estimates but revealed it began to lose subscribers to its Disney Plus streaming service. The entertainment giant posted a 23% rise in net income whilst revenue increased 4.8%. But Disney Plus subscriptions eased in the quarter, with the company warning that it expected another modest decline in the coming months. The CFO, Hugh Johnston, told CNBC he was satisfied with the overall numbers despite challenges on multiple fronts.
Feel great about the quarter, well in excess of expectations, and most importantly, broad-based growth. The entertainment business came in very strongly on the back of Moana 2 as well as Mufasa, and the experiences business performed very well in excess of where we expected, despite the fact that we were dealing with hurricanes and the startup cost on a ship.
Amazon is set to post fourth quarter results later today, with attention on how its key cloud business, AWS, performs. The unit has delivered consistent growth in recent quarters, with analysts looking for a 19% growth rate later today. Shares in ARM and Qualcomm fell in extended trade, with the chip stocks underwhelming investors, with disappointing guidance and prompted concerns of a slowdown in AI spending. Qualcomm beat on the top and bottom line in the first quarter, but issued weaker than expected estimates for its key patent licensing business. And chip designer ARM topped on third quarter expectations, but warned it will not meet the higher end of its full-year forecast. Well, Qualcomm CEO Cristiano Amon told CNBC the recent developments at DeepSeek provide a tailwind.
Within days of the DeepSeek announcement, people were showing it running on Snapdragon phones, showing on Snapdragon PCs. As a matter of fact, Microsoft announced that DeepSeek R1 is running on Copilot Plus PC, starting with Snapdragon.
We'll have more from the chip sector later today when our US colleagues speak to the ARM CEO, Rene Haas. That is a first on CNBC interview coming up at 1500 GMT. Arjun, I was making the point that I think that investors are quite sensitive at the moment around AI spending. They've pushed a lot of these stocks forward on the hopes that, you build something, then there are going to be profits at the end of the line. When it comes to Qualcomm, this licensing issue, this was one of the excuses for the market to sell off in the after hours. Do you think that the market just really didn't know anything about the licensing issue, or was it really about a broader theme here?
Yeah, I just think it was a bit of an overreaction here on both ARM and Qualcomm, and I think it's precisely to what you're saying. There is sensitivities in the market, and investors are very clearly scrutinizing every aspect, every number that's coming out of this business amid some of these concerns over overspending on AI and whether the AI hype is going to live up, or AI is going to live up to the hype. And I think we saw that in some of the numbers. If you look at ARM, it was sort of a bit about the forecast here as well. In the current quarter, they're projecting sort of between 1.18 and 1.28 billion, which was in line broadly with forecast, but not as high as some of the highest forecasts. And when you've got a stock like ARM that's been up 40% already this year, we're only in the early days of February at this point in time, there are high expectations, and I think that's why you saw that pullback, that it didn't sort of beat even the loftiest of expectations. And I think Qualcomm was a slightly different story. It was, again, as you said, that licensing business projection was in focus, and the forecast was, again, not as high as many people had hoped because of concerns over a softness in the smartphone market this year. But again, overall, really not a bad set of results from either.
I'm bored with the blanket approach, AI on, AI off, wax on, wax off. Yeah. I actually want subtlety, because it seems to me that everyone just buys into the AI story or all gets cautious about it. Is there much differentiation beginning to come through rather than NVIDIA and the rest? Is there something more subtle going on than that?
I thought there was. Okay. I thought there was something going on, a little bit more subtle, people discerning, yes, what does ARM do, what does NVIDIA do, what does Qualcomm do, particularly when we talk about the semiconductors. I'm in doubt now after this quarter, and I think, the big tech names we've had already messed it all up.
Explain what you mean by that.
Because I think when, Alphabet came out with their numbers, and they were disappointing, but that CapEx number perhaps was a little higher than many had thought. Again, that has filtered through because of DeepSeek, all of these concerns about spending, about return on investment, about whether this technology is going to live up to the hype at this moment. All that's coming through. And it feels like it doesn't matter what part of the AI stack you sit in at this point. But like I said, I think ARM and Qualcomm did report a good set of earnings.
The problem is that people don't understand the stack. They've just started to understand data centers, and it's put in this phrase of picks and shovels because people think, okay, it's right at the forefront. It's the very part where you're digging and you're building. But there is another part, and we were talking about it with the edge. The market doesn't understand the edge. I mean, we saw it at tech events over the years where we're talking about, well, what is the future of edge computing? Edge is where a lot of the AI applications are going to be done thanks to DeepSeek now. And Qualcomm is going to be a player there. So it's a lack of understanding, isn't it, as to how AI actually works?
Yeah, I think partly. And in theory, you're right, DeepSeek should be very positive for a player like Qualcomm, because Qualcomm's whole positioning here around AI is that we are producing, designing chips at this point on devices like your smartphone, like your laptop, that actually can run some of these AI processes, these AI agents we may have in the future without the need to go in the cloud. This is more secure, this is faster, etc. But clearly the market isn't seeing that yet, and Qualcomm perhaps hasn't done enough to convince investors that that's the story it's going down.
Super duper, thank you very much indeed for that, Arjun. Right, we are going to go to break now. That is the end of Squawk Box. Safe to say, plenty more still to come on the channel, including at 4 p.m. GMT this evening. I'll bring you Andrew Bailey, the Governor of the Bank of England, and what we had to say post the UK rate decision, which is due at midday.
Elevate your portfolio with JP Morgan's Equity Premium Income ETFs. Now with more flavors, global equities, US equities, and technology stocks. Discover now. Search JP Morgan Income ETFs.
I think ambition is really an extension of faith. If you first off believe in yourself, that gives you the power to chase your dreams. My ambition starting out was to have a career, not a job. I wanted to be excited to go to work every day and go someplace where I could grow, learn, and engage. CNBC viewers are definitely ambitious, and I think most of them see their money as a tool, a way to pursue their dreams and pursue their goals. I hope to always be a clear, accurate, and investable voice for all of our viewers. You'll learn a lot here at CNBC. It's also a lot of fun.
Live from the New York Stock Exchange, Halftime Report, CNBC.
Geopolitical stability, I think, is good for growth. It's good for peace.
Our principles are very clear. No agreement on Ukraine without Ukraine. It is impossible to keep NATO safe, the whole NATO territory safe. Yes, for now, yes, we can do that, but not in 4 or 5 years.
The risk is to the downside when it comes to growth, and we'll have to be very attentive to the data.
The structural weaknesses of our economy absolutely have to be addressed.
I wouldn't have been as successful as I was without my team. And I take that throughout my whole career, and I take it into my business life as well, and also with my family. It's all about my team for me.
So usually when people think about drone filming, they will imagine a drone high up in the sky, like aerial photos. But I can also fly indoor and close proximity flights, close to people and close to objects safely. Wearing a goggle, it gives you a more immersive experience where you can make judgments a lot more accurately. Whether I want to make it shoot up with high acceleration or to let it drop down to make a dive using gravity. So all these are adrenaline pumping experience for me.
Tong also teaches drone piloting courses to adults looking to improve their skills or make mid-career switchers like himself.
Teaching will help myself or other drone pilots will learn better, especially for drone or anything technology. You need to keep updating yourself. I think it's a good revenue for me to do that.
Good morning and welcome to Street Signs. I'm Juliana Tattlebaum and these are your headlines. SocGen fourth quarter profits double amid a rebound in its retail banking unit while full year revenue tops targets and the lender pledges payout at the top end of expectations. Maersk shares float to the top of the Stock 600 after the shipping giant reports a solid fourth quarter beat. CEO Vincent Clerc is upbeat despite macro and trade uncertainties.
If you work on the agility that you need to have to react to trends or sudden shifts that might occur, such as what we saw in the Red Sea last year, then you are actually able to see not only problems, but a lot of the silver lining also.
AstraZeneca tops fourth quarter revenue estimates and issues better than expected 2025 sales guidance, driven by strong demand for its cancer drugs. And the Bank of England is widely expected to deliver a quarter-point rate cut, the third of the cycle, with markets also eyeing a potential downgrade to growth forecasts. Join us for an interview with Governor Andrew Bailey at 1600 GMT. A very good morning to you and welcome to the program. We're now about an hour into the European trading session and we're off to a strong start building on yesterday's gains. The main benchmark Stock 600 yesterday added about 0.5% and this morning you can see we're up about 0.8% in early trade. This follows back-to-back gains on Wall Street, so positive momentum on both sides of the Atlantic. Companies this morning being rewarded properly for delivering earnings beats and strong guidance. That's what we're seeing. That's the overall theme today. Now breaking it down by region, here's a look at the bourses and what we're seeing in European trade. You've got the French market, up 0.6%. FTSE 100 leading the gains here, up more than 1%. You've got a strong bid for basic resources stocks, so that's providing a boost to the overall UK market. The Xetra DAX up about 0.7%. FTSE MIB over in Italy trading about 0.7% higher as well. Now, as I mentioned in the open, it is a heavy earnings day across Europe. Here's a look at some of the main movers. You've got shipping giant Maersk right at the top of the board there, posting a beat on the top and bottom line in the fourth quarter. Societe Generale full year net income surged 69% to 4.2 billion euros, while annual revenue growth exceeded the bank's target at 6.7%. While Siemens Healthineers beat revenue expectations in the first quarter and confirmed its full year outlook. You can see there on your screens the sizable share price moves to the upside. Now on the downside, ING is one of the biggest laggards on the Stock 600. The Dutch lender missed profit expectations in the fourth quarter, posting net income of 1.15 billion euros against expectations of 1.29 billion. And you can see the stock is down more than 3%. For more analysis and reaction to the flurry of earnings across corporate Europe this morning, check out our live market blog on CNBC.com. Now let's turn back to SocGen, which, as you just saw, is leading the Stock 600. Charlotte, break it down for us. What's driven the strength in the bank this morning?
Well, as you were saying a little bit earlier, this net profit more than doubling in the fourth quarter, so just above 2 billion. So that was way above consensus there. So looking at different parts of the business, the investment bank revenue was up 12%. So not the performance that we saw from competitor BNP, but still some decent performance there. Global markets revenue up 9% with FIC up 8% and equities up 10%. And also interesting positive note was French retail rebounding there. French retail, private banking and insurance revenue up 15%, boosted by net interest income up 36% there. So they have announced that they will increase the payout ratio to 50%. That was a higher end of the guidance that I had given previously of 40 to 50%, and a higher than expected share buyback of 872 million euros. So there could be the signs of the turnaround being operated by the CEO, Slavomir Krupa, who joined back in May 2023. He presented just a few months later his strategic plan for the bank, and analysts were quite underwhelmed at that point, and the shares dived at that moment. He downgraded some of the targets. He put a big focus on cost control, on strengthening the capital. He cut some jobs, sold multiple assets, including exiting several African markets, and they sold about 3 billion euros in assets. But it looks like maybe we are starting to have the first signs that the turnaround is happening. And so this is reflected also in the 2025 targets. You see a revenue growth of more than 3% compared to 2024, a return of tangible equity above 8%. It stood at 6.9% in 24. So that's still below some of its peers, but better than what we saw at Société Générale previously in 2023. ROTE stood at 4.2%. So we see certainly a positive trajectory on that front, and they still have a target of return tangible equity between 9 and 10% in 26. Finally, the target, a CET1 ratio above 13%. And we see this very positive reaction there on the share. Société Générale right at the top of the CAC, almost 10% up.
Charlotte, thank you for breaking it down. Really strong performance across the French banks to start the year. Stick with us because there's another stock I want to ask you about in just a moment. Pernod Ricard cut its sales outlook for 2025 after disappointing first half performance weighed down by weaker growth in the U.S. and China. Over in the luxury fashion space, Gucci has ended its collaboration with designer Sabato De Sarno just over 2 years after he was appointed creative director. It is the latest in a flurry of departures from top fashion houses and comes amid weak sales in China. Kering, the parent company of Gucci, is due to report results on Tuesday. Charlotte, Kering shares, I had a look this morning, down almost 40% in the last year. So clearly this stock has been facing challenges and the company under pressure here. What are investors likely to think of this announcement that the Gucci creative director is out? Is this going to be welcomed by the investment community?
Well, certainly, Kering has been struggling with the double whammy, of course, the luxury slowdown and trying to operate a turnaround at the star brand Gucci. And, they've been trying to do that with a new creative director, which was Sabato De Sarno. And his very first collection was in September 2023. And some of these products of these collections just started trickling into the stores only later. Normally, the maisons or the luxury houses allow creative directors to kind of spread their wings and give them a bit of time to see if their products are being taken up by customers. But Sabato De Sarno didn't have much time to do that, already ousted, so less than a year and a half after being in the job. There was a radical change in aesthetic really at Gucci, have flamboyant style from the previous creative director Alessandro Michele, and there was a very big change there with more quiet luxury style there with Mr. De Sarno. It looks like that hasn't really worked. So here again, we see this negative reaction Kering right at the bottom of the CAC because investors will be concerned that the turnaround at Gucci then is not bearing fruit, and we're waiting for the full year numbers from Kering that will be posted next week. But this could be a negative signal that, the turnaround at Gucci is not happening just yet.
Charlotte, thank you for keeping us up to speed on all the latest twists and turns in luxury. Now let's turn our attention to the pharma sector. AstraZeneca's beat fourth quarter revenue and earnings estimates this morning, with the pharma giant's full year sales outlook also ahead of expectation. The company also said it expects to increase CapEx by about 50% this year. You can see quite a strong positive share price reaction in Astra this morning. We're up nearly 5%. Quite a big move for a pharma company like Astra. Emily Field joins us now, head of European Pharma Research at Barclays. Emily, always a pleasure to have you on the program. So much to talk about in pharma right now. Let me first kick off with Astra. These results fresh out the gate this morning, and the stock is reacting quite well. What's your take?
Yeah, I think there was a lot of hesitation going into results today, particularly as they have this investigation going on in China. It's been flagged by the company that this could impact their operations. So that was kind of the fear going into results. It looks like that's totally manageable, and they're making some progress in moving towards a resolution there. So that was the big worry, and so that is moving in the right direction. And then sales for most of their key oncology products look pretty good. So I think everyone's pretty excited about the year they have ahead.
And what about the pipeline at Astra? It's a pretty big feature of the business. They've been focusing a lot on oncology, these cancer drugs. What's the look there?
Oh, that's the most exciting part about this company. They had this big investor day last year where they talked about an $80 billion revenue target by 2030. And then the CEO, Pascal Soriot, has said that they have so many trials reading out this year that they'll have a good idea on whether they're going to make that target probably by the end of this year. So people are very excited about the catalysts that they have that are throughout the year.
So potentially a lot of visibility, and you don't have to wait too long for it. Now, in a different part of the pharma market, we've got a ton of focus on these GLP-1s, the new class of weight loss drugs that everybody now is familiar with that has revolutionized the weight loss industry. Just yesterday, we heard from Novo Nordisk. We had a chance to speak to the CEO, and that company has clearly had an extraordinary run over the last 5 years since these drugs came to market. But a bit of the shine has come off. I mean, I just came back from maternity leave, and the stock has basically been on the way down since I left. You recently published a note, and I think the title is worth sharing, Battle of the Bulge, what we think needs to happen to get Novo back on top. Share with viewers what you think needs to happen.
Yeah, so Novo last year was almost a tale of two halves. First half of the year couldn't do anything wrong. Second half of the year missed earnings results on their key obesity drug Wegovy, and then just before Christmas, disappointing results on the next generation obesity drug, CagriSema. So going into this year, and it was the worst performing stock of all the large cap pharmas, and there was a lot of worry about, was demand slowing for these drugs, and is their pipeline going to be enough to continue the story? And I think yesterday, I think we titled our note on the results a sigh of relief or something along the lines like that, because they gave us some more details on the pipeline that I think give a little bit more promise to this next generation drug, and the guidance for a midpoint of 20% revenue growth was a message that don't worry about demand, guys, it's still there.
In terms of demand and how it's splitting, Novo's not the only horse in town. You've got Eli Lilly, you've got several other companies with similar drugs coming to market. How are market dynamics shaking out in terms of market share across these drugs?
Yeah, so right now it's really competitive between Eli Lilly and Novo Nordisk, and they're duking it out in the United States market. Of course, competitors like Roche, AstraZeneca, there's some smaller biotechs in the U.S. also that are rushing to get these drugs to market. But for the time being, it's still really going to be these two companies. And of course, we'll see what happens with the whole phenomenon of compounding, which is a big thing in the United States as well.
And compounding, expand a little bit more on that.
Yeah, so essentially because these drugs are in such high demand and have been in a shortage, there's these off-label producers that have been allowed to make the drugs. Hims is a company that's been in the media quite a bit. And really, it's a fight for the branded companies to produce enough supplies to make the drugs out of shortage to kind of put these guys off of compounding. And that's a narrative that will probably continue to play out over the course of 2025.
Let me shift gears and ask you about GSK, another big mover yesterday. I mean, a lot of the time these pharma companies are so slow moving until they're not. And this is what we've seen this earnings season. GSK shares were up high single digits yesterday. They announced a £2 billion share buyback program. You're still neutral on the stock. What's the counter argument to getting involved here?
Yeah, for GSK, started off 2024 very, very strong, and then they had some setbacks with their vaccines business where there are a new RSV vaccine in the United States. It was limited to a smaller population. So sales on that were down quite a bit last year, of course, as a vaccines company and the headlines of what may happen in the U.S. But yesterday they delivered a very, very clean quarter. Obviously, the buyback was very unexpected, and the reason we're still neutral, though, is that they do have a patent cliff for their HIV drugs that will be coming towards the end of this decade, and we just want to see more out of the pipeline to see if they're going to be able to offset that patent cliff.
Let me ask you about the U.S. and the administration and the changes we're expecting there. To what extent are you seeing European pharma investors deterred from the sector, and what is your view? How cautious should European pharma investors be about the outlook there?
Yeah, so earlier in January, we actually downgraded our sector view to neutral, partially just because of the concern over the obesity space, which has been the biggest driver of the space, and then also just the U.S. policy risk. Feedback that we've had is that, these are huge organizations, FDA, CDC, et cetera, that are very, very slow to change. And so, will the appointment of RFK Jr. actually lead to any change? We still don't know, but I think people are very concerned about the headline risk, which I think is still evident in that after the Senate Finance Committee vote, which I think most people thought he would get through, the sector still traded down and underperformed by 1% or 2%.
So still a lot of nerves there and a lot of uncertainty. Emily, thank you so much. It's great to get to be able to pick your brain on these pharma companies. Emily Field, Head of European Pharma Research at Barclays. Coming up on the show, Carlsberg shares fizz as profit pushes toward the top of its guided range. We'll be joined by Sylvia with the latest next.
CNBC. Live ambitiously.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. cnbc.com/technology.
Welcome back to Street Signs. Shipping giant Maersk posted a beat on the top and bottom line in the fourth quarter. EBITDA hit $3.6 billion on revenue of $14.6 billion. Stephen Caron asked the CEO whether the company is seeing a structural shift within global trade rather than just political noise.
Trade volumes continue to increase. Asia continues to be the factory of the world, and the share that China has in traded volumes continue to creep up slowly. So while there is a lot of talk about this, it is actually very complicated to do. The global supply chain, as that the world relies on today, took about 20 plus years to get built, is very integrated, it's very long, has very multiple tiers of different suppliers contributing to the finished products that you and I go buy in our local department store. And for that to change, it does take some time. So while we're seeing some movements towards more nearshoring in Turkey, in Morocco, or in Mexico, near some of the consumer markets, the overall trend is still of a very resilient global supply chain that copes with this political pressure more than it really structurally changed so far.
In the drink space, Carlsberg has posted annual organic operating profit at the top end of its guided range, coming in 6% higher on the year, while volumes missed analyst expectations. Sylvia joins us now from Copenhagen with more. Sylvia, Carlsberg, pretty impressive that despite volumes disappointing, they were still able to deliver a profit beat.
Exactly, and that's being very clear in the way that shares are moving so far this morning, among the best performing stocks in Europe thus far. But let me explain you why perhaps we're looking at this reaction in the markets. If you think about their 2024 performance, we actually saw a beat at the top and bottom lines for their full year results. And on top of that, perhaps even more importantly, they actually finished at the top range of their guidance for 2024 in terms of organic operating profit growth, up 6%. However, it's not just a rosy picture. When you think about their message for 2025, they guided for lower organic operating profit growth in this year. And therefore, they also highlighted that there's key challenges ahead. Some markets, particularly Asia and also Western Europe, there are pressures in those markets. However, when you think about the positives as well, the CEO was very clear to say that they are focused on their growth categories. And within that is the volume growth in terms of non-alcoholic beer, which actually was up 6%. Here's the CEO explaining why this is such an important part of their business.
That's actually our fastest growing category. When you look at the accounts today, it's the fastest growing category, and we see that as a sustainable structural trend. We think there's much more to gain in alcohol-free, as it's moving from being a pure replacement of a beer drinking occasion to becoming a category in itself. So really a beverage in itself that doesn't just replace alcohol. And the innovation is high. We've launched more than 60 different alcohol-free brands over the last 3 years.
So when assessing a company, it's always relevant to compare how they're doing against their peers. And of course, when you think about that, we heard from Diageo earlier this week very much suggesting that they will be impacted by these Trump tariffs. But when you look at Carlsberg, their sales in the United States are very limited. This is not a huge part of their business whatsoever. However, when I spoke to Jacob Abedersen, he was very clear to say that even though there's no direct impact on their business, he is not relaxed about these escalations in trade conflicts.
We sell very little product into the US, so we don't get that direct impact as others will do. On the other hand, we're not relaxed about it because it can have secondary impacts on many markets, and there can be also unforeseen impacts that we haven't thought of at this stage. But when I look at it globally across our portfolio for 2025, it is not the biggest concern that we face. It is more around how does global consumers react to now 2 to 3 years of higher inflation than ordinary. And we will see how the broader picture around tariffs, global tariffs and trade wars play out. I have to say we are used to facing this type of volatility, and as a company not directly exposed to the US, I think we take a balanced perspective on it.
So as I've highlighted earlier, ahead of the market open today, shares of Carlsberg were down almost 20% over the past 12 months. However, with these numbers, we are looking at the investors piling back into the stock. It is, as I said earlier, one of the best performing companies this morning in early trades. Let's see how the year is going to unfold for Carlsberg. But so far, Juliana, today's numbers seem to have pleased investors.
Sylvia, thank you so much for bringing us that interview. Sticking with earnings, Telenor posted fourth quarter core operating earnings in line with estimates, with EBITDA before other items coming in at 8.5 billion Norwegian crown. The telecom operator swung to a net profit from a loss in the same period last year. Torbjørn Wist, CFO of Telenor, joins me now. Torbjørn, thank you so much for joining us this morning to elaborate on your numbers this quarter. Looks like an overall solid quarter, broadly in line with what the market was expecting. How would you characterize the period?
Yeah, no, I think we delivered very well on these results. We had very, very strong performance from the Nordics, and despite some of the macro headwinds that we see in Bangladesh, we continue to deliver well on all, call it our sort of outlook parameters, and delivered a very, very strong cash flow for the year. And that gives us confidence in the outlook that we have set now for 2025.
Let me ask you about Bangladesh. It's been quite a challenging year over in Asia, in particular in Bangladesh. Any signs of recovery there? I know a lot of it has been out of your control.
Yeah, I'm going to be careful in terms of speculating on the speed of a recovery in Bangladesh, but clearly in the second half of 2024, it's been a lot of macro turmoil, both political and economic, and that has affected the group numbers for 2024. So we're obviously following the development in that country very, very closely, and daily sales revenues, etc., are key parameters that we will follow with a very sharp eye moving into 25. But hopefully it'll be a V-shaped recovery, not the more protracted U-shaped recoveries I saw in my former industry, the airline industry.
Hopefully you can expect a little bit more stability from this industry. Let me ask about your home markets, a brighter spot in your earnings. The Nordics have been quite strong. Where is the growth coming from in the Nordics, in your home markets?
Yeah, no, look, I think the Nordics are really delivering, on all cylinders. But within the sort of Nordic footprint, particularly in the fourth quarter, we saw very strong performance from Norway and we saw very strong performance from Finland. But, throughout the year, we see strong performances from our various businesses. And that gives us confidence in, call it, the mid-single-digit organic EBITDA growth expectations into 25. If we use Norway as an example, which is called the home market from where I work, here we have one of the world's best networks in one of the more expensive countries in the world. And we're seeing that our customers are demanding more and more services. So our more for more strategy, which we are using across the Nordics, of adding on additional service elements to our mobile subscriptions are really, really helpful in terms of driving average revenues per user. And that is a strategy that we see is working very well for us as a group in the Nordics.
What does it mean for profitability if you're adding more services? I certainly appreciate that that's positive from a revenue perspective, but from a cost side, how are you managing? Yeah,
we have a very, very sharp eye on the cost, and I won't go into all the sort of operational transformation issues that was outlined well by Benedicte in the presentation today. But, we have a really sharp focus on making sure we take the cost down. And you got to remember that some of the services that we are adding on top of our mobile subscriptions are not necessarily that expensive. But nevertheless, it's in real demand. And I think our security filters, just as an example, we have stopped about 2 billion attempts to sort of defraud our customers over the last year. And that is thanks to the security filters that has been added both on the mobile side, but also on the fixed side in Norway.
Your cash flow generation this quarter was better than expected. It's a key highlight, I think, from the earnings report. What are you planning to do with your cash?
Well, we have a very long and historical strong commitment to paying dividends to our shareholders. We've had nominal growth every year for the last 15 years, and we have a clear dividend policy to which we are very committed. We, in arriving at, call it, the cash flow guidance that we have to the market, we will, of course, also include the investments. But in terms of the money that is generated and, call it, in our pockets at the end of the day, cash is king, I used to say as a former treasurer, around 13 billion cash flow outlook before M&A for 2025 means that we are then covering the dividends that we're going to be paying out in 25 for the financial year 2024. So, we have a strong commitment to shareholder remuneration, and I think this is very key for a company in our type of industry, and is a central underpin of our equity story.
For sure. I think investors will certainly be glad to hear that the dividend is not in question, and that remains a pillar of the investment case. What about M&A? Once you've paid your dividend, what's your view on M&A, the strategy?
Look, we have 4 business areas. We have the Nordics, we have Asia, we have infrastructure, and we have AMP. And what we have said to the market is that, we will, of course, look at inorganic opportunities across, call it, our collective footprint in terms of business operations. Being a big, large global company, these inorganic opportunities come across our desks many times. And we will, of course, be open to exploring it. But the main focus is, of course, to deliver on the strategy, the final year of the strategy period that ends at the end of this year. And then this year, we will be laying the new strategy for the next strategy period, which is 26 to 28, which we look forward to talking more about around Capital Markets Day in Q4.
All right, Torbjørn. Well, if not before, then look forward to speaking to you around that Capital Markets Day. Torbjørn Wis, CFO of Telenor. Coming up on the show, the Bank of England is lining up its 3rd rate cut since the pandemic, but that decision may not be the main event. We'll have more on that next.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
Before they talk to Wall Street, they talk to John Ford and Morgan Brandt. Closing bell overtime.
Welcome back to Street Signs. I'm Juliana Tattlebaum, and these are your headlines. SocGen fourth quarter profits double amid a rebound in its retail banking unit, while full-year revenue tops targets and the lender pledges payouts at the top end of expectations. Maersk shares float to the top of the Stock 600 after the shipping giant reports a solid fourth quarter beat. CEO Vincent Clerc is upbeat despite macro and trade uncertainties.
If you work on the agility that you need to have to react to trends or sudden shifts that might occur, such as what we saw in the Red Sea last year, then you are actually able to see not only problems, but a lot of the silver lining also.
AstraZeneca tops fourth quarter revenue estimates and issues better than expected 2025 sales guidance, driven by strong demand for its cancer drugs, putting shares on track for their best day in more than 9 months. And the Bank of England is widely expected to deliver a quarter-point rate cut, the third of the cycle, with markets also eyeing a potential downgrade to growth forecasts. Join us for an interview with Governor Andrew Bailey at 1600 GMT. Let's get a check on European markets. You can see Stock 600 up 0.7%, adding to yesterday's advance. We saw the main benchmark rally about 0.5% yesterday. Also back-to-back gains on Wall Street. So the positive momentum being felt on both sides of the Atlantic here. Earnings sharply in focus in Europe this morning. Let's take a look at these sectors and how the split is shaping up. On the upside, you've got, these are the European markets, we got the FTSE 100 up more than 1%, being buoyed by the basic resources sector, a strong bid for the mining names today. Xetra DAX up 0.7%, the CAC 40 up 0.7 as well, and the FTSE MIB not far behind. So every region, every sector is higher today. Now let's get on to the sectors and see what's behind the gains at Borsa level. You've got basic resources, as I mentioned, 2.33% higher this morning. Banks also catching a strong bid. You've got SocGen among the best performers in the overall market today. Food and Bev also doing well, up more than 1%. Healthcare up 0.9%, with AstraZeneca in that basket performing quite well. It's been quite a strong week for pharma overall. GSK, Novo Nordisk both gaining strongly yesterday. In terms of the laggards in Europe, here's a picture at the sectors. We've got real estate now trading just below the flat line. Retail, media, and utilities round out the bottom performers in the market this morning. As As for Wall Street, here is how U.S. futures are shaping up. You've got a bounce there as well. The NASDAQ, the Dow Jones, and the S&P 500 are all trading higher at this stage, according to U.S. futures. This follows a decent day yesterday, as I said, back-to-back gains for Wall Street. Private companies added 183,000 jobs in January, according to ADP. That topped expectations. Now, that figure, which was largely driven by service providers, comes after December's print showed growth of 176,000 jobs. ADP's jobs print comes ahead of Friday's key non-farm payroll report, with forecasts pointing to jobs growth of 169,000 roles. Speaking to CNBC, ADP chief economist Nella Richardson forecast a robust number for Friday's data.
The January report for ADP and the numbers that you'll see Friday from the government have been re-benchmarked with a QCW number that it pulls the numbers together for January. And so what I think you'll see from both ADP and on the Friday report is strength ending the second half of 2024 that carried over into the first month of 2025.
Investors are watching the Bank of England today as it reveals its latest policy decision, with markets pricing in a 25 basis point cut, the central bank's third cut since the pandemic. You can see on your screens there how gilts are trading this morning. You got the 30-year down just above the 5% level, and then out toward the front end of the curve, the 1 year is trading around 4.4%. John Cunliffe joins me now, head of investment office at JM Fin. John, great to have you with us this morning. What is your expectation for today's meeting? The 25 basis point cut is clearly quite well expected. But beyond the cut, what are you going to be looking for?
I think the first thing would be whether there's any dissent. The last Bank of England meeting, there was a 6-3 split in terms of no change. So there was a dovish tilt to it. Catherine Mann, I think, could be the outlier in terms of going for no change in rates. But I think the risks around the labour market are clearly skewed to the downside. And whilst the near-term risks to inflation, I think, clearly are on the upside, reflecting national insurance contributions and also European energy prices, I think that the focus really has to be the extent to which the bank wants to deliver some credible forward guidance to the market and look through what will be quite a significant run-up inflation in the months ahead.
How can the hawks justify pausing now if we do see one dissenter calling for a hold, given you've got growth down, you've got services inflation down, you've got labor market intentions down? What is the justification for pausing?
I'm not sure there is. You know, the Fed is restrictive with rates at 4.375. The Bank of England is obviously very restrictive with rates at 4.75. I mean, there's clearly concerns about the supply side, crowding out because of fiscal stimulus, issues around the increased costs coming through in the labour market. But I don't see on a 2-year view there's any meaningful reason why the Bank of England can't deliver certainly solid forward guidance that rates could fall towards the 4% to 3.75 in the year ahead, with arguably risk to the downside.
What could that forward guidance look like if we do see them give us some kind of guidance? What would it look like?
I think it has to be risks around the labour market and also risks around demand. Remember that the OBR is currently a significant outlier in terms of expecting growth to be 2% this year and 1.7% flatlining thereafter. Even if trend growth is 1.25 to 1.5, over the medium term there has to be downside risk to growth. And with the limited amount of fiscal wiggle room that the Chancellor has, I think monetary policy activism will have to be a way of ensuring that we don't have a much more challenged economic cycle going into 2026.
At the moment, the MPC is looking at quarterly rate cuts. Could we see that change and actually see the MPC move to cutting rates at every meeting?
Not yet. I think the bank's going to be a bit cautious near term. I think as we get through this year, we could see slightly more rapid rate cuts, certainly down towards the terminal rate of 3.5%, but that would be some way into next year.
And what about the inflation target of around 2%? Do you think that that's still valid? Is that the right level? Is there any chance that the Bank of England adjusts it?
It's a great question. I think if central banks in the round were to sit down today and think about what an appropriate inflation target was, I think they'd probably say 2.5% to 3%. But I think that the sharp run-up in inflation that we've seen in 2022 was a big knock to the credibility of central banks. So it's not something they can sell to the market. But more broadly, you know, the Fed in particular, like the Bank of England, probably has a dual reality. It's talking about an inflation mandate that it doesn't really want to deliver against, but it doesn't want to lose credibility as well. So, you know, as a fixed income person as well as a multi-asset person, I'm happy with 2.5% inflation. I think it does stave off the risk of hitting 2 but then ending up undershooting and then getting out of what is a very difficult deflationary hole.
When you layer in also the outlook for the macroeconomic and geopolitical outlook and the potential for inflationary pressures as a result of tariffs, you've got to think that's something that they'd like to consider, even if they don't have the political capital to do so.
No, absolutely. And I think the difficulty policymakers have had in the last 2 to 3 years is managing the supply side. You know, and geopolitics clearly are going to be challenging from a supply side perspective. And obviously in the UK, you've got supply side issues around, you know, crowding out the private sector because of fiscal stimulus. So it is a big headache for policymakers, but I think the markets and policymakers are going to have to look through that and look at the underlying demand dynamics in sort of the global economy.
Let me round out by asking you how you play this in markets. From a gilt market perspective, we've seen a ton of volatility in gilt markets over the last 6 months or so. This is the first decision since that big bond sell-off back in early January, where the 30-year gilt yield hit its highest level since 1998. How do you position, how do you play the gilt market here?
You know, we've liked gilts for some time, certainly either side of the year end when we had a big rise in gilt yields. You know, we think short and intermediate dated gilts are cheap relative to the delivered Bank of England rate moves we expect in the next 12 months. So we are buyers of gilts, particularly into weakness. We've been a bit more cautious on the very long end because, you know, the concerns about fiscal stability have had an impact there. And also rising term premium in the US has also had an effect on long-term gilts. But to give you an example, in the recent past we had the market implied 5-year rate in 10 years' time, which is a break-even between 10 and 15-year gilts. That was up towards 6%. I mean, that's a very high rate compared to where average 5-year rates have been over the last 20 years. So, cut to the chase, you know, we like gilts. We're looking to add duration and allocation as yields rise, and some of those longer dated forwards look pretty attractive as well from our perspective.
John, thank you for the conversation, helping us prep for the Bank of England decision this afternoon. John Cunliffe, Head of Investment Office, JM Fin. Now, I want to also bring your attention to the FTSE 100. We were just chatting about UK assets. It has hit a record high this morning. Strong gains for the UK benchmark, up more than 1%. We're seeing a strong bid for the miners this morning. Basic resources as a sector up more than 2.33%. You're also seeing a strong bid for AstraZeneca in the UK market. To get up to speed ahead of the Bank of England's rate decision, head to cnbc.com. And Steve and I will bring you that decision from 11:55 GMT here on TV. And don't miss Steve's interview with Governor Andrew Bailey at 4 p.m. We've got so much for you on the Bank of England this afternoon. The French government, meanwhile, survived 2 no-confidence votes on Wednesday, clearing the way for a contentious state budget to finally be adopted. Coming up on Street Signs, Amazon prepares to post fourth quarter results with its key cloud unit in focus. We'll have more with Arjun next.
CNBC. Live ambitiously.
In addition to hedge funds and registered advisors, Interactive Brokers also serves individual investors. We give you all the tools and technology we built for our institutional clients for free. Let Interactive Brokers assist you with your market goals. The best informed investors choose Interactive Brokers.
This is what the house looks like when I bought it.
Next on Unlocked, an abandoned old house gets a total transformation, unlocking life at sea, sun-drenched days, turquoise water, and some really tough challenges.
Way more work than living in a house.
And a bit further north, primary school teacher from Texas found happiness and a home in the world's greenest city.
Hi, welcome to our Copenhagen apartment.
Catch it all on Unlocked.
Frank Holland, Worldwide Exchange, CNBC.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Welcome back to the program. Well, as we approach the end of the show, here are 4 things to get you up to speed ahead of the open on Wall Street. On the economic data front, we'll get initial jobless claims stateside ahead of tomorrow's all-important non-farm payrolls report. We'll also hear from Fed Governor Chris Waller and Dallas President Lori Logan as several FOMC members voice concerns over the impact of Trump's tariffs on inflation. Today is the deadline for federal workers to accept the deferred resignation offer from the Trump administration. And Amazon will become the latest of the Magnificent Seven to report, with numbers due after the closing bell. Disney topped first quarter profit estimates, but revealed it began to lose subscribers to its Disney Plus streaming service. The entertainment giant posted a 23% rise in net income, while revenue increased 4.8%. But Disney Plus subscriptions eased in the quarter, with the company warning that it expected another modest decline in the coming months. You can see shares down about 2.4%. Disney CFO Hugh Johnston told CNBC he was satisfied with the overall numbers despite challenges on multiple fronts.
Feel great about the quarter, well in excess of expectations, and most importantly, broad-based growth. The entertainment business came in very strongly on the back of Moana 2 as well as Mufasa, and the experiences business performed very well, in excess of where we expected, despite the fact that we were dealing with hurricanes and the startup cost on a ship.
Ford shares hit the brakes in extended trade after January sales dipped on weak demand for internal combustion vehicles, and the carmaker forecasts lower profit for the year. It sees up to $5.5 billion in losses on its EV and software operations this year. That's broadly in line with 2024. For the fourth quarter, revenue beat expectations, coming in at more than $48 billion. And you can see extended hours, the stock down 4.7%. CEO Jim Farley told CNBC that President Trump's tariffs could spell trouble for U.S. automakers.
If this persists, this tariff persisted with Mexico and Canada, it would mean billions of losses for the domestic car industry, huge impact for jobs in the U.S. And the administration knows that, as well as congressional leaders. They know that Ford is the most American car company, we produce the most, and they have committed to us to strengthen our industry and not weaken it.
Shares of Soitec are sharply lower after the French chip materials supplier cut its 2025 guidance and signaled limited growth for 2026. The chip supplier company now expects a high single-digit percentage decline in 2025 revenue, having seen it as stable before. Shares in ARM and Qualcomm fell in extended trade, with the chip stocks underwhelming investors with disappointing guidance and prompting concerns of a slowdown in AI spending. Qualcomm beat on the top and bottom line in its first quarter, but issued weaker than expected estimates for its key patent licensing business. And chip designer ARM topped third quarter expectations, but warned it will not meet the higher end of its full year forecast. Qualcomm CEO Cristiano Amon told CNBC the recent developments at DeepSeek provide a tailwind.
Within days of the DeepSeek announcement, people were showing it running on Snapdragon phones, showing on Snapdragon PCs. As a matter of fact, Microsoft announced that DeepSeek R1 is running on Copilot Plus PC, starting with Snapdragon.
We'll have more from the chip sector later today when our U.S. colleagues speak to ARM CEO Rene Haas. That first on CNBC interview is coming up at 1500 GMT. Now, Arjun joins us now with more. Thankfully, he's been poring over these numbers over the last 12 hours or so. Arj, what do you make of the share price reaction? What should we read into how investors are thinking about these companies? Because ultimately, they delivered pretty good numbers.
Yeah, investors are jittery. They're on edge, particularly when it comes to any tech stock now that really has any sort of relationship to AI. And I think that's come from the earnings reports we've seen thus far, the likes of Microsoft, the likes of Google and Alphabet as well. You know, the Alphabet numbers in particular seeing sort of a miss on cloud revenue and concerns over CapEx and whether all this CapEx big tech is spending is going to be worth the return on investment. These are all the questions swirling around. And so when you get a good set of numbers like ARM and like Qualcomm report, the market and investors are poring over the very small details in there to find any reason, any excuse to sell off here. And if you look at ARM, it was really actually around the forecast for the current quarter we're in, and it was very tight. They said we're going to do $1.18 to $1.28 billion in revenue. That was in line with expectations, but it wasn't as high as some of the highest forecasts on the market. And so this is a stock that's already had a 40% run-up this year. We're only in the first few days of Feb. And so there was a lot of room for error here. And that one number alone, you know, I think was the reaction given the context I just laid out. With Qualcomm, the focus very much was around a potential slowdown in the smartphone market as well. And again, the analysts were looking at one particular number. This was the licensing business projection for the current quarter, looking at around 1.25 to 1.45 billion. Again, the market wanted about 1.4 billion. So while the higher end beat the forecast, it wasn't enough because of those lofty expectations as well. And so coming in, expectations high, market on edge around these sort of AI names as well. And any excuse at this point, I think, to sell off is what happened here.
Super clear. I want to ask you about Amazon. That's the next big tech stock coming into focus. The giant is set to post fourth quarter results later today. Attention on how its key cloud business, AWS, performs will be key. The unit has delivered consistent growth in recent quarters, with analysts looking for a 19% growth rate later today. Arj, why is AWS so central? And maybe that's a silly question, but just remind us in the context of everything that is Amazon, why AWS this quarter is so key.
It's the majority of profits for Amazon, and it's the story I think that's going to continue to be central for Amazon as it also navigates this AI story. Of course, Amazon investing heavily in data center infrastructure, in NVIDIA chips, and then selling a lot of the AI products through its cloud business as well. And so that's why it's so crucial and so in focus. The market here looking for revenue in the quarter of around $28.9 billion. That would imply about 19.4% a year-on-year growth. If that is hit, that would actually be the fastest growth for the segment in 2 years. And so there is high expectations again going into this Amazon report, and therefore a lot of room for error here if the forecast isn't good, if the current quarter didn't meet up to expectations. I think the other side of the equation here is how investors are going to be looking at CapEx. Last year, Amazon signaled that it would spend around $75 billion in CapEx, and it also signaled that it would spend even more in 2025. Now, given the DeepSeek story we've been speaking about over the last few days and the two sides of the debate, one is that if DeepSeek shows more efficient models, why do we need to invest so much in infrastructure? The second point is if DeepSeek shows more efficient models and it's cheaper, the technology is more ubiquitous and therefore we will need more compute power. Right now, this is where big tech is sitting on that side of the coin. And it'll be interesting to see if we hear any change in terms of Amazon's forecast for CapEx, spending, investment around data center AI.
So just give us a little bit more insight into where Amazon's CapEx is going and where they sit on those two sides of the coin.
It's pretty much going a lot into data center infrastructure, into servers, into the chips it needs to buy from NVIDIA and elsewhere. So all of that infrastructure, of course, you know, some of that's going to be going towards warehousing and logistics and all of those things that Amazon's been investing heavily in as well. But a lot of it is going towards the data center spend. And so in order for investors to be happy with that, they need to see that actually the cloud business, where they should be seeing the return on investment, is giving them that return. And so that's why it's going to be so crucial linking those two together, the CapEx and what we're seeing in AWS.
Super clear. And to bring it into context of what we've heard from some of Amazon's rivals, Google, Microsoft, in terms of their cloud businesses, what is the read and what might translate into today's results from Amazon?
So interestingly, both Alphabet and Microsoft have shown pretty strong growth in terms of the absolute numbers of the cloud business. But the issue with Google is that it missed expectations, which were very high. And I think this is what it goes back to. Amazon, again, the market wants very healthy growth. It expects very healthy growth from the cloud business. But it almost feels like being in line with those forecasts is not going to be enough for Amazon. It's going to need to exceed those expectations as well. So the bar is set super high here because of everything that's happened in the first few weeks of this year. And going into this, Amazon's got a big task on its hand to manage those expectations going forward.
Well, we've been here many, many times before, the bar high, and then eventually these tech companies clearing it. So we'll see if that's the case this time around. Arj, thanks so much for breaking it all down for us. Let's broaden it out and look at European markets overall, see how things are shaping up now nearly 2 hours into the trading session. We've got green across the board. FTSE 100 hitting a fresh record high, up more than 1% this morning. We're seeing a strong demand for the basic resources sector. Also, big move to the upside in AstraZeneca, so putting the FTSE 100 firmly in focus from a stock perspective. And of course, that comes as investors eye UK assets more broadly in the lead up to the Bank of England decision this afternoon, where the market is widely expecting a cut of 25 basis points. In terms of the single stocks this morning, a big day for earnings, and we've been discussing some of them this morning. To recap for you, some of the main movers, you've got SocGen up more than 9%, shipping giant Maersk posting a beat on the top and bottom line in the fourth quarter. SocGen full-year net income surging 69% to 4.2 billion euros, while annual revenue growth exceeded the bank's target at 6.7%. Siemens Healthineers beat revenue expectations in the first quarter and confirmed its full-year outlook, and all those stocks being handsomely rewarded for those strong results. On the downside, ING, one of the biggest laggards on the Stock 600, the Dutch lender missed profit expectations in the fourth quarter, posting net income of 1.15 billion euros against expectations of 1.29 billion. For more analysis and reaction to the flurry of earnings across corporate Europe this morning, check out our live market blog on cnbc.com. It is the busiest week for earnings, so a lot to digest. We did our best to pack it all into this hour, but would encourage you for sure to check out the live blog for more. And now on to U.S. futures. Wall Street is looking at further gains as well, much like we've seen in Europe this morning. The Dow Jones looking to add about 90 points. The tech-heavy NASDAQ looking to gain further as well. And the S&P 500 looking to gain about 13 points. We've got U.S. weekly initial jobless claims to look forward to. And of course, those Amazon earnings that Arjun just prepped us so well for. That is it for today's show. Thank you for watching Street Signs. I'm Juliana Tattlebaum, and Worldwide Exchange is up next.
Launched and enhanced branding campaign for the country, and that is Love the Philippines. Love the Philippines is anchored on 4 pillars. First, to attract the world's attention to our award-winning islands and emerging destinations. Second, to put focus on our immense biodiversity, being one of only 18 megabiodiverse countries in the world. We are also focused through Love the Philippines on our festivals, our cultures, our heritage and history. Through this global marketing campaign for Love the Philippines, we are able to penetrate various markets, from our top source markets to our opportunity markets, through various media, including social media.
The power plays are here. breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Live from the New York Stock Exchange, Halftime Report, CNBC.
From construction and real estate to transportation and defense, drone pilots are in demand across numerous sectors. They're even saving lives.
This is one of the remote stations which we deploy. The command center is here. The drone could be anywhere in the world. I'm trying to locate someone in the event that the person went missing.
I feel like I'm going to be on a stakeout.
Ng Ek Tong has piloted more than 20 rescue missions while serving as the Chief Technology Officer at NECT Engineering.
So I'm looking for a man in his 40s, white shirt, supposed to be lost in the woods. Alright, so I'm going to move around to take a look at what my surroundings are like.
And right now, one of your colleagues is there.
Yes.
Posing as the victim.
Yes, indeed. Aha! So I see something here.
It is 5 a.m. here at CNBC Global Headquarters. Welcome to Worldwide Exchange. Here is your 5 at 5. CapEx concerns they hit Wall Street as investors weigh the rising cost of the AI push by big tech. Amazon coming up after the bell. That is the next test. Treasury Secretary Scott Bessent says he and President Trump are focused on a different path than the Fed to move interest rates lower. Chip crush, a trio of semiconductor stocks, they are sinking ahead of the open. Plus, Ford CEO with some very strong words for the White House when it comes to its North American trade war. Shares are lower this morning. And later, sportsbooks are hoping for a record-breaking big game and a possible recovery from a season where bettors, they won more than they ever have before. It's Thursday, February the 6th, 2025. You're watching Worldwide Exchange right here on CNBC. Good morning. Thanks so much for being here with us. I am Frank Collins. Get you ready for the trading day ahead. We begin with the markets, major indices, and the Russell, all of them coming off a two-day win streak. Taking a look at futures right now, you can see we're in the green across the board. All three indices up just about 0.25%, give or take. We want to take a quick look at the S&P pre-market leaders this morning. Taking a look, you see right here, right at the top of the list, News Corp, Supermicro, Tapestry, Western Digital, and Broadcom. See a lot of chip names here on the upside, rounding out the top five. We got to look at the laggards as well. Taking a look at the bottom five of the S&P in the pre-market right now. You see Skyworks Solution right here at the very bottom off of earnings. Those shares down over 29%. We're seeing Molina Healthcare, Qualcomm, Ford, again, another earnings mover. We may talk about a bit more about that in the show, and Corteva rounding out the bottom five. We also continue to follow those ETFs tied to China, Canada, and Mexico, the three countries involved with what we'll call the tariff discussions. All three outperforming the S&P week to date. Take a look this morning. In the green this morning, the China ETF up about 1.5%. This other one also up about 1.5%. The Mexico ETF not moving at all, but the China ETFs, all three of them that we're showing right here, all moving higher. Also take a look at bond yields this morning. They're actually moving lower. Partly on news from the Treasury will maintain the current level of bond issuance for the next several quarters. The benchmark actually moving about 15 basis points lower since Inauguration Day. Right now coming in at 4.44, the yield there. And we're going to look at the dollar. Different story when it comes to dollar. Actually on a two-day losing streak, but it's still being cited as a headwind by many tech companies. You can see here, since the president was elected, the dollar up almost 4.5%. Pulling back again. Again, the dollar on a two-day losing streak. But again, tech companies saying it's become a headwind. We're going to talk more about that just a bit later in the show. Also looking at gold. It's hit another all-time high. Right now, taking a look at gold, you can see gold continues to move higher year to date, up about 9%. Bitcoin up about almost 0.5% year to date. But you can see Bitcoin pulling back a bit. The trade war, one factor. Investors taking a bit less risk. Again, the dollar, a safe haven, moving even higher. And we want to look at oil moving higher on reports of a Saudi price increase in what's become an actually tightening market. Take a look at oil prices right now. WTI, the U.S. benchmark, up over 0.5%. Brent crude, the international benchmark, up just about 0.5%. Natural gas basically flat this morning. We've seen a lot of fluctuations when it comes to natural gas. Okay, that is your setup. It's time now for your big money movers. And today, it is all about chips. We're going to start off with the stock that we just told you about. Apple supplier Skyworks Solution, the laggard in the S&P this morning, on track to lose a quarter of its value at the open after forecasting sales decline in what's become, or what has been previously, a highly lucrative mobile segment. Current quarter earnings outlook also falling a bit short of estimates. Management on the call highlighting increasing competition to get hardware into Apple iPhones. Apple makes up more than 70% of this company's total revenue. We just showed you the move earlier. Skyworks Solutions down almost 30% right now. Shares of ARM Holdings also sharply lower despite a Q3 top and bottom line beat. Current quarter revenue and earnings forecast, however, they came in line with analyst estimates. ARM shares are already up about 40% this year, but right now shares are down about 3.5%. We're going to hear much more from CEO Renee Haas on Squawk on the Street coming up later this morning. And shares of Qualcomm, they're under some pressure despite an all-around positive earnings report and current quarter forecast. CEO Cristiano Amon, speaking with our John Ford, also pushing back on fears around DeepSeek and CapEx concerns. He actually says it's a tailwind for his business.
Within days of the DeepSeek announcement, people were showing it running on Snapdragon phones, showing on Snapdragon PCs. As a matter of fact, Microsoft announced that DeepSeek R1 is running on Copilot Plus PC, starting with Snapdragon.
We're also seeing a busy morning shaping up over in Europe. Our Juliana Tattlebaum is in London with a look at the early action. Juliana, always good to see you.
That's right, Frank. Good morning. Great to see you. It's been a busy morning on the earnings front here in Europe. Overall, the European market is trading higher this morning. You got the FTSE 100 in the UK hitting a fresh record high, in fact. A lot of demand for the basic resources names here in the UK. AstraZeneca, also a strong performer, providing some support for that index. A big day on the monetary policy front with the Bank of England decision coming out in a few hours, so a lot to play for. Let me dive in for you to a few of the big movers this morning. We've got SocGen in the banking space delivering full-year net income up 69% to 4.2 billion euros. Annual revenue growth exceeded the bank's target. That stock right at the top of the stock 600. Maersk, another stock on the move. The company posted a beat on the top and bottom line in the fourth quarter, revenue surging to $14.6 billion. And finally, on the downside, Kering in the luxury space, shares under pressure today after flagship brand Gucci ended its collaboration with designer Sabato De Sarno just over 2 years after he was appointed creative director. The luxury giant is due to report results on Tuesday, so expect to hear a lot more on this story. Frank?
All right, Juliana, thank you very much. Our Juliana Tattlebaum live from our London newsroom. All right, turn it back to the U.S. markets. U.S. bond yields, they're hovering near their lowest level in more than a month. As investors, they remain uncertain about the outlook for the Fed and for rates. Treasury Secretary Scott Bessent says he and President Trump, they're more focused on reducing borrowing costs by addressing the yield on the 10-year and not the short-term rates that are more influenced by Fed decisions. Bessent adding, while the president wants to lower rates, he will not ask the Fed to cut. Those comments coming just before Fed Vice Chair Philip Jefferson said he's in no rush to push for a move until the Fed gets a better sense of the effects of Trump policies on tariffs, immigration, deregulation, and taxes. Joining me now is Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, good morning. Good to see you.
Good morning.
All right, so Seema, we saw investors, they didn't seem to pay a lot of attention to the president's talk about tariffs. Big shock to the market. Now we see the president and the Treasury Secretary talking about the 10-year and trying to move those rates a bit lower. Should investors be thinking about that and positioning around that push by the president and the Treasury Secretary? I'm thinking about rate-sensitive sectors like financials and small caps. Do you need to make some moves in those areas based on these comments?
So I think investors do need to, of course, listen to what is being said by the administration to understand some of their thinking. And certainly a lot of what was said about, maybe hopefully if deregulation, reducing the deficit would push down bond yields, that would be a positive. Of course, saying that and then offsetting that with tariffs, immigration, which are two policies which are typically inflationary, is probably a different question. So I think it makes sense, but the market is going to move in response to actual policy actions. So if we do start to see those tariffs actually coming through, we should expect inflation, at least in the near term, to start rising, and there would inevitably be some kind of impact on bond yields.
I want to get back to those trade policies. Tariffs, they do seem to be kind of shaking the confidence of business leaders to make decisions. A lot of uncertainty about what's to come. When it comes to big tech, I also want to ask you, are these tariffs and some of these other just actions that are creating some volatility, do you think it's shaking investor confidence in aggressive CapEx spending? I mean, we saw Alphabet hit for that. We have Amazon coming up after the bell. Do you believe when it comes to tech overall, are investors becoming more skeptical about those plans?
Well, I think with regards to CapEx, firstly, one of the things that we did learn from Trump 1.0 is just the threat of tariffs, even then when they were actually significantly smaller than what we're potentially facing today, there wasn't an immediate knock-on impact to global CapEx plans. That kind of uncertainty really does weigh on business confidence, and it does stop businesses from moving forward with some of the projects that may have been planning. So that's worth keeping in mind. Specifically for technology, it is being impacted by a number of different factors. You just have to think about DeepSeek last week, tariffs with which technology would likely fall into some of those crosshairs. So I think there are question marks for investors. But I think overall, the long-term outlook for technology is still quite positive from our perspective. It's just that right now, when you do have solid growth like we have today, and earnings growth is looking fairly positive, there are opportunities in other sectors which are probably not as stretched in terms of valuations. And so there are opportunities outside of technology as well.
All right, I want to focus again on the U.S. You said the labor market's in what you call an uneasy equilibrium. What exactly does that mean, and how could this jobs report coming up this week, how could that impact the markets in your mind?
Yeah, so what we've seen in the U.S. is there's not really much firing. We've seen a very limited number of job cuts being announced, and you can see that from jobs claims staying very low. But at the same time, we're not really seeing many companies increase their hiring. So it's this uneasy equilibrium where the labour market is essentially frozen, not many hirings, but also not many firings. That is okay for now, but that equilibrium doesn't typically last for too long. So if you were to see labour demand start to tail off at any point, that could quickly spiral into a slightly more negative scenario. So for the payroll report tomorrow, what we're expecting to see is another month of solid payrolls. But as we start to go through the rest of the year, if you were to see payroll numbers start to drop off, that would suggest that uneasy equilibrium is now shifting into something more negative. Easily, though, you could see that if some of the policies start to work out better, deregulation coming through, you could actually see the labour market reheating. Unfortunately, the offset of that could be higher inflation.
All right, Seema Shah, great to see you. Thank you very much.
Thank you.
Turning now to Market Flash on shares of Honeywell. You can take a look here. Shares are popping. The Wall Street Journal reporting Honeywell is preparing to split into 3 independent companies, including separating its aerospace division from its automation business and move ahead with plans to spin off its advanced materials arm. You can see shares are up over 5.5%. This move has been widely expected, but again, shares moving higher on the news. All right, we do have a lot more to come here on Worldwide Exchange, including why one money manager is betting big on an underperforming transport stock, and they say you should too. But first, a look at one cyber stock beating the market year to date. And what's in store for that sector, a CNBC exclusive with Tenable. Plus, Alphabet scraps what is now becoming a controversial hiring practice and falling in line with the rest of big tech. And then later, a big report on deck with Amazon. Why investors, they may want to look to Google and Microsoft for some clues. A very busy hour still ahead. Worldwide Exchange returns. Stay with us.
$1,500 movie? I don't want this flight to end. This is the game changer seat. Look, it even comes with binoculars.
Squawk on the Street, CNBC.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school, and I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information
so you can make the decisions that are right for you.
CNBC is an adventure beyond my wildest dreams.
Invest with an advantage with CNBC Pro.
CNBC Pro gives you the tools that you need to become a better investor.
Go Pro with a flash sale offer for a limited time at cnbc.com/claim offer. Terms and restrictions apply.
It is a really unusually large, maybe once in a lifetime type of opportunity. And I think our customers, the business, and our shareholders will feel good about this long term, that we're aggressively pursuing it.
That was Amazon CEO Andy Jassy on the earnings call last quarter, justifying his company's aggressive spending plans around AWS and Gen AI. Spending on that expected to surge past $75 billion in the year ahead when we're talking about CapEx. Welcome back to Worldwide Exchange. I am Frank Collin. Coming up, we're going to dig into big tech spending surge and the possible winners and the losers of this AI arms race. But first, a check on U.S. stock futures with the major indices and the Russell coming off a two-day win streak. Taking a look, see the major indices up across the board, all three of them up about 0.25%, just a little bit more here for the Dow. Looks like it would open up about 150 points higher right now. We're going to take a look at the NASDAQ 100 leaders right now. Taking a look at those, you see Honeywell right here at the top of the list. We just told you about a Wall Street Journal report. The company plans to spin off its different business units. AstraZeneca, those shares up about 3% following earnings. PDD Holdings, MicroStrategy, and AppLovin rounding out the top five. We've got to look at the other side of the coin, the laggards this morning. Taking a look at those, we also see some earnings movers there. Qualcomm shares down about 5% off of earnings. ARM Holdings also reporting earnings. Those shares down more than 3.5%. O'Reilly, Tesla, and Cognizant rounding out the bottom five of the NASDAQ 100. We also continue to follow ETFs tied to China, Canada, and Mexico, the three countries involved in what we'll call tariff discussions. All three outperforming the S&P this week to date. Taking a look this morning, we are seeing Chinese ETFs, or ETFs tied to Chinese stocks, I should say, moving higher. All three of these right here moving up 1.5% or more. We also want to look at the Treasury market. Bond yields actually moving a bit lower. Partly on news from Treasury will maintain the current level of bond issuance at least for the next several quarters. The benchmark, the 10-year at 4.43, actually moving about 15 basis points lower since the inauguration. And we got to look at the dollar on a two-day losing streak, but still being cited as a headwind by many tech companies. The dollar right now, you can see, moving higher right now, up about almost 0.5% or just over 1/3%. Since the president was elected, the dollar up about 4.5%, a very aggressive upside move for a currency. And we got to look at gold also moving higher, hitting another all-time high. Right now, gold for the year up over 9%. Bitcoin up about 5.5% for the year. But you see right here, as we've seen the trade war start, more investors moving into gold. A lot of investors getting a little bit nervous about digital and cryptocurrencies right now. Bitcoin moving a bit lower. And we got to look at oil. Oil also moving higher on reports of a Saudi price increase. What's becoming an increasingly tightening market. Oil moving higher right now, higher than it was just about a half an hour ago when we checked. WTI, the U.S. benchmark, up just about 1%. Brent crude up just over 0.75%. Natural gas moving into the positive, up about 0.25% as well. We've seen a lot of big moves when it comes to natural gas. Okay, that is your setup now. We want to turn back to tech, and one stock that investors will be watching today, that's Amazon. You can see it's up over 0.5% in the pre-market. Reports after the close today. And following Alphabet and Microsoft's cloud and CapEx stumbles earlier this week, the pressure is really on. Here's CNBC's own Kate Rooney with more.
Hi, Frank. So Amazon does report after the bell today. The number one metric investors are going to be watching is that AWS cloud growth number, especially after Google or Alphabet and Microsoft did disappoint in that area. That, as you saw this week, dragged Alphabet stock down as much as 8%. So it is a bit of a fear factor right now for Amazon investors. Amazon is largely known by consumers for its e-commerce dominance. But you think about cloud and AWS, that is really the high growth engine side of Amazon and a big part of the bull case. So it's been a leader in that space. The number to beat for the quarter is 19% growth. That's a street consensus, but it's basically flat sequentially or from the prior quarter. The next line item folks are going to be watching is spending. Capital expenditures, or CapEx, as it's also known. Amazon is expected to increase spending by around 15%. That's not as big of a jump as we saw with Microsoft and Google and Meta, but Amazon's participation in this spending spree is going to be key to the AI bull case. It's also key to NVIDIA's success. So any soft commentary on spending would suggest that Amazon knows something that the rest of that group does not. So it really could affect an entire sector in tech there. And then watch North American margins. So this is that e-commerce side of the business. Investors want to see that keeping up, expanding. It has been over the last few quarters. That is going to be the expectation. But watch for commentary, especially around tariffs and what that's going to mean for retail as imports, at least from China at this point, are set to get more expensive. How are they going to absorb that? What kind of leverage do they have to pull? And then finally, advertising. This is another growth area for Amazon that has been adding to the bull case, Frank.
All right, I want to give our thanks to Kate Rooney for that report. Let's keep the conversation going around big tech and its AI spending spree with Global X ETF's Director of Research, Tejas Desai, and also with me is Philip Strebel, Chief Market Strategist at Blue Line Futures. Gentlemen, good morning. Great to have you both here.
Good morning, Frank.
Tejas, let me start with you. We've seen, Alphabet get hit for its CapEx spending, but they also said the problem was they just didn't have enough capacity. That's why they missed on cloud. How do you see CapEx spending when it comes to building up AI infrastructure going forward, especially after we saw Alphabet actually get dinged for that?
Frank, I think the market is being a little short-sighted here in treating Magnificent Seven a little unfairly based off of these results. But the reality is that we have a massive generational trend that is unfolding in front of us, and it is going to unfold on a prolonged timeline. I think the risk of not spending is higher. And just like you said, you hear from Alphabet and many of the other CEOs as well that the demand for AI services is incredibly strong. So you're seeing these businesses clearly have these existing franchises that can absorb a lot of this demand, and that is closing the ROI loop. But beyond that, we think there is plenty of healthy demand from the broader enterprise that hasn't even come out there to really try out these AI services yet, right? So really a robust story here, and I think investors should continue to get exposure to the AI trade. But you may want to start thinking about moving beyond stocks like NVIDIA again to position towards the inferencing story and maybe even look at software.
So, Tejas, I just want to be clear. Are you saying that the chip trade, it's cooling off right now and you should move into some other areas, or is there still opportunities in that chip trade with the continued CapEx spending?
I think, Frank, there is plenty of opportunity with the chip trade in 2025, but you have to take the backdrop into consideration. I think we've had this trade work incredibly well, specifically with stocks like NVIDIA over the past 24 months. I think it is a good time for investors to step back and say, where is the needle shifting from here on out, and how do we position for that? And I think alongside companies like NVIDIA, you will see demand for AI inference infrastructure emerge, which is companies like Broadcom, for example, that provide networking, custom silicon. There's many others within the memory storage value chain. But even further out, I think it could be a good idea, again, to move up the stack and think about software-focused infrastructure, think about cloud applications that will ultimately, again, deliver a lot of the value associated with the AI trade.
All right, Phil, great to have you here as well. Investors and companies not only talking about CapEx, they're also talking about currency impacts. Apple and Microsoft citing the stronger dollar as a headwind. Where do you see the dollar going from here? We got just a few days ago pretty close to parity with the euro. Where's the next moves for the dollar based on what you're seeing?
Yeah, we're seeing a big snapback in the dollar overnight. I mean, key commodities like food costs, oil, and materials, we're seeing oil up about 1%. They really impact and drive inflation, which drives growth, monetary policy, and finally the currencies. The strong U.S. currency, it makes it more expensive for these multinational companies to convert those foreign profits into dollars while hurting the competitiveness of exporter products. So the rule of thumb, Frank, you should know that every 10% year-over-year rise in the dollar shaves about 3% off of S&P earnings. So, information technology, materials, communication services, most of those have currency risk with 40% of their revenue coming from overseas and outside the U.S. So Caterpillar, NVIDIA, Micron, Amazon, half of their sales come from overseas, and those are four names that we own in our wealth management side.
Phil and I, you and I actually spoke, I think a couple months ago, just about the stronger dollar and what it could mean for earnings. We have actually seen that play out. Another area we're seeing the dollar gain is against the yen. We talked a lot about that yen carry trade not that long ago. When you and I spoke, you said a lot of times that yen carry trade's used to buy the NASDAQ 100 and other tech stocks. If we continue to see the dollar gain against the yen, how does that impact the tech trade?
It definitely impacts it because of the fact you might see some unwinding of it. I mean, historically, what people will do is they'll take the weaker yen, they'll borrow against it here, convert that to dollars, and they'll go out and buy tech stocks. So we'll see how this plays out. I think a lot of those types of traders that play that carry trade are on the sidelines right now, waiting to see what President Donald Trump's impact on the tariffs with results with Asia and see if that'll play any kind of role on it going forward. He's taking a softer stance against China at the moment here, but we could see if that broadens out if he doesn't get what he wants.
Tejas, we got to talk a little bit about DeepSeek and that impact going forward. So you mentioned you might want to move higher up the stack. What about data center plays and other things like that? Has that story and that narrative, has that changed considerably? What also about energy? We saw energy under a lot of pressure following the DeepSeek news. Has that part of the narrative changed as well?
I think the DeepSeek news is a net positive for the AI infrastructure story. It clearly, I think, drives an explosion in use cases because now you can experiment at the algorithmic layer, you can experiment at the application layer, and at the end of the day, I think it really takes demand for formalized AI infrastructure for data centers significantly up, and really opens the market for mass market adoption. So, I think it is an interesting time here. Again, if you take a step back, the hundreds of billions of dollars that hyperscalers have committed to AI capex are yet to be spent, and naturally I think the chip ecosystem as well as the data center ecosystem benefits from that, and broader adoption is also likely to, I think, move the needle away from data centers towards things like AI devices, right? And we've just had a phenomenal quarter from companies like Qualcomm, for example, that are showing significant traction in that market as well, and I would encourage investors to focus on that too.
All right, Tejas Desai, Phil Strebel, great to see you both. Thank you very much.
Thank you, Frank.
Coming up here on Worldwide Exchange, Trump's China trade war appears to be forcing one major Chinese e-commerce player just to look a little closer at its U.S. customers. We have the full story coming up right after this. Stay with us.
CNBC. Live ambitiously.
Look, in my view, generative AI is going to change the world. It will be bigger than the Industrial Revolution, television, and the internet combined. And I think there's a few reasons for that. All the world's biggest tech companies are spending billions currently on making that the case. The world's investors are saying that's the case. The world's people are saying that's the case. Fastest technology in history to get to 100 million users with ChatGPT 3.5. There's not a single thing that we do as humans using our brains today that you cannot already do better, faster, and cheaper using generative AI. Look, I think the biggest mistake that a lot of marketeers are making today is to think that this is a future thing, not a current thing. And they maybe tried something 12, 18 months ago, thought it wasn't very good. But if you're late to the party and you don't wake up and do this immediately, you'll be playing catch up and you're going to be really losing out.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create, it's so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart, okay?
Squawk Box. Weekdays.
Inside the world's most cutting-edge technologies.
We're seeing a real opportunity for those with brilliant ideas to accelerate towards change.
Discover the secrets and turn innovative ideas into profitable ventures.
Our vision is a world where human prosperity and economic growth are planet positive.
Embrace digital disruption.
I mean, this is life-changing technology.
CNBC Tech, The Edge, only on CNBC.
Welcome back to Worldwide Exchange. As we close in on the 6 a.m. hour, a check on some of the big stories that we are following this morning. Let's start with the trio of chip stocks sinking ahead of the open. Let's start with Skyworks Solutions. You can see shares are down more than 29%, on track to lose a quarter of its value at the open after forecasting sales declines in what had been a highly lucrative mobile segment. Management on the call highlighting increasing competition to get their hardware into Apple's newest iPhones. Shares of ARM Holdings also sharply lower despite a Q3 top and bottom line beat. Current quarter revenue and earnings forecast, however, they came in line with estimates. Shares of ARM down about 4%. Shares of Qualcomm under pressure as well, despite an all-around positive earnings report and current quarter forecast. CEO Cristiano Amon speaking with CNBC, saying even DeepSeek is a tailwind for the company. Still shares down more than 5%. We're also following shares of Ford this morning. They're sinking ahead of the open despite a Q4 top and bottom line beat. The company forecasting a tough year ahead, however, with guidance coming in line or just short of most estimates. CEO Jim Farley speaking with CNBC yesterday saying this company is not making moves with regards to tariffs, at least not for now, but they are watching the situation.
We want a comprehensive policy, not just towards Mexico and Canada. We understand all the pressures on the border and with drugs, but the reality is, you know, Hyundai, Kia, and Toyota can import millions of vehicles through South Korea and Japan without these tariffs. We need a comprehensive look at such a tariff change.
And we're looking at shares of Honeywell. They're popping this morning, up just about 4.5%. The Wall Street Journal reporting the company is preparing to split into 3 independent companies, including separating its aerospace division from its automation business. And they also plan to move ahead with plans to spin off its advanced materials arm. Again, shares of Honeywell up just about 4.5% right now. One more quick check of U.S. stock futures. In the green across the board, the S&P and the NASDAQ losing some of their gains from earlier. The Dow looks like it would open about 120 points higher. Joining me right now is Patrick Frazzetti, Managing Director with Rose Advisors at Hightower. Patrick, good morning. Always good to see you.
Morning, Frank. Thanks for having me.
All right, so Patrick, let's start off. What's your word of the day? How do you see today shaping up?
Vibrant. You know, we're less than a week from pitchers and catchers reporting for spring training, and so hopefully that's usually the early sign of spring coming, and hopefully that vibrant nature carries over into the markets.
You know what wasn't that vibrant, Patrick? The ISM services report. I want to get your take on that. What did you make of that? I mean, it seems like we're past the point where we're kind of reacting to every single economic report. But this one seems very interesting because, again, we're really a services economy right now. I know the president's trying to move us into a manufacturing economy, or at least increase that, but we really are a services economy.
That's right. 80% of our economy is related to services, but that other 20% really creates volatility, right? When it comes to goods and manufacturing. And so we were a little less than expected on yesterday's ISM report. And while I do appreciate that every piece of economic data doesn't seem as important these days in a news cycle that's ripe with headlines, particularly with the new administration, it definitely still has some credence and can certainly move markets.
Okay, so I also want to get to your pick for us today. We teased it a little bit earlier. You have a pick in the transport space. What is your pick for us today and why?
Norfolk Southern. When I look at the potential beneficiaries of an increasingly deglobalizing world, let's be honest, when there's talk of tariffs and such, a domestic transport name like Norfolk Southern, which is more East Coast, Mid-Atlantic, Southeast rail, they're taking market share from other competitors. They reported last week, continue to see their operating ratios move down, which is a positive in the rail space. And I'm expecting sort of low teens compound growth from this name in the coming years. It's an attractive name that had underperformed up until now.
I mean, speaking of underperformance, over the last year, it's up just about 0.25%, almost flat right there. I listened to that call as well, and they cited tariffs as a headwind. Aren't you concerned about that at all? That the company itself is citing tariffs as a headwind when we saw a number of other companies saying it wouldn't be a headwind at all?
Yeah, well, look, I think a lot of that is headline risk, right? And that's where the opportunity comes. Ultimately, you know, when you think about tariffs overall for the economy, it's a negative for sure. But as things shift to a again, from in a deglobalized world to North American production, whether it's Mexico, Canada, or the U.S., I think the beneficiaries will be the companies that actually move the picks and shovels around, and that would be certainly the rails, and I think Norfolk Southern fits that.
Patrick Rossetti, thank you very much. Your pick for us today is Norfolk Southern. You have a great day. All right, that's going to do it for us here on Worldwide Exchange. Coming up, Squawk Box. Have a great day.
Good morning. Chip stocks under pressure following quarterly results from Qualcomm and ARM Holdings. We'll show you what's moving next. And today is the deadline for federal workers to accept buyout offers. Reports say 40,000 people have now agreed to what's called deferred resignation. And the White House expects more as the deadline approaches. And Alphabet's Google is the latest company to roll back DEI initiatives. The company cited its status as a federal contractor. It's Thursday, February 6, 2025, and Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Andrew Ross Sorkin, and yes, Joe Kernan. He's back. How you doing?
The hair's back. I'm working on it. Quite a bit of work.
Nice to see you, sir.
Yeah. Thank you.
Welcome back.
Thank you. It's good to be back. A lot of people were concerned.
There were a lot of people worried about you.
A lot of people were concerned. I'm good. I'm good. It was a real thing. I don't have my appendix, and now I don't have a gallbladder, and the rest I think I want to keep. You know,
the other organs.
The other organs.
Holding on to
yeah.
for now.
There's two you can kind of get by without.
Those are it.
In the gallbladder, I'll let you know how that goes. Yeah. It apparently does perform some important
functions.
Yes, that when you
like
don't.
My tonsils, right?
Yeah, I don't have those either. Those aren't really full organs, but I think eventually, from what I'm reading, you give it time, and the bile goes. Well, we don't need to get into everything, but it goes to the intestine instead of being stored, and things eventually start working like they're supposed to. But it can take a while. So, bear with me today. Being here, if something weird seems to be happening, just wait till a break to ask me. Or
yeah, I didn't want to say anything while you were gone. It's not our story to tell. I wanted you to be able to tell it, but we are very happy that you're back.
Thank you.
We've been concerned.
And it can be, I read about it, I didn't realize that it can be dangerous. It was because it was gangrenous, which if you have anything on your body that's gangrenous, it's probably something that needs to go. But you know how long I've talked to you about GERD. It was never GERD. Yeah. I don't think it was always pancreatitis.
That's what shocks me. I think you've been dealing with this for well over a year.
And you know, you can look at me and say, okay, geezer, you know, all these things are happening. This can happen to people in their 20s and 30s and 40s.
As I told you by text, the good news is the doctor did not remove your humor.
You know what? If you have this happen, it is
intact.
If you have this happen, you need your sense. And you know what? I don't want to overstate it. It's laparoscopic. It's not, you know, but it's, you know, I'm sore and trying to adjust. But I'm glad to be back.
We're glad to have you.
There's a lot of things happening in the world, my man.
There are. But that's one of the things that I was thinking. We need to pace ourselves. I think we need to pace ourselves because it's a fire hose. And then one thing I did notice, I looked at the averages. If I had been on Mars for a couple of weeks, what are they, a percentage point off the high?
The Dow is less than 1% from the high. The S&P is just 1% and less than 2.5% for the NASDAQ.
Isn't the 10-year...
Every single sector is less than 10% from where you're talking about. And
the 10-year is 20 basis points lower.
Yes.
Even with the fears of... But that could be worries about the economy, I guess.
It could also be what Treasury has said just yesterday in terms of kind of extending that longer sales. So they're going to be selling more at the long end because that's what the market wants to buy right now.
You got to bear. I didn't watch a lot of you know. I watched a lot of different cable networks. On some, it's the end of days. On another network, this is the golden age of America is suddenly coming. But a lot of times, I didn't want to watch really serious news, so I was watching those new Sesame Street episodes from Iraq. I don't know whether you saw that we funded for
Right, so this is where the sense of humor piece is still intact, or at least some version of it.
No, it was Iraq. It was 20 million. 20 million.
US aid?
Yeah.
I know where you're going.
Oh.
Never mind.
Yeah, maybe.
But I digress.
Why don't we check out where the markets stand? As Joe mentioned, equity futures are right now indicated a little higher. And again, this is coming after you just saw the markets up for 2 days in a row across all the major averages. Yesterday, the Dow was up by 317 points. The S&P was up by 0.4%. The NASDAQ was up by 0.2%. This morning, the Dow is indicated up by just over 40 points. NASDAQ's just in the red, and the S&P is indicated a little higher. Treasury yields, if you take a look at what's been happening this morning, the 10-year sitting at 4.43, the 2-years at 4.21. So again, yields have come down over the last couple of days. Part of that could be commentary, but again, we'll continue to keep an eye on all of these things as we continue towards the opening bell this morning.
I'll take this versus 5.5%.
Yeah.
If all of a sudden, 2 weeks after the inauguration, it's 5. Then it'd be like it's hitting the fan. So, but it could be, we could be on the precipice of anything, of a market's off. We could be. Everybody's short. You saw those articles that people are getting short. We could be on the at the beginning of an inflationary spike. We need to wait for a CPI.
There's been a lot of talk about that, and the markets have.
We haven't got a single data
higher.
point of CPI or PPI before we slit our wrists. We got to let's just wait and see what happens.
Let's talk about shares of Qualcomm, because they are lower this morning. This despite earnings revenue that guidance beating estimates. On the conference call, executives saying that its lucrative patent licensing business will not have sales growth this year. This after an agreement with Huawei expired. Qualcomm received a small fee from makers of 5G connected products that use its technology. And the company noting that Huawei discussions are still in play. There's a renewal, and it is still possible. John Fort spoke exclusively to the company's CEO last night about the upbeat guidance.
Our customers are gaining share, and the premium tier is expanding. And this is all end customer demand. It is end customer demand. It's not channel. And that's a great story. And it's also reflected in our guide for Q2, which is above revenue and consensus on EPS.
He told John Fort that he believes the release of the latest DeepSeek AI model is good for Qualcomm because chips can run the efficient model locally instead of on the cloud. And of course, that puts them in a better position. Also, take a look at this. Shares of ARM Holdings, they're also lower. The chip designer beat estimates on the top and bottom lines. The current quarter forecast was in line with expectations. Perhaps what was disappointing, though, for investors was that they were looking for the stock's 2025 rally to continue. I'm not sure what the real answer is in terms of why it's come off this, unless it's following some kind of playbook with Qualcomm, but it shouldn't be. And then we should tell you that shares of Skyworks, they are plunging. The Apple supplier forecasting a revenue decline for its mobile segment in the current quarter. Maybe just a collection of all of these things that's really taking place here. On the earnings call, the company saying the reason for the decline is because it used to be the sole supplier for an RF semiconductor used in the iPhone. Now Apple is dual sourcing this type of chip. Revenue from Apple was 72% of the company's total revenue, so it expects a hit to the bottom line this year and throughout fiscal 2026.
And shares of Ford are lower. Earnings of 39 cents. Shares all right versus expectations of just 33 cents. And revenue also beat. However, 2025 guidance disappointed. The Street, the company said its forecast is presuming some headwinds related to market factors, and that includes 2% price declines across the industry. Does not factor in potential tariffs yet from the Trump administration. Ford's electric vehicle business lost just over $5 billion in 2024, including $1.4 billion during just the fourth quarter. But its traditional engine operations and its pro-fleet businesses did carry the automaker to profitability.
And President Trump plans to nominate a familiar face to the Treasury Department. Treasury Secretary Scott Bessent announced that Jason Trennert will be Assistant Secretary for Financial Markets. Yes, Jason, of course, a friend of the show, longtime Squawk Box guest, is the co-founder of Strategas Research Partners, of course, a frequent guest here, going back more than 25 years.
You better not forget. You better, just better not forget when people are trying to get interviews with him and stuff. who his friends
Our
are.
long relationship.
Yeah.
Secretary Bessent also said that Luke Pettit would be Assistant Secretary for Financial Institutions. He worked at hedge fund Bridgewater Associates and most recently served as Senior Policy Advisor to Senator Bill Hagerty. Speaking of Secretary Bessent, he said in an interview yesterday that he and President Trump are focused on the 10-year Treasury. He also said that Trump is not calling for the Fed to lower rates. Bessent said that he will only talk about what the Fed has done, not what he thinks they should do. He said the president believes that if energy prices are brought down, the tax cut extensions are enacted, and the economy is deregulated, that then rates will take care of themselves and the dollar will take care of itself.
There was a lot of talk about what could he do to the 10-year note on his own, irrespective of what the Fed could do. So by buying back, I mean, what is he capable of?
It depends if they come up with a
bond.
You sell different, and that's what he was talking about yesterday. It sounds like an extension of what Janet Yellen was doing. There have been a lot of talk that they bring them down, and he did not. There's also, if they come up with the sovereign wealth fund, the idea that you could potentially buy things back, but all of this is still theoretical.
By the way, what do we think? Since I haven't seen you and we haven't talked about it, what do you think of the idea of the sovereign wealth fund?
I think it's going to be complicated. Where's the money come from, unless you're talking about assets that they've already taken through? Right. Yeah, everybody's doing it, but those countries also have a lot of oil money. And stuff
they have surpluses usually. This is like a company that doesn't have money is levering itself up to go buy stuff. I mean, it's almost that's what it is.
If it worked and you made money, it would help.
I think the question, and the question that even Tim Scott raised when he was on with us 2 days ago, is you want to make sure that it is not leaning any political direction, not with the Republicans when they're in office, not with the Democrats when they're in office, and that would be the tricky part, is having an oversight board that makes sure that it doesn't blow with the political winds.
We always say we don't like industrial policy.
I think that was his way of saying it'd be tricky.
We think the government's terrible at picking winners and losers, and here we are.
We don't like nation building.
Yeah.
You looking at condos there? Yeah.
Look at condos where?
In Gaza, is what he means. Which the White House is really walking pretty steadily from that.
It's crazy, but all I'll say is that the status quo is that we just look at that and I don't know whether thinking outside the box is the way to do it, but it's such an intractable
It is an intractable
right
problem,
now,
but the idea of
sad.
Displacing Palestinians, first of all, where are they going to go? There aren't companies.
I wish Jordan and Egypt. You're not seeing a lot of cooperation from neighbors that you need cooperation.
Jordan already has a huge number of Palestinians that have been there. They've had problems when they've brought them in the past, and that's the issue that
you don't want to just do. We don't need another 50 years of what we've had, and neither does Israel, and neither do the Palestinians.
Yeah.
I would love to find another way to do it. If there was a way to do that, that does not. By the way, I know people thought it was completely insane when he said that. To me, the only problem with that is, and by the way, with Greenland or any of these other things, is there's two issues. There's the practical for the Palestinians, but then there's the message it sends to the rest of the world about, can China go take Taiwan because they want to, and that's okay? Can Russia take Ukraine?
But they don't care about.
No, but I'm saying once you start to say that you're willing to take other people's things and move people around and do, it sort of undoes the order.
Each situation is different. Each situation is different and distinct. Obviously, Taiwan's not necessarily the same as the Panama Canal or something like that. I mean, there's some nuance involved in these things. For Gaza, I'm not the one who's going to figure it out, but it's crazy when he says that, and then all of a sudden, after the initial, just shock and awe, like some reasonable people start saying, well, at least it opens. And in the past, I've always kidded you about when you say it's a conversation we have to have. We have to have that conversation about taxing unrealized capital gains or something like that, where you really don't want to do it, but just saying you want to have the conversation gets you to a point where you're thinking about it a little bit different.
What I said yesterday is the most charitable take you could possibly come up with this would be the idea of trying to come up with a Marshall Plan-like situation. Right. But that would not include displacing Palestinians and taking that land from them. But yes,
but the land the way it is now is just bomb-ridden
something
and
needs
rubble.
To be done. If you can come up with a Marshall Plan and you can find a way to rebuild.
No one wants to be there now, even if it is a homeland.
Unilaterally, I don't think we come in and say, you don't stay there. But yes, the idea of rebuilding and trying to find ways to turn it back into something more like it was,
right,
is going to have to be looked into. All right, when we come back, we will get you ready for the trading day ahead. Everything from earnings to data to a central bank rate announcement. We'll talk about that next. And later, we'll talk foreign policy with expert Richard Haass. We'll be talking about President Trump's announcement on taking over Gaza, his negotiations with Panama, and much, much more. Squawk Box will be right back.
CNBC. Live ambitiously.
Geopolitical stability, I think, is good for growth. It's good for peace.
Our principles are very clear. No agreement on Ukraine without Ukraine. It is impossible to keep NATO safe, the whole NATO territory safe. Yes, for now, yes, we can do that, but not in 4 or 5 years.
A risk is to the downside when it comes to growth, and we'll have to be very attentive to the data.
The structural weaknesses of our economy absolutely have to be addressed.
I wouldn't have been as successful as I was without my team. And I take that throughout my whole career, and I take it into my business life as well, and also with my family. It's all about my team for me.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
Invest with an advantage with CNBC Pro.
CNBC Pro gives you the tools that you need to become a better investor.
Go Pro with a flash sale offer for a limited time at cnbc.com/claim offer. Terms and restrictions apply.
Before they talk to Wall Street, they talk to John Ford and Morgan Brandt. Closing bell overtime.
Welcome to Reinvented with Accenture. Today I'm here with Margherita Della Valle, CEO of Vodafone. You were employee 25 in Vodafone Italy. Today,
the director of the OMB and CFPB. He's also co-chair of Actum Strategic Advisors. Good morning to you. Lots of debate about what's possible, what's not. There's some excitement about it. There's also a whole bunch of folks out there that are anxious about it. Let's just talk about, Nick, to begin with, what you think actually is realistic. And also, we should just define what Elon has said. Obviously, he's talked about $2 trillion, talked about $1 trillion. At one point, he's talked about less than that. So I don't want to put words in his mouth either at this point. But what do you think is possible?
Yeah, good morning, Andrew. In terms of the dollar amounts, the reason I said it would take 40 years is it took them 2 weeks to save the first billion. A trillion is 1,000 billion, so it's 2,000 weeks, which is about 40 years. So if they're going to really save a lot of money, they're going to have to move a lot faster. I don't think that Doge is going to actually be able to save money directly. It's set up within the old U.S. digital services within OMB, and they don't have the authority to actually spend less. What they've got the ability to do is what you've seen here in the first 2.5 weeks, which is shine the light on where the waste, fraud, and abuse is. Then I think it's going to be up to other people to step in and fix it. So I think it does serve a role, but it won't be direct.
Well, that's what I wanted to ask you about, because that's where the anxiety appears to be, right? Look, I would think it would be very good to shine a light on all of this, and the good news is he has gone to the places where you would find out exactly what's going on. I think a lot of people are surprised that he's inside of these things. The question is it a, quote, read-only situation, meaning he's in there and he can expose potentially payments that shouldn't be made, or questionable payments, or things of that sort, or is he able to actually, as he likes to say, quote, delete? And whether he has unilateral ability to do that. Just yesterday, obviously, there's a lot of conjecture about subscriptions to things like Politico and other things, or Politico Pro, I should say, and other things, and whether those payments should be made, or exactly the kinds of payments that USAID is making. Is your view that, A, he's doing things he either shouldn't be doing, but the second piece is this idea that Congress appropriates a certain amount of money and says, go do this. Do you believe the president, and this is a constitutional question to some degree, can actually come in and say, we don't really need to spend all that money on that?
Yeah, 3 or 4 really, really good questions. Let's take that last one first, because that's probably the most interesting, because it is a constitutional question. That's what a lot of this is about, Andrew. That's what all of this is sort of building up to. It's the question of impoundment, and it goes back 100 years to where if Congress says, let's spend $100, does that mean the president has to spend $100 or cannot spend more than $100? Now, in 1974, in the Budget and Impoundment Control Act, Congress said, look, if we spend 100, say you have to spend 100, then you must spend 100. Presidents have chafed under that forever, especially Republican presidents. There's a lot of Republicans, including those in the building behind me, who don't think that's constitutional, and that a president should be able to say, you know what, if Congress told me to spend 100, but 4 or 5 of that is on stuff I really don't like. It's on DEI stuff. It's on Politico Pro subscriptions. Then I have the ability as the executive to say, no, we are not going to spend that. That's the big battle here. Doge is a fascinating conversation. There's no question about it. The stuff at USAID is a fascinating question. But at the end of the day, this is the big fight between the building behind me and the building down the street.
Is it the idea of the presidential line item veto, though, and how does that play out? If there's first of all, I'm not sure that the Republican-led Congress is going to complain or go against what they're doing right now, but you can imagine that it's something that's going to play out in the courts, and I just wonder what that means for Elon Musk and anybody else associated with this, the idea of getting dragged in for Lord knows how many depositions you might have to deal with down the road.
Oh, yeah. Listen, there's going to be lawsuits. When the memo came out from OMB, it feels like it was 6 months ago, but I guess it was 6 days ago. On the funding pause, there was a lot of us, myself included, who thought this was the first chess move. This was the first move that said, you know what we want is we want to get sued. I'm talking now about the Trump administration, because what we want to do is get sued in 5 or 6 different circuits so that we can have a difference in the courts of appeals on impoundment so that we can get to the Supreme Court. That's where I think this is headed. Again, you can have fascinating conversations about Doge. I remember sitting at CFPB, Becky, a couple years back, asking a question. Look, nobody's coming to work today. Are we worried that any of these folks are working another job when they're back at home? And I was told by the career staff, there's no way we can find it. Well, Doge found that here in the first 2 weeks on the job. So there's some really good things happening with Doge. But it's sort of a sidebar to the bigger discussion about the fight between the White House and the Congress over impoundment.
Right. And Mick, the other question I have is, we're hearing now about, various payments that people say could be questionable. We raised this issue of Politico Pro, which, by the way, most companies subscribe to and parts of the government subscribe to because hopefully they offer services and news that is of value. They may charge a lot for it, but that's what it is. How do you think the public should think about some of these things that we're learning about? I mean, the other pieces we're hearing about USAID and, Joe, we were making a joke earlier about, payments to Sesame Street, to do a Sesame Street in Iraq, and how we're supposed to think about that. I know that, there's some Republicans that like that or have liked that agency because they compared it to what, China does with, the Belt and Road Initiative in terms of just influence around the world in certain places.
Yeah, soft power is real. There's no question about it. And what I keep trying to remind people of, $1 billion is a lot of money. $100 billion is a really lot of money. And when you're going to spend that much money, like the building does behind me on a regular basis, there's going to be some good stuff that you can do and some bad stuff. The question is, how do you go in and figure out, let's do this, but not this? Your point on Politico Pro, for example, and I hate to give them the free advertising, but there we go, is a good one. We used to pay for that in my office when I was in Congress. We used it as a service. USAID was giving them $8 million a year, apparently, according to the information that came out here in the last couple of days. You have to wonder, is that for subscriptions or is there something more to that? This is a debate we've never had. This is the stuff that sort of exists in the background.
But it was weird coming right at, wasn't it the Politico, the former with Tara Palmer, weren't they at Politico where she said they said absolutely no laptop coverage? At Politico, wasn't that the week before? And it just if it's not quid pro quo, it at least sort of smells like it, Mick. It almost looks like they went totally.
Just as a point of fact, and I don't know enough about this. The folks who run Politico came out yesterday and said very explicitly that they have never been funded or subsidized by the government in any way whatsoever. So we have to understand
they can
what
still
those
say that, but
payments
still
are, and whether that was a subscription to. Whether that was a subscription to just a lot of Politico Pros, I'm not sure what that was. Also, there were a whole bunch of payments made to all sorts of media organizations, supposedly.
Nobody pays that much for what's CNBC Pro? Now, we're worth that much.
Well, no, but there's also, U.S. Department of Health, U.S. Department of Health, others that advertise in publications. The Army, by the way, advertises in public. I mean, people forget the U.S. government, for better or worse, does have to advertise in places. They have to spend money in places. So I don't know enough about this, and I'm not defending it. And I
don't know enough about it either.
But I also I want to put it out there because I'm a little anxious that we're looking at some of these numbers and we don't totally know what they all mean.
Yeah.
You're right, Andrew. But look, what are we doing? We're having a debate that we otherwise would not have had. Nobody even knew about this. In fact, Congress has said in the past they tried to get Samantha Powell, who was running USAID, to give them this information, and she wouldn't. That's what excites me here, is that we're finally getting good data. Right. Go back to my example of the CFPB. Now we might find out if there are federal workers who are getting two checks. They're working the government and a side hustle on the days they're not coming to office.
So I agree with you. If you can see these things, that's very helpful. And look, to me, in the grander context, to use Politico as an example, the best way to use this information would be for all of these agencies through Elon Musk to be able to say, oh, you know what? This agency is buying these things. This agency is buying these subscriptions. This agency is buying these subscriptions. The government's buying, whatever, X thousand subscriptions. Because we're doing that, we should actually all go in together as all of these agencies as one and call up Politico and say, you know what? Actually, we still want all of this. But we realize that we're like a huge piece of this. We want a better deal, right? I mean, that's typically one of the reasons what a big conglomerate does is say, okay, we're going to renegotiate our deals because we actually now have more leverage in these things. That, to me, seems like a better way to use it than necessarily to sort of do it by sort of the rhetoric of what people on X or other places think or like. I mean, I think that's a little bit what I also worry about, just the influence, the sort of public influence, not that we shouldn't see this stuff, but on sort of what people think is right or wrong, and in the day-to-day job. As you said, you may like that service. The public may think, well, that seems like a very expensive service, right?
Yeah, but look, there's two ways to look at efficiency, right? It's either getting the same for less or getting more for the same. This is why when folks asked me yesterday about DOGE going into the Department of Transportation, they say, oh, are they just going to cut spending over there? I'm like, no, this is great. If we can get a better Department of Transportation for the same amount of money, that is efficiency. If you can take that attitude across the entire government, it's what Republicans have said they've wanted for a really, really long time. Look, I get the fact that Elon Musk isn't elected. I got news for you. Nobody in the executive branch is elected except Donald Trump and J.D. Vance. I certainly wasn't elected when I ran the Office of Management Budget or CFPB. But these are good conversations to have. I think they're healthy. It's messy because we don't do it in Washington, but it's good that it's happening after too long of a wait.
Okay, Mick Mulvaney, it's always a longer conversation, and I hope to have an opportunity. We all want to talk to you more about it soon. Thanks.
When we come back, quarterly results from Eli Lilly and Bristol Myers Squibb. Squawk Box, we'll be right back.
Welcome to Reinvented with Accenture. Today I'm here with Margherita Della Valle, CEO of Vodafone. You were employee 25 in Vodafone Italy. Today you're the CEO of Vodafone. What is your strategy and vision for the future?
We are changing our culture to really focus on our customers. We need to acknowledge that change is hard, but if people understand it's for the right reason, then you get the power of the organization with you.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC. Before they talk to Wall Street, they talk to John Ford and Morgan Braddock. Closing bell overtime.
Welcome to Decision Time. I'm Juliana Tattlebaum, and we are moments away from the Bank of England's first rate decision of the year. Markets pricing in a 25 basis point cut, the central bank's third cut since the pandemic. There's a look for you on your screens at how sterling is trading in the lead up to this decision. We're down about 0.7% to 124.21. Gilt markets have seen a lot of volatility this year. Right now, we are looking at yields lower across the board on the session. The 2-year trading around 4.129%. The 30-year just over the 5% mark. Ahead of the decision, gilts and other European sovereign bonds were put in quite a strong performance yesterday. Gilts saw the biggest decline in the 10-year since the CPI released 3 weeks ago. So we have seen a lot of movement in gilt markets recently. As for the FTSE 100, it's been quite a morning for the main benchmark, up more than 1% to a record high. We've got the basic resources names in the UK rallying this morning. Also AstraZeneca reporting results this morning and providing a boost to that index. So quite a strong start to trade for the FTSE 100. Let me welcome James Sproul to Decision Time, Chief UK Economist at Handelsbanken. James, great to have you with us.
Thanks.
It seems like the market is pretty sure that a 25 basis point cut is coming today. Are you in the 25 basis point camp? And if yes, what are you watching?
So I am in the 25 basis point camp. Certainly we're going to see a bit of further falls in interest rates. I think it's actually justifiable in terms of, where is inflation right now? It's still above its target, of course, but we're quite some way above the neutral rate of interest, so we can maintain a degree of pressure on the economy and still reduce rates by a little bit. What I'm more uncertain about is what's going to be going on next. How many more cuts this year? And what's going to be happening to inflation, particularly in May, when we start to get through both the national living wage and those national insurance rises. So there's more question coming out towards the middle of the year.
Well, let me ask you about that a little bit later. And for now, just ahead of the decision, in terms of the vote split, I know that is something that a lot of investors are watching. Last time we had a 6-3 vote in December to maintain rates. 3 preferred to cut then. What do you expect the breakdown to be today?
I'm thinking for 8-1. I'm thinking Catherine Mann is going to be in a hold and the others are going to go for the cut. It's widely predicted by the market. That's not necessarily the MPC is going to be swayed by that, but the fact is they're looking at the various things. They see the economy as a whole slowing, and whilst their mandate is quite clearly inflation, that's the only thing we need to concentrate on. Inflation is still, as I said before, some way below or above its target, but not so much that justifies interest rates at the present level.
How could you justify being hawkish and holding rates if we do get that one dissenter?
Well, having listened to Catherine Mann and her speeches, her view is we will maintain rates at a heightened level until we get it sustainably at its target level. Well, I think that's probably more hawkish than anybody else on the MPC is willing to be.
And I think you make a great point that for the Bank of England and the MPC, inflation is their only mandate here. And that's important to bear in mind relative to the Federal Reserve, that for them it is really all about the inflation picture. We are just moments away now from the decision. You've got sterling in focus, as you just saw on your screens, and the Bank of England has cut rates to 4.5%, bang in line with the expectation. In terms of the color here, the vote was 7-2 to cut rates by 25 basis points to 4.5%. The consensus expectation was 8-1, just like you flagged, James, just a moment ago. So that will surprise some. The dissenters, Catherine Mann, as expected, and Swati Dhingra, in favor of they were the 2 dissenting votes. In terms of the color here on how the Bank of England has framed the decision, the CPI inflation is set to peak at 3.7% in Q3. In November, the peak was seen at 2.8% in Q3. So that is a change. Return to target expected in Q4 2027. Governor Bailey saying we will take a gradual and careful approach to reducing rates further. And in December, the wording was a gradual approach. So they've added the word careful. Make of that what you will. We'll see, James, what you think about that wording change in just a moment. GDP expectations, we're looking at growth in 2025 of 0.75%, down from 1.5% forecast back in November. 2026 revised to 1.5%. We were looking at 1.25% in November, so that's been revised slightly higher. 2027 growth seen at 1.5% versus 1.25% expected previously. So basically they've downgraded their growth forecast near term for 2025, but they've slightly upgraded it for 2026 and 2027. Members expressed a range of views on the economic outlook. And one member who voted for a larger rate cut sought activist signal on appropriateness of UK financial conditions. So that is... that is interesting. So external members Dhingra and Mann voted to cut rates by 0.5 percentage points to 4.25%. So that is really interesting. Let's bring in Jane Foley, our FX strategist from Rabobank, to give her take on not only the decision, but Jane, I think the most gripping part so far, not only the changes to the economic forecast, but these two dissenters.
Absolutely, those two dissenters, and that is something that is going to get the market's attention, as you've been discussing. The market was expecting Catherine Mann to highlight the more hawkish case for the market, and it was going to be, as far as the consensus was concerned, a fairly straightforward voting pattern, which is not what we've got. So that is clearly going to get the market's attention, but also that downward revision to growth in the near term. Now that is something else that the market is going to be focused on. Now, not a huge surprise that we did have the Bank of England in December revising down its expectations for Q4 growth relative to that November forecast that they had made. So I think most people had anticipated that we would have a downward revision to growth for this year. But it does raise the question now, even though the bank, of course, have a mandate that's focused on inflation, well, the inflation in 12 months' time or so is really going to be dependent to a large degree on how growth is doing. And if we do have weaker growth, does that mean they're anticipating weaker inflation and therefore more room for interest rate cuts? So I think these are the topics that the market is going to be discussing.
Jane, thank you for your take. James, let me come back to you. We were just discussing before the decision that Mann was expected to be a dissenter, but not in this direction, not calling for a 50 basis point cut.
Absolutely. That does surprise me. But the thing that doesn't surprise me really is that sticky inflation. And that sticky inflation has been something that we at Handelsbanken have been saying for some time. This is going to be the problem. How do we get that service sector portion of the economy? How do we get people, largely about wages, how do we get that number to start to come down? And that's a challenge. And I think it's something the bank really looks at. And that's going to be driving their interest rate decisions going forward. It's the one thing that certainly I look at, I know the Bank of England MPC looks at a lot. What's that service sector number?
Another line I want to bring your attention to is around tariffs. This is clearly a big macro risk for central banks. The BOE saying it's monitoring U.S. tariffs closely. More protectionism would have a negative impact on the world economy. So not a huge amount of color in the early moments anyway on what it might mean for the UK specifically. How do you think they're factoring it into their models, and how will that complicate the inflation picture here?
I think there's a couple of points here that are really interesting. One is that, of course, there's a lot of discussion about how inflationary are tariffs, and the answer is it's difficult to say, but the feeling for the UK is probably not all that much. Now, the UK runs actually quite a good trade surplus with the US, but it's almost entirely down to services, which of course are not subject to tariffs. So I think that what President Trump is doing is using tariffs as a weapon to sort of get people's attention and to get his way on a wide range of issues. I mean, it might be, you're talking about trade, but what he wants is, for instance, you to raise your defense spending to the promised levels of NATO commitment, etc. So he might be looking for that. I think what's going to be happening here is a lot of trade. He wants deals to get done, and so he'll look for that, and that's fine. He's the president. He wants to do that sort of thing. And I don't think that it's going to be particularly impactful on the UK in the short to medium term. We'll see what happens in the longer term, but right now I'm not particularly worried about tariffs from the UK's point of view.
Well, James, thankfully you're sticking with us. Jane Foley is also going to stand by, but now let's get out to Steve, who's been locked in all morning. Steve, the market is surprised by these two dissenters. Not what they were expecting. We're seeing the pound drop by about 1% versus the dollar. Give us the detail that you've got.
Well, I think the market's wrong. I mean, sorry, I'm going to go for it. Yes, okay, they're looking at the headline. They're looking at the rate cut. Great, 25 basis points. They're looking at the two dissenters. One of them we knew was anyway, Swati Dhingra as well. But Catherine Mann going from being the hawk to going for 50 basis points as well. That looks really dovish, but the market needs to look deeper in the NPR, and luckily I've been doing that as well. There are less rate cuts ahead forecast. i.e. forward projections, first quarter 2026, we're basically seeing the growth estimates going down, inflation estimates remaining very, very sticky as well. But over the longer term period, the projections for interest rates remain higher than the market had previously expected, i.e. We're looking at potentially only 4.2% by rate levels, base rate level, by the end of this year. And by the end of the forecast period in 3 years, only 4% as well. So if the market thinks this is dovish over the medium to longer term, that's not what I'm hearing. In fact, I think very much this is a hawkish cut in many ways. I see what they're saying about Catherine Mann, but look beyond it. They're saying here in the report as well, risks are two-sided. Andrew Bailey talking about gradual and careful as well. And also, I think there's some underwhelming data in the growth. The market might be right about the growth data as well, because in the first quarter it was seen back in November at 1.4%. It is now seen at 0.4% and only gradually moving up to 1.8% by the end of the forecast period in 2028. So in terms of interest rates, they are not going to go down according to these projections as swiftly as the market wanted. Let us take a step back from what we've been saying as well. The market was expecting around about 85 basis points of cuts this year before this decision. Well, we've just had 25 basis points of those. Well, where are the other 60 going to come from? Well, according to this, they're not, because we're only pricing in another 0.3 of 1% from where we are at 4.2% as well. The problem is also about inflation. This is going to be very tricky and very bumpy, according to what the Bank of England is saying. We could see a spike in inflation in the third quarter of this year to 3.7%. Wow, think about that. I've just said to you at the end of the first quarter, growth is going to go down to only up 0.4 of 1%, and only a couple of quarters later, inflation up to 3.7%. Hang on a second. It feels and smells like stagflation. No one at the Bank of England is going to say that. No one at the Treasury at number 11 Downing Street is going to want to say that. But there are people who are going to add 2 and 2 together and say, have we got stagflation in the UK? Now, the Bank of England isn't saying that. In fact, the Bank of England is saying the external factors which are taking us up to 3.7%, including regulated price increases from Ofgem, plus international global prices and energy, they will abate and we will get back to 2% inflation by the end of the target period, later on in the target period as well. But there will be those there saying this is going to be a very delicate equation for the Bank of England. A couple of other factors I want to factor in there as well. I've just been looking at where the growth is from the government strategy as well. Where's the growth expectations from the government's budget? Of course, this is a government that says growth, growth, growth. Well, how about this? According to the agents, according to the Bank of England, business indicators declined. Consumer confidence declined. Labour market continued to ease. That doesn't look good to me. Productivity growth is weaker as well. Where is the growth from the government strategy? There is a feeling that because it's about big infrastructure projects, it's about Heathrow, it's about broader structural changes, it will come through towards the end of the period. But again, I say to you, 1.8% is the forecast for first quarter growth in 2028, only 1.3% in 2027, and as I mentioned earlier, only 0.4 of 1% in the first quarter of this year. Growth looks stunningly hard to achieve. Final point I want to make as well is there is a whole box and a whole section later on in the NPR. I did go through the whole thing. Looking at the implications of international policies, of what's going on with tariffs and Trump as well. Very, very difficult, I can tell you, for them to judge anything from there as well. But they have been adding that financial market volatility has been leading gilt yields to follow the US rather than take a European path. And I thought that was very interesting. Anyway, we'll be asking a lot of these questions of Andrew Bailey. That one is 4 p.m. London time. Yes, the market's right to see the growth figures as concerning, but the market, if they think this is a dovish cut because of what Catherine Mann has seen there, I would suggest the market needs to look at the forward projections on interest rates in this year and by the end of the forecast period. Back to you.
Steve, brilliant context. I'm glad that lock-in was worthwhile. I think that's really helped frame the decision and help us understand and how to think about this 7-2 vote. So thank you so much. Let's get back to our guests now. James Spruill is still with us, Chief UK Economist at Handelsbanken, and Jane Foley, Head of FX at Rabobank. Jane, let me come to you. We've watched sterling continue to sell off over the last 10 minutes since the decision has come through. My colleague Steve, you probably just heard him. He's been in the Bank of England all morning. He said this is a hawkish cut, despite the fact that we had 2 dissenters calling for 50 basis points. What do you make of that, and what do you make of the sterling reaction?
Well, if that is the detail, the devil is always in the detail. Well, the sterling bears are going to come confronted with some buying pressures probably as the Bank of England begin on their press conference. Now, certainly, I think the inflation risks are certainly going to be, key as we look over the next quarter, the next 2 quarters. And we know that there are inflation risks. So for instance, energy prices, that budget, of course, and the possibility that employers will pass on that national insurance contribution into their consumer base. There are headwinds certainly for growth, the tight labour market, but the tight labour market does appear to be abating. This slowdown in growth would certainly play into that court. So the risks on inflation are both sides, and I think this is going to be something which is really going to play out during the course of the next 3-6 months and the course of the year. To what degree are the weaker growth outlooks really going to help suppress some of those inflation risks that we are confronted with?
James, what do you think about the Bank of England's handle on the situation here? Is there credibility in question, or do you think that the market can still be confident that they are, handling the situation well?
I think the Bank of England, I mean, they've had some questions, obviously, the last couple of years, in so much as they thought inflation was transitory. It clearly wasn't. It went up to 11%, way over their target. So that, I think, probably hurt them a bit. But more recently, I think they've actually been pretty good. And so I think they do have a reasonable amount of credibility. I think people are clear that the Bank of England itself is focused on that one thing, inflation. And, as Jane was saying, some of the pressures that the UK economy is under in terms of labour markets, etc. I'm not quite as sanguine because I think that what we saw in the last few years was quite a lot of labour hoarding. Businesses very reluctant to let people go. I think that's also contributing to the fact that people are getting reasonable pay increases to help them cope with the inflation that we've seen over the last couple of years. And that, of course, is adding to inflation going forward into our forecast period. And so it's going to take some time to really push it down out of the economy as a whole. And the Bank of England is very conscious of that. And so I would welcome today's not just the cut, but also the wording that goes around it, which I think is good. Slower for longer is absolutely in line with what we think in terms of sticky inflation.
So we're, in a nutshell, looking at higher for longer when it comes to rates.
Absolutely, we are, yes, absolutely.
And how concerning is that from a growth perspective?
Well, I mean, of course, the Bank of England, that's not their mandate, so they don't care.
Right.
It's a big problem for the Chancellor, of course.
Right. And as an economist, I mean, what do you think? What's that going to do to growth?
It's going to keep it subdued. And the Chancellor gave a big speech last week where she set out what she wanted to have, the economy growing. And there were some surprises in that speech. And one, she brought it at Heathrow, but that sort of being reheated. Many people have wanted to see that coming through for a number of years. But the other one was no addressing of some of the issues that really concerning business. There's been a lot of concern around the Employment Rights Act. No mention of that. And so perhaps that's something the government can look at. And, if you want to reassure business, you want to spur growth, you've got to look at everything. And that might be one of the things that would bear looking at a little bit more.
Jane, let me come back to you to wrap things up. When it comes to sterling, we are seeing a sizable move today. What do you think is fair value for sterling, and what would you be doing here? What would you be advising your clients to do with the currency down by more than 1%?
Well, I would imagine that cable is still going to be knocked around quite a lot by the political and economic developments in the US. But in terms of euro sterling, yes, sterling certainly had a setback today. But if this does come across eventually as a hawkish cut, well, sterling can pick up some of that ground. Now, I think when you look at sterling against the euro, we've also got to look across the other side of the channel and recognise that there are growth issues in Germany and in France too. France had some better news this week, but certainly it still has concerns regarding its budget. So sterling may still be able to outperform the euro this year, but I think a strong dollar is going to keep sterling on its toes with respect to cable.
Jane, thank you for sharing your view with us. That's Jane Foley, FX strategist from Rabobank. James Spruill, chief UK economist from Handelsbanken, has been with us to digest the decision. James, thank you for joining us. Do stay with CNBC. We will be bringing you Steve's interview with the Bank of England Governor Andrew Bailey. That's coming up at 1600 GMT. But that is it for Decision Time. We'll hand you back to our colleagues stateside.
In private at this point. Bausch & Lomb telling investors that full separation from Bausch Health remains its goal, but that stock right now down by about 5.5%.
Meantime, shares at Peloton, they're moving higher. The company reporting a loss of 24 cents a share was wider than the street expected, but revenue topping expectations, coming in at $674 million versus $654 million. And for the full year, Peloton raising its guidance for adjusted EBITDA, revenue, and free cash flow. That stock up about 10% on the back of that news, sitting at $8.40 right about now. And then take a look at Under Armour shares. They are also higher, earnings coming in at 8 cents a share, 4 cents better than expectations. Revenue of $1.4 billion. That topped estimates of $1.34 billion. Company raising its annual forecast at this point, now expecting 2025 revenue to decline by approximately 10% versus a prior expectation of low double-digit percentages, double-digit percentage decline. But people liking this.
Yep. Coming up much more on the markets. We're going to count down to the opening bell on Wall Street. Also counting down to the Super Bowl. The sports book and all the sports books gearing up for record wagering, but with more competition this time around. We're going to have a live report from New Orleans. Squawk Box is coming right back.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school, and I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today. Can't miss reporting that impacts your money now. Be here when the opening bell rings. Squawk on the Street. CNBC.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
President Trump making some more comments about Gaza this morning. On Truth Social, the president said the Gaza Strip would be handed over to the United States by Israel at the conclusion of fighting. The U.S. would slowly and carefully begin construction and development. He also said that no soldiers would be needed. Joining us right now to discuss this is Council on Foreign Relations President Emeritus Richard Haass. He's a senior counselor with Centerview Partners. And Richard, the condemnation from some of the Mideast powers has been pretty fast and furious. The Wall Street Journal leads with this today, just talking about Saudi Arabia and Jordan saying, forget it. They will have no relations with Israel as long as the idea of removing Palestinians exists out there. This is certainly walking back to some extent what the president said earlier in the week. It shocked some people, including it looked like his chief of staff, Susie Wiles, who was standing behind him watching through all of this. What's the reaction been, and where do you think we wind up a week or two from now?
The reaction is predictably negative. This doesn't resolve the Palestinian problem. It actually makes it worse. That's one of the rules of the Middle East, Becky. Bad situations can always get worse. This is not what the Saudis want to see. Rather than enabling them to normalize with Israel, it makes it more difficult. Jordan could become extraordinarily vulnerable, even destabilized as a result of this. So I don't think this goes forward. I think the real danger is whether a couple of things, whether it gets in the way of the implementation of the ongoing hostage prisoner exchanges between Hamas and Israel, whether this encourages the right wing in Israel to think that the future should be one of which Palestinians are transferred, not simply out of Gaza, but conceivably out of the West Bank, which is another 3 million individuals. So I think if we're lucky, this blows over and that we essentially go back to the difficult, slow work of Middle Eastern diplomacy, see whether we can get to phase 2 of the hostage agreement, resume talks between Israel and Saudi Arabia. And the real question is whether this administration, and there's no signs of it yet, is prepared to talk honestly to Israel and say, hey, you still need a serious day-after plan for Gaza. You still need to put out some horizons for Palestinians. We're not talking about a Palestinian state this month or this year or maybe even this decade. But we've got to open up some process in which we begin to marginalize Hamas politically. And we show the Palestinians, if, it's a big if, they're willing to live in peace with Israel, there's something in it for them at the end of the day. But at the moment, I'll be honest with you, and you got at it a little bit, the lack of a process here, the lack of careful consideration of the options, the history, what this could set in motion, that is not a good sign.
You know, there had been many people who thought when President Trump was elected that maybe he could negotiate some sort of a truce, some sort of a peace between these groups, particularly given his relationships not only with Israel but also Saudi Arabia. If you look at the best case scenario, where do you wind up?
Well, the answer is he could. He actually inherits the Middle East in no small part because of Israeli military action, which gives him 2 enormous opportunities. One is with Iran. Iran has been on its heels, and there's real opportunity, and the president talked about this, about negotiating what he called a verifiable peace agreement with Iran to deal with its nuclear program. I think that's one real opportunity for the administration, not to use force unless it's essential. And then secondly, with the Palestinians and Israel, to build on the modest progress that we've seen. But again, that means reining in Israeli settler activity, and it means he can have an honest conversation with Bibi Netanyahu about the future. Who better than Donald Trump? If it were Joe Biden, Bibi Netanyahu, as we saw, could do an end run around the administration. Donald Trump is the administration. There's no end run anymore available to the Israeli government. Almost like only Richard Nixon could go to China.
Right, that's what I was just thinking. Yeah.
Donald Trump has an opportunity, given how he's perceived in Israel, to have an honest conversation with Israel and say, hey, we have your back. We want you always to be a secure, prosperous Jewish democracy, but here's what you have to do. And that's his opportunity. It's not to be found in resettling Gazans in Jordan. It's to be found in making the West Bank and ultimately Gaza a place of opportunity for Palestinians if, big if, they're willing to live peacefully with Israel.
So let's talk about China since you brought it up. The issue with China and tariffs, maybe not going to go away as quickly and easily as the situation with both Canada and Mexico seemed to.
Well, in part, there's structural reasons to have tariffs against China, as you and everyone watching this knows, given their massive subsidies, their export-led growth, and so forth. That said, China's gotten smarter about how to retaliate, and we've seen signs of it already. But no, I think tariffs vis-a-vis China, there's some legitimacy for it. You don't have to, if you will, conjure up new fentanyl problems or immigration problems like we did with Canada when none basically existed. But with China, there are real issues. And I think the question is, how do you resolve them narrowly in the economic space? But we've also got a much broader agenda with China. It's support for Russia, what it might do in South China Sea, or vis-a-vis Taiwan. And that remains to be seen, which is what is this administration's China policy writ large?
That does remain to be seen. And Richard, we will have you back to talk about that and much more. Thanks for your time today.
Anytime.
Coming up, inside the wide world of sports, from big trades in the NBA, high-profile owners selling out, and let's not forget about the big game this weekend in New Orleans. Boardroom co-founder and CEO Rich Kleiman is going to join us to break it all down in just a couple of minutes. Squawk Box coming right back after this.
CNBC. Live ambitiously.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers. Try loads of different things. You may start off as a biochemist, but want to be a TV anchor. Try lots of different things. Then you'll find out what you like the most and what you're best at. Before I was a CNBC anchor, I was a trader in the city for 11 years, trading all kinds of financial products. I think CNBC viewers are ambitious. Clearly, by watching the show, by watching the channel, they want to improve their lot, improve the lot of those around them as well.
I'm going to show you some cool stuff, Nessa.
Yeah,
that's
absolutely cool. That's a mask of your face.
Rajat Maheshwari is part of the Cyber and Intelligence Solutions team at MasterCard. In his role, his team develops tools to manage customer risk and prevent scams. Part of his role involves getting in the mind of potential fraudsters by creating fake identities.
So these are synthetic IDs as good as a genuine ID. You can have these identities, you can have the face mask, that person can do anything with these.
Right.
This was done by a Japanese artist who did the mask for James Cameron movie Avatar. Sometimes we have to think like bad actors to come up with the solution which can stop these things. You have seen that the world has evolved from these masks and now the deepfakes are coming in. The intent was not to break the technology, but the intent was to help the solution providers.
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI. Special offer ends February 11th.
The age of AI is now.
Before they talk to Wall Street, they talk to John Ford and Morgan Bradley. Closing bell overtime.
Welcome back to Squawk Box. Let's get the futures this morning. You can see there a little bit of upward movement. There's not a lot to write home about. S&P's up 2 straight days. Check out the price of Bitcoin, which has been hovering just below 100,000 recently, 98,563. All right, coming up, the Big Easy, getting ready for the big game. We're going to get a live report from New Orleans on the competition for all the wagering.
You know who's going to be down there?
You?
The president.
Oh, it's the first time a sitting
Bowl.
president's going to be at a Super Bowl.
President Trump supposedly going there. It would be the first time.
Going to have an interview before.
Yeah, but the interview is something that's been standard fare, but this is the first time a sitting president's actually going to be at the Super Bowl.
And it's a Fox broadcast, and Brett Baer's doing the interview. I know.
Yes, he is. It's not always. Traditionally it is, but I think in the last few years there have been a couple of instances where Biden didn't do it live. Yeah.
Interesting. And then boardroom co-founder and CEO Rich Kleiman takes us inside the business end of sports. Is there any other end of sports? That's next. Squawk Box will be right back.
That sounds dirty.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
With everything what now happened in the United States, that is certainly a wake-up call. And this wake-up call now, still we need to see proof, but I hope now also Europe comes closer together and we really form a union.
I do believe we need a really fresh start if it comes to regulations. Don't start fine-tuning what we have. It's not that we're against it. We know that we have to move our agenda regarding critical resources or energy consumption. That's all fine, make it greener. But it has to be in a way that we do not slow down business.
German businesses do complain as one of the key items to us as being overburdened by too much reporting, too much red tape. And this is something we have to solve domestically, so we can't only finger point to Brussels, but we have to also join forces in Europe to reduce the reporting requirements.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC.
The Super Bowl. We're talking about gambling. Super Bowl is just days away, and the sports books are getting ready for record-breaking wagers and increased competition. Contessa Brewer joins us now from New Orleans with more. Hey, Contessa.
Hi there, Joe. Yeah, $1.39 billion. That's the estimate of how much Americans will wager on the nation's legal licensed sportsbook, according to the American Gaming Association. Last year, that estimate was a total of more than $23 billion. Why the big jump? Because last year's estimate included office pools, illegal bookies, and offshore operators. That illustrates the juggernaut, right? And this year, you have Kalshi and Crypto.com crowding their way in. Robinhood tried and just this week ditched its efforts to accept trades through the predictions markets. Plus, of course, there's sweepstakes-style gambling and offshore markets that are all offering bettors a way to add some additional excitement to this big game. What the sportsbook really want is not to compete with these operators that don't pay state taxes, haven't paid billions to lobby, legalize, and license their platforms, and don't adhere necessarily to know your customer regulations or face potential backlash from regulators over problem gambling concerns. Derek Stevens, who's the owner and CEO of Circus Sports, told me it doesn't really make a lot of sense to be paying tens of millions of dollars in taxes and fees to states as a licensee if a legal business model exists without all of that extra expense. Well, I asked Chiefs quarterback Patrick Mahomes whether this whole boom in gambling is good for the game.
He gets people watching. I think that's good for the sport. But at the end of the day, I want people to realize that it's a game that you play on the playground for recess. And it's stuff that you just go out there and give everything you love. And I think that's what we try to do on the football field. And I think that's everybody on that football field.
Around New Orleans, FanDuel has huge advertising blanketing buildings on Canal Street. Caesars, of course, you've seen it all morning in those live shots, has named the Superdome, and it is unveiling here nearly $500,000 in renovations at its casino and sportsbook and the hotel. I mean, look, this is a great opportunity to win customers. The customer acquisition opportunities around the Super Bowl are by far the best of the year. You guys might already know this, but the Chiefs right now 1.5-point favorites. And tomorrow it is an all-star gaming lineup, starting with FanDuel CEO Amy Howe will be with you guys again right here on Squawk Box, Joe.
Well, that's great. All right, Contessa, I'm going to try to figure out exactly what 1.5 points really do. I never understand what that does for me. But then again, I have... But
now you can just plug it in. It'll tell you what you would win.
I know, but normally I figured just why not just do the money line? I don't need your 1.5 points because it's never that close. But you know what? It always is. It always, the way that they do it's amazing. All right. Thank you, Contessa. Maybe you can explain it, Ruth.
Joining us right now to talk about that, the Super Bowl, you're going there in just a little bit, the NBA and the world of sports, Boardroom co-founder and CEO Rich Kleiman also has got a big announcement with Fanatics and Fanatic Fest, which I want to talk about in just a little bit. Super Bowl. You want to talk Super Bowl or you want to talk NBA first, though? Because I think
Super Bowl.
You want to talk about Super Bowl first. I think the big question that I would just ask you is, you know, we're talking about how President Trump is going down there. It's first time president's gone there. Just how, I mean, this Super Bowl in particular, but all the Super Bowls have become almost like a mecca, like a Olympics for the business of the Super Bowl and the business of sport. Meaning, you're going down there in large part, I imagine, because it's become a business event.
Without question, without question. I mean, the game itself obviously exciting, but from Friday to Sunday, there's events where networking and brands are taking spaces.
It's like the Davos of...
Yeah, in some ways. I mean, I think all those flagship moments on the calendar, Super Bowl, All-Star, have that type of appeal. F1 has started to have it, but there's nothing like Super Bowl weekend. And I think the fact that so many NFL players also go to the Super Bowl weekend and there's so much business opportunity for them, like you won't see players in the NBA be at the All-Star weekend or be at a championship game if they're not playing for the most part. But for the Super Bowl, it's a great opportunity for NFL players as well. To make connection, to make money, and there's so much opportunity and so much intersection of all those parts of the sports world.
Okay, I want to go NBA because I got to hear you. I just got to hear your take on like 100 different things. Okay, yeah. First of all, Lakers, Mavs, this trade. Everybody wants to understand
the craziest thing
what
ever?
has actually happened here. The Mavs, by the way, are apparently returning. You know, if you bought seats for the season, you
just
can
traded the franchise player.
What do you think has happened here? Can you explain it?
I mean, I was surprised. I think everybody was surprised. And I think part of the surprise was also that nobody knew, right? Like the NBA has taken on this whole world of sources and media and breaking news and allegedly. And a lot of times we all know what's about to happen before it happens. Unfortunately, I've been a victim of that. I've had to live with that for a long time. I think in that case, both teams made a very concerted effort to not allow that to become public. It was surprising clearly because of the age. I think what's being forgotten in all this conversation is just how incredible Anthony Davis is. Like this isn't just a throwaway player. This is one of the best players in the NBA year after year. The age difference and what
is he, 32?
He's
versus
32.
25?
Yeah. I mean, and listen, that's a big age gap in the NBA. But when you look at your roster and, you know, it's an organization. And a lot of times you have no idea what's going on within an organization. There's personalities, there's egos. And decisions are made that sometimes don't make sense to fans, and hopefully for Dallas, they'll be able to see success in the next few years.
But I think that's the question. If it doesn't make sense to fans and if they're that angry, does it make sense to the organization? There's a huge risk factor there.
Yeah, but I think ultimately the people in position are there to win, right? And as long as they have their job, it's their job to give themselves the best chance to win. And I would imagine that the fans ultimately want that. And I get it.
But Luka, what he did last year in the playoffs was unbelievable.
Yeah, unbelievable.
What would you do if you were the Lakers? To LeBron? I don't know. He steps
what
up.
What do you mean you don't know?
He steps up when he needs to, but he's still, what is he, 40? Something like that?
Yeah, he's still elite.
I know, but who would you, just to really make it, you know, showtime again? What do they? Who would they need?
Well, I'm pretty sure that Luka and LeBron are going to be showtime.
Yeah.
Yeah, I mean.
For how long? I don't think LeBron's going to play that much longer.
Well, I don't think that's breaking news. He's 40 years old, but
so a year or two?
I don't know.
So who do you bring?
He's still at an elite level. Still at an elite level. I think that's ultimately why the Lakers, in a lot of people's opinion, won the trade. Even though I think there's an argument on both sides, the shock value around Luka being traded has a lot to do with everyone's uproar. But for the Lakers, they've got somebody to build around, which they've consistently done decade after decade. And I think in that regard, they made a great move for the organization.
Let me ask you a different question. And I got a tweet I want to show you. This is a Chamath Palihapitiya, because it's a bigger question about the NBA writ large. It's actually in the context of this trade, but I think you may have an opinion about this. I think we have it. Do we have this tweet? This is Chamath saying the following. He said, "I sold my ownership in the Warriors last year in part because I was pretty sure a competition for the NBA was coming, a la the Live Golf versus PGA. The speculated antics below," this is about why they made the trade, "only reinforced the likelihood that a group of well-heeled investors with $5 to $10 billion could quickly stand up a competitor to the NBA." Obviously, LeBron's partner, Maverick Carter, is trying to build a 3-on-3 league of some sort.
It's not a 3-on-3 league.
Well, what do you think it's going to turn into?
No, I'm saying it's not 3-on-3. Listen, I think when you've had, let's say, one organization that's existed in a particular field, like the NBA has, and I am as big an NBA fan as there is room for disruption. We've seen that. And I think ultimately the way the NBA has operated historically, and again, I want to preface, Adam, I love the NBA, but there is a 82-game schedule. It's rigorous. As you see, players do not have kind of control over where they're going. If you're playing in a city or get traded to a city that's away from your family, and nobody should ask for sympathy for this matter, but this is what it means to be in the NBA. And if there was an alternative that allowed these players to have a more condensed schedule, to play in different markets that don't normally play in, to be able to live at home with their family, compete on a shorter schedule and time frame. It's all about how you approach it, but I don't think it's so crazy to think that those guys can
Let me ask that direct. So you're correct. You're Kevin Durant's man. Would Kevin go off and play in another league?
Well, I'm his manager.
Right.
And his business partner.
Yes.
I mean, Kevin is, no, I don't know. Yes, potentially, actually. If there was an opportunity for Kevin to extend his NBA career and he wanted to be somewhere, he loves playing basketball. Right. And the economics made sense and the opportunity made sense. And I think the guys that are putting this together obviously are the right people to do this. And I think they have the right vision.
Do you see them putting together a competitor to the NBA, or do you see them putting an extension onto the NBA effectively? Meaning, like, do you think this is actually going to compete directly with it, or
alternative?
Do you think that you'll end up having players play in the NBA and this will end up becoming like a summer league?
No, I don't think I don't think the way this is structured is meant to be but I think that ultimately an option, an alternative for a player, there's 480, 500 players in the NBA, right?
Right.
There's a lot of great NBA players. There's NBA players that are coming from overseas, and I think it's the optionality. And I think that the disruption is probably going to be great for the NBA, and it'll be a great opportunity for the players that choose to go there.
It's not just disruption from that. It's also from the college leagues at this point. NIL has changed that game, not just for basketball, also for football. But that's a weird competitive situation where you have players who might stick around and play college instead of going to the professional leagues, and some players who would have never gotten picked up by the professional leagues staying and making a lot of money.
Yeah, I don't know how many college kids will bypass the professional leagues for NIL.
Robert Kraft was telling me about one that did it in football.
Yes, I mean, I guess if somebody's on the cusp or they're not sure where they'll be drafted and they're getting offered big money. But listen, this is a drastic shift from the way it used to be. And the way it used to be wasn't right at all either. So I think the idea that there's some unregulation or evolving regulation is not so crazy, but the players deserve to get paid. And it's not just NFL, I mean, the college football players and college basketball players. I think what gets lost is all these opportunities that NAL has afforded athletes in other sports.
Why do you think this would benefit the NBA, by the way?
Well, I just think that there's optionality. And I think that
I would think if you're the NBA, you'd say this is terrible.
For sure, but the NBA is not going anywhere. And the storylines and the stakes and the narratives and the fan bases and like Becky was talking about as it related to Luka, that's not going anywhere. And there's an incredible amount of great players. So to think that there's not an opportunity for a different structure or a different league to operate is just not realistic. I mean, if you look at what Unrivaled is doing, the WNBA, it's not the WNBA players playing in this league. It doesn't happen at the same time. But I think it's ultimately just kept the conversation going around the WNBA and how exciting it is. So listen, if players decide to play longer because they don't want to play an 82-game schedule anymore because they're 41 or 42 years old and they can go play a shorter, more condensed schedule, or if there's international players that feel like they want to stay abroad, I just think the optionality of it and the creativity around it is exciting.
I want to talk Fanatics Fest, but just one.
Yeah, that's why I'm here.
I know one Kevin question, though.
Oh, man.
No, any chance that he would go to the Mavs? Because there's been, I don't know if you saw, there's been some gossip about that.
You just asked me if he was going to play in this other league.
I know.
You caught me off guard. You had me stuttering. And I said that potentially, right? I think everything's on the table. I don't know what happens in sports anymore, man. Like, I try to stay close to the vest because, you know, doing this for this long, when you get it out into the public and the public has a point of view, it somehow dictates real life. So I try to keep everything.
Okay. Well, let me ask you this then. So you, Fanatics Fest, you do have a big announcement.
Yes.
So this June, there's going to be another Fanatics Fest.
Yes. So we partner.
But you guys are doing something pretty interesting with them.
Yes. So there will be another Fanatics Fest, and I'm sure consecutive Fanatics Fest. As you know, Michael will continue doing bigger and better. But for us, we partnered with Michael on a program called Chapter Next, which is going to be a 3-day career intensive. It's going to be June 18th to 20th, leading into Fanatics Fest, and it's meant to kind of accelerate athletes and their management teams, business education, business opportunity, understanding of business, creating a network for them. And we'll do another one again in December so we can accommodate the NWSL, the WNBA, and Major League Baseball, the 3 leagues that won't be able to participate during
So basically, it's a training program of sorts.
Yeah.
For the athletes themselves and their
teams. Right. Michael had a version of this in November. You know, I think for Michael, he always looked at Fanatics and knew that some of the fan participation and the athletes giving back to fans and athletes playing such a big part in Fanatics, it was his duty to be able to do more for athletes and continue to offer opportunities. So he did this, and I think it was very successful. He came to us to partner, and I think our element that we bring is brand building and storytelling. We partnered with USC to create the curriculum. It'll be one-on-one mentorship, curated panels, CEO dinners, and it'll all culminate into Fanatics Fest. And then once they finish, they'll get a program membership to the Boardroom Members Club, and we'll have a boardroom meeting house at Fanatics Fest, and we'll continue to do this and give back to these athletes.
Is this a whole new, business extension for you, long term?
Well, it's basically what Boardroom is now. I mean, the whole idea of what we've always done is democratizing this kind of insider information and curating rooms and bringing people together. Michael has the biggest global sports platform in the world, and I think for us, it's just continuing to give these athletes opportunities, creating this community. And for us, that's connectivity, and that's more information sharing and building of our world.
Rich Kleiman, thank you.
Thank you, guys.
We're looking forward to it.
See ya.
You too.
Have fun at the Super Bowl.
Don't go away. I want to talk to you after.
Okay.
In the meantime, we should tell you it is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, sources are telling NBC that more than 40,000 federal workers have accepted buyout offers from the Trump administration that would allow the employees to continue to receive pay and benefits through the end of September. But that is still well short of what the administration has been hoping for. In addition, NBC News is reporting top education officials told staffers yesterday that their buyout plan can be taken away later, even if workers agree to the package now. Today is supposed to be the deadline for government employees to accept the offers. Retailers in China that use the Shein and Temu marketplaces say that they've been asked to start paying a new 30% tax. That's according to a Bloomberg report that says logistics agents told vendors about those charges late last night. This follows the new 10% tariff that President Trump slapped on China over the weekend. And tech firm turned Bitcoin development company MicroStrategy has dropped the micro. The company is just renaming itself Strategy. In its latest earnings report, Strategy says that it has acquired about 219,000 Bitcoins since the end of the third quarter for more than $20 billion. The company now holds about 2% of the total supply of Bitcoin. Wow. Let's take a look at the futures this morning. It is.
Right there, you got 68 points on the Dow, looking up. S&P 500 about up 14 points. The Nasdaq up about 11 points. We're going to get straight over to Dom Chu. He's got a look at this morning's pre-market movers. Dom.
Hey, good morning, Andrew. Good morning, Becky. Good morning, Joe. We're going to kick things off with two pharmaceutical movers on earnings. Eli Lilly right now just up around maybe 1% or so after reporting mixed results for the quarter in the last hour. Earnings did come in above estimates, but sales fell short of expectations. Quarterly revenues, though, still saw a 45% jump over the same time last year. Sales of Eli Lilly's blockbuster weight loss drug Zepbound, also its diabetes drug Mounjaro, soared, but saw lower realized prices. Now, those figures were consistent. Again, consistent with the preliminary results the company issued back in January when Lilly slashed its 2024 revenue guidance, saying that demand for these drugs would not meet some of the loftier expectations that have been out there. So Eli Lilly up 1.5%. Bristol-Myers Squibb is moving the other direction. Shares are down just about 4.5% right now, despite beating earnings and revenue estimates. But the company's full-year guidance fell short of expectations. Bristol-Myers also said it plans to expand its ongoing cost savings efforts by slashing $2 billion in costs by the end of 2027. And we're going to end on a sweeter note. Shares of Hershey up nearly 3% right now after posting quarterly profits and sales that beat expectations. The chocolate maker expects net sales to grow by at least 2% this year due to price increases as cocoa costs remain a pressure point. The company also added that earnings per share for the full year would fall in 2025, citing among other things, commodity costs, tax rates, and whatnot. So ahead of Valentine's Day, Hershey, a sweet move, 3.5%. Becky, I'll send things back over to you.
Oh, that's very sweet. Thank you, Dom.
You got
we
it.
will see you in just a little bit. When we come back, California Congressman Ro Khanna will join us to tell us what he thinks about President Trump's tariff policy and Elon Musk's attempts to slash government spending. Squawk Box will be back in just a moment.
Frank Holland, Worldwide Exchange, CNBC.
I landed where I am today through a long journey that started in investment banking. I put in 7 years in investment banking to really build a foundation, the foundation that has carried me to my role now as a news anchor at CNBC. The best career advice I was ever given was to talk to people. If you want something, if you want to move around the place that you work, move jobs, change careers, talk to people and put your ambition out there. And more often than not, you'll find people who are willing to help.
If you have 1,200 people dancing and you're capturing the heat from those people dancing, you can heat about 70 houses. So it's quite significant.
This venue in Glasgow uses the same techniques as geothermal energy, a low-carbon technology capitalizing on the Earth's energy stored underground.
The body heat system is a heating and cooling system that captures heat from a venue here, SWG3, cools down the space, keeps everyone the right temperature by taking that body heat out through some heat pumps in a plant room and then into an array of boreholes, charging up those boreholes as a big thermal battery in the ground. And then during the week, during the day, when the venue needs heating, we pull the heat back out through the heat pumps and back into the venue.
It's like, come here and dance, do what you do every Friday, Saturday night, and you're playing your part.
Sponsored by
You don't
do what Taylor Swift does without understanding how to build a business. It's not just about these songs that you hear on the radio.
Just the peak of all their powers right now.
That's a Taylor Swift effect.
The Swift Effect, this February on CNBC.
Shares of Roblox, they are tumbling right now after quarterly results. The company just reported a loss of 33 cents a share. It was narrower than the 45-cent loss the street had expected on revenue of $1.36 billion, roughly in line with estimates. But Roblox reported that daily active users were 85.3 million. The estimate had been 88.2 million. And for the full year, Roblox expecting bookings in the range of 5.2 billion to 5.3 billion, mostly below estimates of 5.27 billion. Joe.
Coming up, we're going to speak with Silicon Valley Congressman Ro Khanna on Elon Musk's efforts to cut government funding and spending. And then later, we're going to talk crypto in Washington with Lightspark CEO David Marcus. He previously led payments at Meta. Don't go anywhere. Squawk Box will be right back.
Geopolitical stability, I think, is good for growth. It's good for peace.
Our principles are very clear. No agreement on Ukraine without Ukraine.
It is impossible to keep NATO safe, the whole NATO territory safe. Yes, for now, yes, we can do that, but not in 4 or 5 years.
A risk is to the downside when it comes to growth, and we'll have to be very attentive to the data.
The structural weaknesses of our economy absolutely have to be addressed.
I wouldn't have been as successful as I was without my team. And I take that throughout my whole career, and I take it into my business life as well, and also with my family. It's all about my team for me.
Leong Wei-Ti speaks 14 languages fluently, and he's an AI engineer and linguist involved in developing the Sea Lion model.
We're going to look at an example about informal Indonesian. We're essentially asking the model, our friend is panicking, and he's working very hard every day. How can we help him best manage his work?
Yeah, but in that context, they're using an idiom, right?
Exactly.
And they're saying that his beard is always on fire.
Exactly. For this demo, we have 4 panels. So on the left, we have Sea Lion, our model.
Okay.
And we have 3 other models on the right. We can see that it didn't understand the phrase.
It took it literally,
exactly.
basically.
Like it's thinking about setting someone on fire.
Oh no. It's also in the same tone.
Exactly.
It's casual, informal, it's still colloquial, whereas this one is still sticking to like a more formal kind of response.
Exactly. And that's really what we want to achieve as well.
Scott Wapner from the NYSE. Closing bell, CNBC.
To weigh in on President Trump's tariff moves, Elon Musk's efforts to downsize the government, and more. Let's welcome Congressman Ro Khanna of California, whose district is in the heart of Silicon Valley. And, oh my God, he looks like Donald Trump. The outfit today. Ro, that was nice of you to do that, reaching across the aisle. We are aisle across reachers, the two of us. So we're going to look for some things we can nod to each other on today. But having been home for a couple of weeks and watching the coverage, Ro, it's once again fire hose, trying to get a drink out of a fire hose. And I'm just wondering, we've got the articles of impeachment already introduced, and, Chuck and Maxine chanting, "We shall overcome." And then on the other side, I see that this is the golden age of America, and the greatest days are ahead. It's a little bit hard to sift through all of it. And I'm just wondering, as a business guy in Silicon Valley, you must not hate everything, but I'm sure your eyebrows are raised at a few things.
Well, Joe, look, when the president and Elon Musk said that they wanted to bring transparency to government, expose waste and fraud, I was one of the Democrats who said, okay, well, let's work to see where that can happen. Let's look at the 5 primes in the Defense Department. Let's look at programs to make sure they're effective. The problem I have, and the reason that, Musk actually attacked me yesterday on Twitter, the problem I have is come to Congress, show where the fraud is, show where the wasteful spending is, and force an up or down vote. Don't make that decision unilaterally. That just, in my view, violates the Constitution. So if he wants to show that there's a lot of wasteful spending, come to Congress, force us to vote on it.
Ro, do you think any of opening up the hood, I think this is what you're saying, opening up the hood and looking at where we're spending is something that it'd be hard for anyone to say that that's not a good idea. But how he does it, what's constitutional, what the president can allow him to do, where's the guidebook? Do you think Congress should have the oversight there?
Look, Article 1 of the Constitution says Congress should spend. Now, the president and Musk and others
do you guys ever listen to that?
Well, their view is, we can only set what the maximum is. They don't. If we mandate some spending, they don't have to follow the maximum. Joe, imagine that someone from the left becomes president. Congress says we need $800 billion mandated for the defense budget, and you have someone from the left as president saying, no, we only are going to spend $300 billion. I mean, that's ridiculous. Of course you have to spend what Congress appropriates, and that's the argument. I think they are likely to find awful examples of wasteful spending. I don't contest that. I'm sure they can legitimately offer transparency and sunlight to the American people. Just come to Congress, show us what you're finding, and then force up or down votes. And if Ro Khanna still votes for those wasteful spending, I'll have to answer back home. Instead, the approach they're taking, which is just to stop the payments or make these decisions unilaterally, I don't think it's effective. Actually have a partner with Congress to tell the American people what's wrong. And if you have a good case, the American people will demand those cuts.
Both parties are not monolithic, obviously, at this point, Ro. But what is the role that you see for yourself or Democrats in general? Is it purely the loyal opposition at this point, or do you want to try to, try to jump on board certain things that you think might actually be? I don't even know if it's worth hoping for that anymore, given the last, 10, 12 years. But is that all a Democrat can be with some of the stuff that President Trump is proposing? It gets a lot of hair on fire. I did see that when I was watching at home, Ro. Is it possible to work at all with this administration for someone like you?
Well, like I said, I had said on wasteful spending, particularly on
what about other things?
On defense. Well, on manufacturing, I mean, if we want to look at investing in building the next generation of steel, the next generation of aluminum, President talked about that on the campaign trail, that we've hollowed out manufacturing. If he had ideas saying, look, if American companies invest here, they get some tax incentive, an investment tax incentive, I'd work there. I'd work with Don Bacon on the Armed Services Committee. We have a view that we've got to make certain investments in cybersecurity to make sure that we stay ahead of China. I'd work on shipbuilding. We're way behind China when it comes to building ships. So there are areas that, of course, we can work together. On AI, let's do a Manhattan Project. You could call it the Trump Manhattan Project, but have AI actually used to cure disease or to improve battery storage. But instead, he's chosen, honestly, Joe, he's chosen to govern more, with his base. He won. He's made that choice. He's got to be willing to reach out.
Congressman, I want to go back to Musk and Doge and what they're doing. and in particular go to this idea, which is, look, I think it's hard to argue with the idea of putting transparency on, what government does, how government spends. I think it's broadly helpful for the public to understand all of those things. The question I'd ask you, though, is not just about freezing payments or quote-unquote deleting payments, but how he's going about doing that, getting into some of these systems. I imagine he's going to want to have AI do some assessments of these kind of payments, but to do that, you actually have to take that data and effectively put it into some kind of AI system. He obviously owns XAI and other things. How do you think that broadly, to the extent it's going to be overseen, and I know that's the big concern right now, which is that it's not being overseen, how would you want that to happen practically?
Well, one, it should happen with the protection of privacy. So my understanding is that he's hired certain people who weren't in the government, that they've been now given access over very sensitive information. I rather that there would be people who have been vetted and cleared through the federal government, who've been there for a while, who have access to this information. And there should be clear guidelines, ethical guidelines by the Justice Department, career individuals on protecting privacy. So you don't just have a bunch of folks get the data and run it through AI and come out with models. Here's the thing. Look, some of this works in Silicon Valley. It's move fast, break things. You're going to go build a company. But you're talking now about the greatest institution in human history, 250 years of the American government, and the stake of millions of people. It's just a different way of governing, and they have to protect the basic rules and the Constitution.
So, Ro, you have a unique vantage point with who you represent out in that part of the world, and it's a great business environment, obviously. And I see such angst and worry and concern. I want to just, and I don't know whether this guy's going to be right. He's the CEO of News Corp, but I read this morning, and I thought of you just to read it for you to see if you're feeling this at all out in Silicon Valley. But Robert Thompson, the CEO, says, we're seeing a tangible increase in business confidence here in the U.S. since the election. The temporary turmoil of some of these transactional tariffs aside, there's the confluence of economic optimism and a cultural awakening with the yoke of woke having been lifted. We believe that these trends should lead to, and this would be amazing if it did, less gratuitous regulation, greater capital formation, and increased opportunities for all Americans. That's it in a nutshell. Is it possible? Is it stupid to think of morning in America with Donald Trump as president, or is that anathema to any Democrat?
Joe, let me say this. Look, is there a need for some regulatory reforms, for some permitting reform? Of course there is. But Silicon Valley was doing fine. It was booming, candidly, before Donald Trump. You had NVIDIA, as your show reported, record profits. You had Apple doing really well, Google doing really well, Tesla doing really well. The problem in this country that Trump correctly identified is you had the hollowing out of manufacturing. You had a lot of people in the working and middle class who weren't doing well. You had a lot of factory towns hollowed out. And I guess my question is, what is he doing so far for them? I was in Johnstown, Pennsylvania. A woman said the reason she voted for him is he wasn't going to tax overtime and he wasn't going to tax tips. And so far, at least, we haven't heard that part of his agenda. Is it going to be good for Silicon Valley? Silicon Valley is going to do great in this next 20 years. My concern is about ordinary Americans across the rest of the country.
Real very quickly, I hear your point about thinking it's great that Elon Musk is finding all of this wasteful potentially wasteful spending that's out there. I hear your point about wanting it to come to Congress. I don't know that the Republican Congress is going to go with that. You think this just plays out in the courts and we'll see what happens, this long-term battle that's been taking place between Congress and the executive branch about who really controls the ultimate say in what gets spent?
I do think it goes to the Supreme Court. I think ultimately they find the Impoundment Act constitutional, which says that the Congress can mandate not just a ceiling, but the actual spending amounts. But I also think it's going to happen in the debt ceiling debate. Look, you're going to have members of Congress, at least on my side, say that the president needs to spend what Congress appropriates if he wants Democratic votes on the debt ceiling, and he's going to need Democratic votes on the debt ceiling. So it's a tough time for the country, but I do believe that Congress will assert itself, and this will work out to preserve our democracy. But I just wish they would bring it to Congress. That would avoid a lot of the contention.
You missed your chance, Ro. I'm hearing from people. You should have said it is morning in America. MOURNING, morning in.
That's your role. The Joe Ro ticket's becoming harder, but you can be the sunny, optimistic guy, Joe.
Never been Joe Ro. It's Rojo. I want the cushy VP, go somewhere and pretend I'm doing. I don't want the real job. That's you, baby. And you're dressed for it. And you're dressed for it today. Ro, thanks. Thanks for...
Thank you.
All right. Good to see you. We'll see you again soon. Thanks.
All right, when we come back, Google, the latest company to scrap diversity goals. After a break, we'll talk about what this could mean for U.S. tech dominance and artificial intelligence. Stay tuned. You're watching Squawk Box on CNBC.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC.
Diane von Furstenberg's name is synonymous with the wrap dress. This iconic piece of fashion made its debut in 1974 and was an immediate sensation, with 1 million of them being sold in just 2 years. 50 years later, the wrap dress is still a bestseller and a wardrobe staple seen on everyone from royalty to celebrities.
I created the dress, but truly, the dress created me. So why? Well, first of all, the fabric. The fabric was this jersey that molded the body. Then it was the prints. They always move. It changes your body language. And so the more people notice it, the more happy you are with yourself. Somebody said something very funny once. It's the dress that you get the man in and his mother doesn't mind. So it's both sexy and proper at the same time.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/tech.
Welcome back to Squawk Box. Google becoming the latest company to make major changes to its DEI program. I want to get over to Julia Boorstin. She joins us now with a look at the death of DEI at tech companies and what it could mean for the future. Good morning.
Good morning, Andrew. Well, Google is eliminating its goal of hiring more employees from historically underrepresented groups. This follows similar moves by Amazon and Meta to change up their DEI policies. Google saying, quote, "We're committed to creating a workplace where all our employees can succeed and have equal opportunities. And over the last year, we've been reviewing our programs designed to help us get there." Now, over the past decades, the tech giants repeatedly shared their diversity goals and transparency around the gender and racial breakdown of their employee base. Progress to diversify, though, has stalled. A report issued by the Equal Employment Opportunity Commission last year found that the high-tech workforce was less than 23% female in 2022. That number effectively unchanged over the prior 2 decades, and that the high-tech workforce is far less racially and ethnically diverse than the total U.S. workforce. But a leading expert in this space, Joelle Emerson, who is CEO of Paradigm, a platform which helps companies improve culture and inclusion policies, sees a positive evolution as companies evaluate which initiatives are actually valuable to their employees. This is a shift away from marketing partnerships and high visibility external initiatives and more focus now on fair, data-driven hiring and promotion practices. But with women comprising a reported 18% of AI researchers, if tech companies don't follow through on their new promises, the risks of building AI tools without a diverse workforce are significant and could perpetuate biases, or if tools are designed for just one part of the population, could leave others behind. Already, women are using AI far less frequently than men are. Andrew?
It's a pretty fascinating switch. I'm curious what you're hearing just from people sort of longer term, not just at the top of these institutions, but lower down, whether you think that there's going to be pressure that builds either way on this at this point.
Well, look, I think it was so interesting to talk to Joelle Emerson about this because she's really in the weeds. And she said that for years she's been frustrated to see companies spend millions of dollars on these sort of DEI marketing partnerships that were all about sharing how diverse the company is, but really were disconnected from what companies were actually doing internally. So talking to other employees, not at the top of these companies, but lower level, a lot of them are saying they don't really expect a lot of things to change, that a lot of this is semantics, or they see a reevaluation of some of the policies, but that if we're 10 years into this DEI process, that maybe we need to redefine what does DEI even mean. Maybe that's not a useful term. Maybe we just need to think of effective hiring practices. And Andrew, there's so much data about the fact that diverse workforces, diverse leadership teams are more effective. If we're just focusing on those numbers, then companies are going to be thinking about how do we make sure we have the best team, and likely that means evaluating an incredibly diverse pool of applicants and making sure they're hiring fairly.
Right. Julia Borston, thank you.
All right, we are just a few seconds away from initial jobless claims. We're also getting fourth quarter productivity numbers. The futures ahead of that have turned positive across the board. Dow futures up by about 45. The NASDAQ indicated up by 10. The S&P futures are up by just over 13. Rick Santelli is standing by at the CME in Chicago. And Rick, the numbers.
Yes, let's start out with non-farm productivity. Now, this is our first glimpse at fourth quarter, expecting up 1.2%. And boy, that's exactly where it is. Now, listen, we all know that back in the day, Alan Greenspan said non-farm productivity was the kind of sweet spot, the special sauce of the U.S. economy. Well, we're slipping just a bit. If you look at this number at 1.2, that would be the lightest since the first quarter of 24 when it was 0.7. So we are starting to slip a bit from better levels. Unit labor costs, they're moderating still, even in a less productive environment. We're expecting 3.4, comes in less of 3.0, but that's where the good news ends, because sequentially it zoomed. Our last look was 0.8. So if you look at 3% would be the highest unit labor cost since also the first quarter of 24 when it was 8.5%. Now let's look at initial claims, and in the rearview mirror, there's not much in the way of holidays, so seasonal adjustments probably aren't an issue. 219,000 from a slightly revised 208,000, so we're up 11,000. 219,000, believe it or not. It would be the highest level since the second week of January, so it's remained very, very tame. The last time we were back above 250,000, kind of that psychological area, oh, that was in October of 23. October 23. This has really, really been an unbelievable long run under 250,000. And finally, continuing claims come in at 1,886,000. Basically close, maybe a little high based on expectations. In the rearview mirror, 1,850,000. And what's unique here is that we did have our one number, literally right on 1.9 million. That was the second week in January, not that long ago. And that was the highest read going back to, well, let's see, November of 21. So it's been a long time. We do see some subtle revisions coming in late on productivity and unit labor costs, but they're really kind of inconsequential. The reality is that sequentially non-farm productivity is lower and unit labor costs are higher. We see interest rates, well, they haven't moved a lot, 4.43%, up 1 basis point in the 10-year. Basically, it closed at the lowest yield since basically the second week in December. Same basically true for a 2-year with regard to a comp. Let's just say the lowest yield closes of the year. And currently at 4.20, we're up 1 basis point as well. In the 2-year, maybe what's really notable, if you look at the 2-10 spread, it's hovering in the low 20s. It's basically 20 basis points flatter than it was not that long ago. I think that's significant. If I had to really oversimplify what that's saying, I would say there's some nervousness about the economy in the grand scheme of things, and I think that nervousness isn't founded in a lot of the data points that I bring out every morning. I think it's more grounded in uncertainty in many programs, of course. There's a lot going on with this new administration, and how to interpret it, well, let's just put it this way. CNBC has a disruptor 50. Well, I think we have a 47 administration that's disrupting 50 states. Joe, back to you.
Because, Rick, this is how I was going to phrase it to you before you said any of those things. It's quiet, too quiet in the markets. Nothing is happening. We've got, it's cliched, but a fire hose of stuff coming, trying to get a drink out of Washington, and the way the media is covering it and everything else. Things are either going to hit the fan so badly, and the rug's going to be pulled out from under everything, or things are going to get better with deregulation. Either side has this narrative that's so over the top with hyperbole. I want you to tell me, what is the first data point that we're going to see to figure out whether, winter's coming or whether it's the dawn of a new age? Because it just depends on where you're sitting on what you believe is happening. What data point? Is it
I can make that simple. I can make that simple. I think one of the simple things to watch is the 2-10 spread. I think that you want to see that re-steepen a little bit, and I think that would be a very good sign. I also think that anything that gives us early glimpses of growth will be a big positive, because in the end, we can have everything's grounded in politics, obviously, as you pointed out. One side sees it a certain way, the other side sees it a certain way. You know the way I see it? That the market is always right. It isn't always right in terms of where the future is versus where it is today, but it synthesizes all the relevant data in real time in the present moment. And in my opinion, when I see the Wall Street Journal write, is the market underestimating what's going on with this administration? I say no. I think the market is the only sane entity in the room right now.
Yeah, if the market, if the angst and the panic about the tariffs that we saw a couple of days ago was reflected in the market, we'd be down about 5,000, and the bond, the 10-year would be at 6%. Instead, yields have dropped, and the market's less than a percentage point off a high. So what was that all about?
I completely agree. Now, I would put one asterisk out there. I do think in the future, things are going to get significantly better. Animal spirits are a good thing. In my opinion, we're not going to spend a lot of time under 4.5% in a 10 and not a lot of time under 4 3/4 in a 30. So enjoy it while it lasts if you're liking lower interest rates.
Okay. All right. Thank you, Rick Santelli, and I'm sure we'll be talking to you tomorrow. Is it Jobs Friday?
Yeah.
Steve
Yeah.
Leisman.
Big revisions, maybe. Benchmark annual revisions.
Leisman joins us now. That's kind of the first real data point we're getting it, and that's not really a new data point, is it? It's kind of a rearview mirror, Steve.
Yeah, it is, Joe, but it'll kind of point the way to the issue about immigration. What's going to happen, what Rick was just talking about, is this historic upward revision to population growth and to the labor force, as well as to the jobs in the household survey and some adjustment in the establishment survey. But what's happened is the census has now taken account for the 3 years or 4 years of immigration, undocumented immigration, documented immigration, whatever immigration. They're now putting that into the numbers, Joe. And it's going to be the biggest upward revision. And it's going to point to the issue of, well, what did, how did that undocumented immigration affect the economy now that we seem to be going the other way? I want to answer your question to Rick, though, in a more clinical way, if you don't mind, which is, what would I be looking for? Rick used that term animal spirits. Well, animal spirits can show up in the data. And what happens is, what I'd be looking for is all of this business optimism. You talked about it in the last segment, in the last half hour. It'll show up in capital spending, equipment spending. Those are things where we'll see if the CEOs put their optimism where their mouth is, so to speak, or put their money where their optimism is. And so that's one place I'll be looking. You might want to see over time, Joe, if there are rises in jobless claims in places like Maryland, Virginia, the District of Columbia. What happens to these workers that are laid off? Do they end up on the jobless claims rolls? Do they find new work? One thing we're seeing in the claims numbers, Joe, is not a lot of firing. And we'll see tomorrow how much hiring is going on. That's another sign of business confidence. So business confidence, people can say a lot of things. We'll see it if it shows up in the data.
And I would hope that the market does its job and discounts all this stuff. That's where we always look, and it's not telling us anything, really, at this point.
No.
10-year either. Conflicting. Oh, we live in interesting times. Maybe in the first 100 days, we might not know all this stuff that's happening in 100 days. We may not know whether it's good or bad for the markets.
Joe, I only got 2 words for you. Are you ready? Welcome back.
Off? What? No,
welcome
that's
back.
A letter and a word, actually. No, what are the 2 words?
He said welcome back.
Oh, welcome. Oh, thank you. Yeah. Thank you, Steve. When you said clinical,
2 words for you.
You said clinical. I'm going to be clinical. I cringed for a second.
I'm just surprised we haven't commented on just how stylish Mr. Leisman looks in his new glasses.
Cool. He does look cool. I'm trying to think of who you remind me of there. Someone much smarter than the old Steve, for some reason. That's what glasses do. And that's what's saying a lot.
If you're watching CNBC, it's because you want to get an edge. You want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I've been thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
This is what the house looks like when I bought it.
Next on Unlocked, an abandoned old house gets a total transformation, unlocking life at sea, sun-drenched days, turquoise water, and some really tough challenges.
Way more work than living in a house.
And a bit further north, primary school teacher from Texas found happiness and a home in the world's greenest city.
Hi, welcome to our Copenhagen apartment.
Catch it all on Unlocked. Before they talk to Wall Street, they talk to John Ford and Morgan Brad. Closing bell overtime. Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
White House AI and crypto czar David Sachs saying his first priority is exploring the possibility of a strategic Bitcoin reserve. Joining us right now in an exclusive interview to talk about that and so much more. David Marcus, he previously led crypto and payments at Meta, is the former president of PayPal. He's now CEO of Lightspark, a company he launched in 2022 that's building payment infrastructure on the Bitcoin blockchain. Good morning to you. It's been a while, but it's nice to see you, David.
Good morning.
Let's try to, we're sort of seeing this revolution, at least inside of Washington, it appears, around how Congress and how this administration is going to think about crypto and specifically Bitcoin, and how you think that things might manifest. If you could just sort of walk us through the permutations in your mind from a regulatory perspective, not just on the regulation, but also on the strategic reserve and things like that, how this changes things.
Well, it's a brand new day for crypto in America, frankly. And speaking as someone who tried to launch a project and worked really hard to get it off the ground here at home and having it shut down by the U.S. government, to having conversations about regulatory clarity of Bitcoin strategic reserve, and really doing whatever it takes, frankly, for America to lead in this revolution that will completely rewire our whole financial system, is quite a polarity flip of atmosphere and energy for our entire industry. So, you know, I'm very, very happy and excited for what's coming. I think we're very close to the precipice when it comes to falling behind here, and so it's really amazing to see.
What does the strategic reserve do, in your mind?
Well, look,
besides push up the price of Bitcoin.
Well, you know, I think, first of all, if you look at the strategic reserves that the U.S. government holds in gold, you know, we're the #1 holder of gold in the world. And arguably, if you think of Bitcoin as a better version of gold, digital gold, why not allocate a portion of that reserve or rebalance a portion of that reserve to the better version? And, you know, I think, you know, there's just a lot more opportunity for growth and appreciation of Bitcoin than gold in the next couple of decades. So I think it's a wise decision, potentially.
Taxpayers would pay for this?
Well, I think that, you know, if you reallocate from the existing reserve, it doesn't necessarily have to be, you know, an increase in tax burden for the American taxpayer.
You know, there has been some view that that there's been Bitcoin that's been confiscated that would go into this reserve?
Yes, I think that would be, in my opinion, a first good step. The U.S. government has been selling on the market seized Bitcoin as part of law enforcement activities. And I think that as a first step, like not selling the seized Bitcoin would be a good conservative baby step in the right direction.
You know, we often talk about America first. And there is an argument to be made that if Bitcoin becomes truly, you know, a global currency, if you will, and I don't know how much of a global currency it becomes, or you think it becomes more like gold, but if it were to be a currency, you could argue that it's actually a national security threat, that it's actually against the interests of the U.S. dollar.
Yeah, I hear that argument, but I think, you know, the point is that Bitcoin is not a very good unit of account or currency because it's volatile in nature. You know, our goods and services are denominated in dollars. And so I don't see a Bitcoin threatening the supremacy of the dollar as a unit of account. And so I think that point is not real, frankly.
David, I thought if you succeed, meaning what your company specifically does, which is trying to build these rails that actually let it be a currency to some degree, right? I mean, if you succeed, doesn't that make it more of a currency?
No, actually, because the way that we use Bitcoin at Lightspark to build an open money grid for the world is really to use Bitcoin in the background as small fragments of Bitcoin traveling in real time on the internet as a neutral settlement asset between fiat currencies, and with the support of stablecoin coming up at the end of this month, actually, on top of Bitcoin for the first time. And so, you know, we don't intend to actually enable consumers or businesses to use Bitcoin as the main unit of account for transactions. We just want to interoperate domestic real-time payment systems and ensure that they can actually move value between one another with a better system than SWIFT and correspondent banking that moves $5 trillion a day 50 years plus after it was invented, and, you know, running on archaic rails and T+2 and all of those issues that we know.
David, what do you make of the president's family's role and ownership of various crypto assets? You saw his son recently endorsed Ether. The the family has, projects on ETH. Do you think the public should be concerned about that?
Well, look, I think the president is running the country. I think his family should have the right to pursue their own economic interests and activities. I think David Sachs framed it well that, those types of assets, the meme coins, are more like collectibles. If you have a strong brand and you want to attach it to a collectible, why not do that? But, that's not my area of interest particularly. I'm more interested in leveraging the technology that Bitcoin is to build an open payment system for the world and really build utility with the technology rather than trading assets. Well,
no, the reason I ask, though, is people talk about the conflicts. They want to understand where the president stands, where the administration stands. And historically, we've had lots of different rules that have tried to prevent these type of conflicts that somewhat inexplicably this time we've decided that we're not interested in that this time. Why is that?
I mean, there's so much I could say about this. Like, there's this famous Nancy Pelosi tracker of investments. Right. And so I could go on and on about this. And I think, do you think it would be better to,
do you think for the credibility of all, no, look, by the way, I agree with you. I've been very outspoken about, the fact that Congress should not be trading stocks, the fact that it has always appeared, whether you believe that Nancy Pelosi actually was involved in insider trading from the outside, there was an appearance, right? There was the appearance unto itself is the thing that undermines the credibility of all of this, no question. And so if that is the case, if you can make that argument, it's not, if we can agree that all of this looks bad, shouldn't we be doing something about that?
Well, I think, it cuts both ways, right? And especially with new technologies like crypto assets. Right now, there is actually a rule that if you're a regulator in the United States government, you cannot actually own crypto assets, which is kind of a little bit of a problem somehow, because it's hard for you as a regulator to really understand the technology if you can't actually touch it. And, crypto is a wide array of things. It can be, meme coins, it can be Bitcoin, it can be Ether, it can be DeFi, it can be NFTs. And if you as a regulator can't actually touch the new technology that you're supposed to regulate, it's really hard, in my opinion, for you to understand what you're regulating. So I personally feel that this is slightly different, but we, of course, have to be cautious about conflicts of interests and try to balance
David,
these two.
It's a longer conversation. We got to run, but real quick, what do you think Bitcoin is going to be worth? I mean, I think everybody's trying to figure this out at this point. Do you think it's, people have talked about a floor being 70,000, but there's other people who would say the ceiling could be, if you're in Mr. Saylor's world, many millions of dollars.
Yeah, I mean, look, I think Michael is always very bullish, obviously, clearly, and I tend to think that he's been more right than wrong, clearly, and so I am actually very bullish, and I think that Bitcoin could be in the $1 million plus a Bitcoin over the course of the next decade or so.
Okay, longer time horizon. David, we hope to have you back a lot sooner than a decade from now. Talk to you soon. Thank you.
Thanks for having me.
Coming right back after this.
When I did my master's, I was having a concentration in the area of artificial intelligence.
So you're secretly a tech geek?
I wouldn't call myself a geek, but I certainly am very interested in technology.
On the next Managing Asia, an exclusive interview with Singapore Airlines' Goh Chun Pong.
I think the most stressful time really during the pandemic was the initial period when we're trying to raise funds.
Looking back, would you have done anything differently?
More of my interview on the next Managing Asia.
We speak to the world's most influential people.
I love what I do and it means so much to me.
From celebrities
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC. Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
I started investing a little money for my dad, and I got bitten by the bug. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Live from the New York Stock Exchange, Halftime Report, CNBC.
Amazon set to report fourth quarter results after the bell. Joining us right now is CFRA analyst Arun Sundaram. Arun, I think the big issue here is, not looking at Amazon as a retailer, but looking at them as a cloud services provider. After what we've seen from both Google Cloud and from Azure at Microsoft, both of them kind of missing expectations for the December quarter. What do you think is going to happen with AWS?
Hey, thanks for having me. Yeah, so I think what Amazon needs to hit is 19% AWS growth. If they do, that would represent stable growth from Q2 and Q3 of last year. But yeah, I mean, given what we've seen with Google and Microsoft, they both saw a pretty sizable deceleration in growth compared to the previous quarters. So I think there is some risk that we could see some deceleration at Amazon, potentially 18%, 17% growth. I think if Amazon hits 20% growth, that will get investors really excited because that would be a re-acceleration from the previous quarters, and we might be having questions about whether Amazon's gaining market share at the expense of some of these other cloud providers. But really, yeah, I mean, investors tend to overly focus on AWS, and really the bogey is 19% AWS growth.
The issue we will be watching on the retail side of things is what, if anything, they say about the potential impacts of these tariffs that have come into play this week.
Yeah, I think that's partly why we're expecting potentially a more conservative guidance for Q1 because of potential tariff risks. Also, the stronger U.S. dollar could eat into some profits there. But I think overall, I think tariffs, it's certainly a headwind for all retailers. But it tends to disproportionately impact the smaller retailers. And at the end of the day, even back during the first trade war back in 2018, 2019. Amazon, turned out just okay, and so I think these larger retailers will find a better way to navigate through these tariffs.
Arun, we're out of time, but very quickly, would you buy ahead of the earnings tonight?
Yeah, we would. We have a buy rating, and our price target is 261 right now, and we do see upside. We're pretty excited about the margin free cash flow growth that we're expected to see at Amazon over the next few years. We do think Amazon could even announce a large share buyback at some point in the future, given the inflection in free cash flow.
Arun, thank you. We got to go. I'm sorry we're out of time, but it's great to see you. Thank you. That does it for us today. Right now, it's time for Squawk on the Street.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. S&P's going to flirt once again in the neighborhood of all-time highs as shares of tech and financial giants stay pretty solid. Yields remain subdued. 10-year 442. That jobs number, of course, is on deck tomorrow. Our roadmap begins with the chips. Shares of Qualcomm and ARM under a little pressure despite respective quarterly beats. Do not miss ARM's chief, Renee Haas. He's going to join us in the next hour.
As for autos, Tesla vehicle sales tumble in Europe while Ford issues full-year guidance. That is weighing on its stock as well. Also ahead, Honeywell announces it's going to split into 3 publicly traded companies. We're going to speak with the company's CEO, Vimal Kapur. That'll be later in this hour.
Let's start with the chips. We mentioned ARM and Qualcomm. Skyworks Solutions as well under pressure in the pre-market, Jim, down some 30%.
Yeah, and Liam Griffin did such a great job. It's been there for ages. He will be out. I don't know, you can't necessarily relate it to two, but Skyworks has a huge percentage of Apple's business. Now remember, Apple's like Fight Club. You can't mention Apple in the conference call. You say a large client, but it looks like that Broadcom is going to be splitting, maybe not as much as Skyworks, but that's just devastating to Skyworks. Very, very good for Broadcom, and this is just hawk hand just coming every cylinder. But David, you know, when you have one client, it is just a very rough thing.
Yeah, I mean, you're always at risk. Right. Obviously, we've seen Skyworks shares always move in sympathy with Apple one way or another in terms of demand, haven't we, Jim?
Absolutely.
Have they not been able to diversify their client base significantly over these years? Because it's not as though this is new, that Apple wasn't their largest customer.
Absolutely, and I think that one of the things that the company may regret is, you know, they've got some Samsung business, but they needed to go far afield. When we see these companies like NXP, okay, NXP they say is autos, but it also has near-field communications. Texas Instruments has got a little more. It's got IoT, and it also has auto. You need something else in order to make it so if you do lose the greatest customer in the world, and they didn't lose it, they just lost some of it, then you have what this is. By the way, Liam Griffin's a liked person. I mean, he's out in 2 weeks. He didn't answer the calls on the conference. He didn't answer the questions on the conference call. So it was disconcerting. I found the whole thing disconcerting. I did not find Qualcomm disconcerting because he was interviewed on the 4 o'clock. He was interviewed with Megan Brennan, with John Ford, and he's a bit promotional. But I do think that he's gotten what he needs.
But guidance wasn't bad by any stretch.
No, but we'll have the same problem when we speak to Renee Haas at ARM. I mean, people are asking for too much of these companies. They just are. People seem to think, well, wait a second, you're going to claim that that DeepSeek is good for you? Well, if you're claiming, then shouldn't you be raising in the out years? And no one's doing that because it's not really the way that you should look at things. It's more, they're playing defense, not offense.
I'll tell you what's interesting is the range, the tight range that the SMH has been in since June of last year, let's say.
It's been very, very difficult because, frankly, they're one of the segments you don't want to be in. There seems like there's too much competition. You have Qualcomm going against ARM. You have ARM going against AMD. You have Intel flailing, okay? And then you have NVIDIA, which lately has come under attack. Texas Instruments, way too IoT. And you've got a group, David, that is, frankly, verklempt is the word I was searching for.
Yes, it's a word we've used frequently through the years. You know, I mean, Qualcomm, again, the reactions to the quarter, and you've said this, were very positive. It was a strong quarter for the company, but it does put, at least it sort of does reflect the broader, I think, concerns that investors have right now. And it's not as though many of these companies don't trade at fairly significant multiples.
No, they do.
So it doesn't leave that much room for error or even for concern, which seems to be just building up around, let's call it, a lot of the, I don't know, the Apple ecosystem and in general, or fair to say? Or?
Yes, I think the Apple ecosystem, but I also think that there's this notion of, this came in the wake of Google, of Alphabet saying they're going to spend like mad.
I mean, by the way, Qualcomm had share gains with Samsung. Sorry, I mean, so
no,
it's not as though,
No, Qualcomm did very well. I mean,
Apple, but
I think that the stock ran. It was ridiculous how much it was, and there wasn't anything they could do. ARM, it was ridiculous. I mean, what do you want these companies to do? And when you saw that Google actually went down on the spend, you started to say, well, hold it, Meta was great for the spend, and we were thinking Microsoft maybe okay. That went down on some other things.
Yeah, I mean, Google went down yesterday. Obviously, the CapEx number was a bigger number. And then the cloud number, the deceleration, even though 30% growth is obviously. I mean, and by the way, the multiple on Alphabet is below so many of these other companies.
And it held the 50-day, by the way.
Well, true, but people also said value trap. Now, can I just say that Google Cloud was not that bad.
Right.
But we seized on that as a reason. We see this way too often. We'll see Google Cloud, we'll see a division not be perfect, and we'll say, aha, that's why it's going down. Because the division is, it doesn't come on air and say, hey, listen, you know what, you guys are wrong.
Right.
I think that Google Cloud probably had a lot of good things in it. We just didn't talk about it. It's been a juggernaut.
Meantime, big conversation today about AI. We know that OpenAI is going to advertise during the Super Bowl.
How do you like that?
We have this paper out of Stanford where these researchers claim to have trained a reasoning model for $50 in cloud credits. That's making the rounds.
Well, we can ask Renee Haas that. I think that by the end, these guys are going to make it so that they pay you to take that. I mean, there's a little absurdity going on here. Why is NVIDIA not at 20 or 30? Because it's not true.
Well, I think there's two different things here.
Right.
One is the potential commoditization of the AI providers, the OpenAIs, the Geminis, although it's obviously associated with the Anthropics. You want to go through them, and whether they will be sort of offering all of them a product that is very much similar. And so what is going to end up differentiating them?
Right,
By the way,
has one.
OpenAI trying to raise another, $40 billion at a billion plus dollar valuation.
Well, we have to hear what Amazon says, because Amazon could lay to waste everybody.
And then there's the other side of it, which is, yes, but you're going to need inference. Inferencing is everything, and that's still going to require Blackwell chips from NVIDIA, the only real player, even though others are trying to design some of their chips.
Now, that's what we're going to hear from Renee Haas.
And any efficiencies will just be baked in and ultimately get us to wherever we're going a bit faster.
Well, what's hurt this period, it is the NVIDIA quiet period. And what if Jensen were to come out and say, you know what, I hope this stuff goes to zero, because then you'll be able to use the part of Blackwell that is so great, which I think is true. In other words, there was another recommendation today of NVIDIA. They're obviously trying to get it so that it stabilizes. But I think that NVIDIA, if we hear tonight that Amazon says, you know what, we got to spend and our Trainium isn't going to do it, we remain great partners in NVIDIA. If we hear remain great partners in NVIDIA, David, NVIDIA goes to 245?
Really?
Yeah.
Amazon's going to be an important print. We're looking for their revenue to outpace Walmart's for the first time ever. Deutsche has got a chart out today where they look at all the hyperscaler CapEx and they reference Chuck Prince, calling it an eerie parallel to Chuck Prince, the famous quote, as long as the music is playing, you've got to get up and dance.
We should explain to people who Chuck Prince is, because many people not even remember. He was the manager at Citigroup during the financial crisis or going into it. He'd been the general counsel, by the way, took over for, I think it was for Sandy Weil.
Yeah.
And that was his famous quote. And of course, Citi basically was this close to, insolvency.
Well, that's true.
Yes, it was.
They were the worst, and that's why I think that their book value is still, tangible book value is still
They've never fully recovered from
No, they didn't. Okay, I think that we're going to see, this is what's going to break Amazon out. The word that they have an Alexa who's going to be your personal assistant.
You wrote about this yesterday.
Yes. Now, I mean, this morning I get up. It's like, the usual 4 o'clock. The futures look bad. What, Honeywell up 238. And all I ask was Beethoven's first piano concerto.
Nice.
And I get those Brendel sonatas. Well, I mean, what did I say to her that said sonata to her? Now, when I go to Brian Olsavsky, I go to the CFO, and I have said this. I've said I am dog tired of asking for Stravinsky, and they give you Tchaikovsky. That has to end. And he said, well, not only will it not do that anymore, but it'll say, here what. At 8:20, you have a photo shoot. At 8:45, you'll have to wear a new tie by Ferragamo. At 8:47, it's a Brioni suit. At 8:52, you better look darn good. That is what it's going to do. So, David, if it does that, instead of just, saying, well, the joke of the day, you're going to buy one. And 8 billion black hole, Alexa, no more.
No more.
No more.
That'll be helpful for Amazon.
Will you bring it in?
No.
Why? You don't like the fact that they know everything about you, including what you say to your wife?
Not that it matters. I'm sure somewhere they all know something about me, and I'm sure somewhere there's a Chinese server that has every last bit of information
or an
about
American
me as well.
server.
Well, yeah, that too.
But we want.
By the way, if it's on an American server, it's probably on a Chinese server also.
The Chinese should be working about trying to get stimulus of buying. Not like listening to us.
Not like stealing every single bit of information possible that they can steal?
Yeah, but I come home and the discussion is, would you like spinach? Would you like green beans? They can have all that they want.
I'm a Chinese agent. See you later.
David, we have a commercial break.
All right, all right.
As we go to break, when we come back, a look at where Elon Musk's involvement might be impacting Tesla sales as these sales declines in Europe getting some attention. Jim mentions Honeywell. We'll get his take on that. A lot of movers. Peloton, Under Armour, Hilton, Tapestry, Yum, Lilly, Ford, Hershey. In a minute.
CNBC. Live ambitiously.
Elevate your portfolio with JP Morgan's Equity Premium Income ETFs. Now with more flavors, global equities, US equities, and technology stocks. Discover now. Search JP Morgan Income ETFs.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
NATO is, of course, about security. And for the biggest military superpower in the world to lead the biggest military alliance in the world, I think is in the vested interest of the United States. And on top of that, NATO is cheap for the United States as well.
I think it's more important that Ukraine can be involved in the peace talks from a strength position. So I'm also hoping and expecting that the Americans and the US are still also contributing financially for the military support for Ukraine, because there have to be strength from Ukraine at the front.
Our principles are very clear. No agreement on Ukraine without Ukraine, and no agreement on European security without Europe. And in this line, in this regard, of course, Spain is always committed to provide security for our allies and, of course, for our member states.
that the president is more focused on the 10-year yield than the short end versus calling for the Fed to lower rates, although the president, when he did address Davos, Jim, did say, I will immediately call for interest rates to be lowered.
Yeah, you know, look, is this discord or is it just a recognition that it's just not the way to go? I think the Treasury Secretary has won the president over in terms of the notion of, listen, I've got it under control. Let me handle it. You don't need to yell at the Fed. Dave, yelling at the Fed, yelling at Jerome Powell. Sucker's game. Doesn't get you anywhere. The president doesn't want to get in a sucker's game where he yells at a guy and the guy then says, look, I don't really care what this president says, because he doesn't like that. He likes Fieldy.
He likes what?
Fieldy. Not John Fieldy from Celsius. That stock is from hell.
Fieldy, yes.
Yes,
he prefers that.
Yeah, but what do you think?
I agree with you. Well, thank you, sir. Can I have another? That's kind of what he likes.
Well, anyway, I think that would make a lot of sense. This guy, he's making a lot of sense. I don't know how he's going to get the oil up 3%, but he's a...
No, 3 million barrels.
3 million barrels. But he's a... Can I just
Which
say
is a lot more than 3%.
Yeah, a lot more than 3%.
333.
We're like 13 million to 16 million, basically. Maybe a little.
Maybe
almost a quarter.
We need that. But I would say that he's a supreme intellect, and people who know him or have read about him are kind of saying, wow, you know, this guy is a stand up and take notice theory. He's a great practitioner of the game.
Well, what's interesting
Scott
is that
Bessent you're talking about.
Yeah.
No, I'm just making sure.
What? Yeah.
Yeah.
The Treasury Secretary.
What's interesting is that after criticizing Yellen for relying too much on the short end, it doesn't look like his strategy is going to be much different at the
I wonder if that's fraud, but they kept that guy Frost around. Look, I read that and I said, that caught people by surprise. It's like, wow, we all thought it was going to be lead to 10-year. It didn't happen. Now, David, I'm going to propose something and see what he says. I think we should have a
50-year bond.
But this
what are we? We're back in 2017. We're doing the same shows that we did in 2017.
We are. We're talking Bristol Myers and 50 years.
How are you going to pay for the sovereign wealth fund without that 50-year
How about
bond?
we just don't bother paying for the sovereign wealth fund?
What, you just lend?
We don't need it. Do we really need a sovereign wealth fund?
Well, the president has said he wants a sovereign wealth fund.
I'm aware of that. I'm just asking whether we need one.
He doesn't say these things idly. He's thought them through. Well, there's some aspects in foreign policy that I'm not sure.
Let's get the opening bell on the CNBC Real-Time Exchange with the big board. It's the Association of African American Financial Advisors. It is Black History Month. At the NASDAQ, it's the National Black MBA Association. As we're back to 60-61. Jim, actually, some of the biggest movers, some of the double-digit movers pre-market were Tapestry, Peloton, RL.
Yes. All right, boy, yeah, Ralph Lauren, can I just say that they are timeless value? This Patrice Louvet, oh my God, he's so good. And he often says, he'll say to you, and don't you have something in your closet that you've had for many years? And he makes the point, I just love it, it's not an expense. It creates value. His stuff is, you capitalize the sweater that you get from Ralph Lauren. Look, the numbers are amazing. By the way, what's leading? China. He's doing fantastically in China.
Although the story on this one is North American revenue inflects positive after 6 negative quarters.
Right. Wow, North America's back, and David, you know, they are TikTok, and they are Insta. And by the way, they are using Mark Zuckerberg's kind of look. You tell us what to do, we'll do it. And one of the reasons that Meta is up, I think, is many people are emulating Patrice Louvet at Ralph Lauren.
So that's a very effective advertising channel for them.
Well, they reach the right people.
Marketing channel for them.
Right, they reach the right people, and TikTok reaches the right people. And I think that the business is on fire. But, you know, we have a good day. We have Tapestry, Under Armour. Under Armour is one where you have to admit, the guy...
Kevin Plank. I mean, it's a tiny company. Let's not forget.
No, but
talking about $3.5 billion market value.
But just to, I know, but Kevin made a called shot. He said it was going to get better from here. Peloton's rather amazing. But apparel, Tapestry, that surprised me. That's Coach. So there are some I'm seeing some life in that group, which I hadn't, particularly because they're so often connected with department stores, but Ralph Lauren's really cleaned up where the outlets are.
No, but you're right. Tapestry up 20%. Almost
How do you
20%
like that?
on those numbers as well.
But this is very unusual. We had PVH going down. We had a very weak group. Now suddenly we have a group that's worth looking at, paying attention to.
Want to pay attention to Honeywell. We're going to obviously spend some time with the CEO not too long from now.
Right.
This is fairly historic. I mean, again, not unexpected in any way. The company over a year ago had said that it was evaluating potential for a split. Remember, Elliott then came into the shares with the largest activist position basically of all time. As I recall, $5 billion, enormous. But they're doing it, and I think the market might have been surprised had they not, and therefore it was, you could argue, already kind of baked in. Everybody's been looking at some of the parts on Honeywell for some time. It seems to be the guidance for their actual financials that has pressure on the stock. They came in with a weaker guide than at least many investors had expected. Fiscal year 25 is now seeing earnings between $10.10 and $10.50 a share. That's as much as 60 cents a share below consensus.
But this is the quarter you have to buy because you're finally getting the three pieces. The aerospace business is fantastic. This chemicals business grows a little bit better than the GDP. And you have this automation business, which has been a disappointment.
But you're right, and that's what we're talking. It's going to take quite some time. They're talking the second half of 2026, but as Jim just said, it's automation. And there are some comps out there now. There's Rockwell you can sort of do as a comp.
Doing better
and then obviously we know what they'd love to comp to for aerospace. Well, they'd love to comp to GE, which is trading at, 20 times EV over EBITDA.
They don't want to comp to Boeing.
No.
I
But
think
if you can get anywhere
it.
near a GE aerospace multiple on Honeywell Aerospace, then you're talking a much higher stock price. And they already had the plans to separate advanced materials. It's about a $4 billion revenue business. Put it in some perspective.
But
it's far smaller than the other two.
For aerospace, they have the cockpit. They have a lot of intellectual property in a plane. They have obviously some service, and I think that you do want to emulate. You would like. Now, remember, they're in every plane. They're in Bombardier, they're Airbus, they're in Boeing. So they've got a hammerlock on the group. Dave Cote put that together, and I like that business. And you may have to just say, hold your nose and buy it to get that business.
Yeah, and again, you have to wait and see. I mean, the multiples look strong if and when you do create these standalone separate companies, and conceivably they can trade closer to some of the comps.
That factory automation, David, the warehouse business, that was bad.
That was bad.
That's bad. Yeah. I'm not going to sugarcoat that. That was bad. That's been a loser. But that was not. Remember, that was not Vimmel's. Vimmel inherited a hand that some places
listen, he's been pretty busy for a guy who's been there for 18 months.
He sure has. Elliott's made him busy, too.
Elliott has made him, has also added sort of pressure on them. Again, it felt like they were on a path, Jim, in some ways to get to this, especially given the success that GE, that we've pointed out many times, has had in the creation of those companies, where the Vernova, the
totally with you.
Healthcare, and of course
totally
aerospace.
With you, which is why my trust owns it. We've been selling higher.
Yeah.
Now I want to buy it back or hold on.
Got it.
Yeah, it would mark the end of one of the last industrial conglomerates.
Yeah, it's been behind. GE Aerospace is rather remarkable, and I think you could join them.
Berkshire's going to be the only one left soon.
Speaking of Berkshire, you're willing to call a bottom tick on Hershey and address this argument that somehow Warren would be a reasonable theoretical buyer?
Look, I mean, in the end, See's candies are very good. In the end, you got a problem with this, and the problem is the cocoa. But if cocoa goes down, then you add 35 points. I mean, I think that cocoa is unsustainable at the 10,000 level. It's historically been about the 2,000 level. And I just think it's just a matter of time that it comes down. But when you listen to Mondelez, they've been saying that for a long time, and it's done them absolutely no good. Mondelez being what was a fantastic stock. Now you can't. I beat you on the head with the Toblerone, and you wouldn't even feel it.
Ooh. Yeah, that's not pretty.
No. But
Mondelez is always going to want to own Hershey. They tried again and just went nowhere. I mean, the other problem for Hershey is the Hershey Trust. Are they ready to finally deal? Well, not at the price, apparently, that Mondelez presented to them some time back. That didn't last long in terms of at least the dalliance there.
By the way,
it's interesting that you note Berkshire. I hadn't, that's who knows, right?
Would that change the trustees' mind?
Yeah.
It's hard to know.
Hey, one that is just shocking to me. Salesforce. Okay, so Salesforce gets a new CFO. It's Robin Washington's been there for a while. He's very good. I think she'll do a terrific job. And people are selling it down 17. Like she doesn't know what she's doing. What an opportunity. She's been there for a long time. She's very smart. I know people like the CFO, but you know what? Sometimes you just want to say, all right, I'm going to buy this company because this will not be a disaster to have Robin Washington up there. And so there you got a company that Morgan Stanley put out a terrific note this week, which was absolutely great about how Agentforce is doing. But on the other hand, Amy Weaver, the CFO, is fabulous. So people say, I don't want this. I don't want this.
You guys did Bristol at the Wall, right?
Yes,
yep.
we did.
We've also got Lilly and AZN to look at.
Lily's a buy. Salesforce is a huge buy. Huge. I mean, look, these stocks are going down. People want to sell things. They want to get some negative news, and they'll sell it. I mean, Eli Lilly is in phase 3 for a pill form. They have to take the pill every day. They've got so many different trials going on that they use the font that I couldn't see. I couldn't see it.
I know.
Have you saw the font?
Yeah. Well, there's Lilly, and then there's everybody else. I mean, they've just separated themselves completely from the rest of the...
Including Novo?
Well, no, maybe not. I mean, certainly market cap-wise, that's the only one that's close.
Lilly has the... I'm going down to see the facts.
It's not even GLP-1s. It's Alzheimer's. It's...
Right. Yeah, but you know what they're doing? They're putting up factories for things that have not been approved because they're so confident they will be. I like that. I think David Ricks is terrific. Absolutely terrific. I know he's a good golfer. That's Joe. That's a different show.
Are we going to be looking at them from a case study perspective, saying that they did something differently than some of their competitors in terms of the way they approach drug development, or what?
Well, they were thematically disciplined for 30 years. Right. And they didn't start bolting on, over decades, a pastiche of pipelines.
Right.
Yeah.
And I like the fact that David Ricks has said, I want a moat. And the moat is going to be that these are really hard factories. It's going to be like foundries. We haven't talked about Intel in a long time. But, they used to have this moat of foundries. And you say, okay, well, they're going to win against AMD. Well, now everything's in flux. They don't have that. Lilly does. And look, they've got trials going on. It just seems like you'd be nuts not to take the drug if you have a comorbidity. And they need to get approval for a lot of health insurers, but it's an excellent situation. Ricks is good. He kind of screwed up when he was on my show. Remember our show?
That last quarter.
Yeah, it was like
last quarter
at the end of it, it's like, hey David, what was that? David, do-over? No, there's no do-overs. It was not. It was live TV.
Yeah, no do-overs.
No do-overs live TV.
No.
What do you think of that?
We know that. I like that. Yeah.
Speaking of do-overs, Jim, one famous do-over that I know they wish they could have is Starbucks. We've talked about this before. This is now the highest price for Starbucks since May of 23, and that's with coffee Arabica at all-time high, the futures on coffee.
I like Brian Nichol very much, but I turned to Jeff Marks, my colleague, portfolio manager, and said, you know what, I've loved this for so long, but can't we trim it a little? I mean, come on. Brian's great. There's no doubt about it. But it's still coffee.
Do you believe that Starbucks' gain is Chipotle's loss?
No, I thought Scott Boatwright did a good job, and I think that January's not that good, February's not that good. Some of that's weather, but when you get that honey chicken, I think you're going to discover that limited time offer, people are going to come right back. Now, that sounds a little facetious, but that was a major part of the conference call, which is that don't give up on the stock with that chicken coming.
We got good comps out of Yum. KFC up 5. Pizza up. Actually, pizza was down 2, but taco up 5.
David Gibbs, he's got some hero brands. I thought it's just an excellent quarter. Excellent. And he's, look, that stock is another stock that's kind of done nothing, but the multiple's high. And today we got really, really good numbers. I was very impressed, and I want him to win too. That's a very cheap stock because it's franchise stock. Chipotle doesn't do any franchise.
I note Uber shares are up almost 4%.
Well, that's because that was wrong.
I knew, that's why I mentioned it. Yesterday it was down. Rather.
You watch my show? Last night?
No, I actually participate in my show, our show, and we were talking about it here. Because really, what we talk about here is just,
all right, because I thought
then you take it and run with it later.
My wife, I don't even want to talk about it.
No, you shouldn't. You should.
20 years now, Mad Money, that she doesn't.
Yes, the anniversary's coming up.
She thought the show's on at 7.
Mad Money.
She missed the show.
6 o'clock Eastern.
She said, but then she said,
20 years.
I'll catch it at 7.
So yeah, you talked about Uber last night, and now it's up today, in part because it was many would think, a pretty strong quarter.
I thought so.
But not in that response initially to those numbers.
But that's this thing that goes on where the first day it looks like it's not so good and people sell it.
Yeah.
Then the second day they say, what was I thinking? Unless it's Estee Lauder. Then you just sell it.
Talk about names that aren't getting well received, though, on earnings. Roblox, guys, which was a high flyer for quite some time, down
I
14,
think we should
15%.
I want to have them on and figure out what's going on.
Yeah, these DAUs missed. That was the big metric people watch. And you were paying attention to that number
Yes,
for a
it
long
was, and
time.
that's why I'm coming. I'll have them on tonight because I've been